Good morning, everyone. Welcome to day 3 of the Traders Conference. Hopefully you have been here for the last 2 days, have been able to take advantage of listening to our amazing and awesome presenters the last few days, sharing their wealth of knowledge and helping us all become better traders. So that's it's been a great 2 days to start. We're in for another great day today. We'll get started here in about 8 minutes. My name is Clement. I am your YouTube host today, one of your presenters a little bit later on. So I'll be back here making sure all the magic is working. Jeff Gibby is our host for the conference, and he'll be bringing in our first presenter here in about 8 minutes. We are MetaStock. We are purveyors of technical analysis and charting software. We are the overall hosts of the conference for the next few days. If you're unfamiliar with MetaStock, well, I'm just going to show you a quick video, introduce you to MetaStock, and I'll be right back with you.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, well, thank you, Greg Lewis, for that great introduction to MetaStock, who we are and what we do. Again, my name is Clement. I am your YouTube host today. I'll be back here answering questions and helping out. we're here in beautiful Salt Lake City. Tell us where you are, where you're coming in from. Feel free to say hello in chat. We'd love to hear from you, where you're coming in from. So make sure to do that. Let me just show you how you can actually see today's schedule and where to actually take advantage of that. So if you go to MetaStock.com, it'll take you to this home page right here. So go to MetaStock.com, or you can go to MetaStock.com/traders-conference. Just click on that homepage banner right there where it says Day 3 is live now. Register here to attend right away. And if you click on that, it will actually take you right to today, so you can see the schedule of today's events. So we have John Osborn kicking us off from Basecamp Trading. So we're excited to have him here. Then we'll have Silas Peters talking to us about price action is king. You'll have this handsome fellow right here, Mr. Clement, talking about finding your best strategy in 2023. I'm excited to talk to you a little bit about that today. Then we'll have Ed Downs talking to us about AI and how AI can help you in trading and how you can use the AI as an edge. We'll have Rick Sadler come in and talking to us about some pro tips to make swing trading simple. We'll then continue on with AJ Brown, Toni Hansen, Oscar Carboni, and then finally Anne Marie. So we have a great day of education all set to go. Now, if you come to this page, well, if you go to that page and then you scroll down all the way to the bottom, you can actually register for the event. Hey, Mr. Gibby, how are you doing? He's all set to go. You can register for the event to be eligible to win some of the prizes. So we'll be giving away prizes throughout the rest of the week. So make sure you register there so you can actually be eligible to win the prizes. Anyway, we're going to get started in about 2 minutes here. Let me just go do my final checks, and I'll be right back to kick us off. Okay, we're looking good. I love that jazz music, that intro music. It always gets me going in the morning right before a great conference. Again, we are excited for another great day of learning. Just checked in with Jeff and John again. Everything is all set over there. So we've got about 58 seconds here before we kick it off. As you can see right there. So we're going to go ahead and get us kicked off here in just about 45 seconds. But again, make sure to go to metastock.com/traders-conference so you can actually register for the prizes and be eligible for that. It also is a great page just to see the schedule, to see who's coming up next and see what subjects you may be interested in, and you can see what's coming the next 3 days after today. So lots of good stuff. Again, say hello, tell us where you're coming in from in chat. We'd love to hear from you. Let me go ahead and get everything ready and we'll get this rolling. Have a great day of learning, everyone.
All right. Let's try that again with the mic on. Well, it helps if you turn on the mic. So, you know.
Good morning, everybody. I hope you're well. It's good to see you. We're going to go ahead and kick things off today. So my name is Jeff Gibby. I'm going to be running everything today. If you have questions, we're going to answer them for you. It's good to see you. Make sure you say hi as you're on your way in. If you're watching on YouTube right now, what I would like you to do is hit like and subscribe. Say hello. Those things all help us get more people in here, and it's hugely appreciated. And we like audience interaction, so do those. So in any case, I'm going to start off with a legal disclaimer. So let's do that. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. I do want to kind of just reiterate, we are not, what we want to do, like a big goal for us is to kind of bring in some really good experts and have them talk to you and have you learn how to look at stocks. What we don't want you to do is think that we're telling you at any point today that you should buy stock XYZ at a specific price. That's really kind of not the goal of what we want to do. We're more trying to teach you how to fish than give you a fish. So with that being said, just before we get started, I want to say thank you to Stocks and Commodities Magazine for sponsoring this event. Stocks and Commodities Magazine has been making magazines since 1982. They do a great job. We absolutely love Stocks and Commodities. Great group of guys. Really, really good to work with. And we really appreciate all of the support they've done for our events and for MetaStock over the years. We appreciate them. So the next one, we have a total of 3 sponsors. The next one we're going to talk about is the CMT Association. CMT Association is another sponsor of MetaStock. They're a bit of a newer sponsor, only a couple of years, not decades, but we love CMT. One of the things that I would say, and one of the things that I find interesting, we have Tyler Wood coming in, and he's going to talk about like how having a CMT designation can help you with what you're doing and with the trading that you're doing, or it can help you, particularly if you're in the situation where maybe you want to get a job with a bank or a hedge fund, or maybe if you are already working as in a bank or a hedge fund, and if you want to get more assets under management or more responsibilities. It was really eye-opening when he'll go through the statistics about how that can be helpful. And he'll talk about it on Friday, but if you're interested, if that sounds like you, cmtassociation.org, 646-652-3300. Great organization. We really appreciate the support. And last but not least, a brand new sponsor that we brought on, AAII. So AAII has been basically a nonprofit since 1978-ish. I believe that's the right number. 1970s, let's say it that way. According to the information on their website, they've helped over 4 million traders. If you're interested, they do a few things. They do courses, they do newsletters. It's a really really professional group, very well respected. You can find out about them at AAII.com. So there we go. Let's go ahead and kick off. Oh, and of course, I almost forgot us. We're MetaStock. We're going to talk about MetaStock a lot today. Almost all the charts will be in MetaStock. What I will say about us is we've been rated for #1 in our price category for 30 years in a row. We have pricing that starts at about $69 a month for our award-winning software package. It does scanning, which if you've come for more than just today, you know I love the scanning. It does testing. It does forecasting, real-time alert commentary signals. We're offering a special. If you want to get MetaStock, you can pay for a month. We'll give you the 2nd and 3rd month for free. It's a good way to try it. So if you have any questions for us today as we're going, if you have questions about MetaStock, anything like that, come talk to us. You can talk to us by calling us at 800-882-3040. You can visit us online at metastock.com/sales and metastock.com/conf promo. So our first presenter today is John Osborn. John let's just talk about John for a minute. John has done a number of events with us, and he does a really good job. He's also a very, very good programmer. Today is going to talk about the value charts methodology, and it's a methodology that they use to turn around the performance of a hedge fund. It's patented. It's been well, anyway, let's just get him in here. He'll do a great job. And John, how are you doing?
I'm doing great.
All right, let's go ahead and make you the presenter here. Welcome to the MetaStock room.
All right, well, thank you very much. And let me make sure I choose the right screen here. No, there, I think that's the right one.
I'll let you know.
So
yeah,
it should say
that's
my title
incorrect.
page. Looks
Yeah,
good?
yeah. Yep, it is not your email. It says unlocking.
Good.
All
right, well,
you.
good morning.
Good morning.
Yep. So good morning, everybody. This is John Osborn, and thank you for that introduction there and all those great sponsors. And I like that, the deal you get, buy 1 month, get 2 months free, and MetaStock. That's a great way to get started. So let me give you another reason today to get started here, because today we're going to talk about an exciting patented technique that was created to turn a hedge fund around, as Jeff was saying. And it saved that hedge fund from failing and turned it around and made it profitable. Now, if you've been struggling with your trading, and you're going to have an opportunity to turn around your trading today, and if you're doing well with your trading, well, this is something that could improve your success even further. So let's go through our disclaimers and get started here. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. Remember, trading is risky. Don't trade with money you can't afford to lose. Now, we've done our best to ensure the accuracy of the information I'm going to share with you. This webinar is to provide you with information you can use to help you make your own independent trading decisions. And CFTC Rule 4.41 basically is the past performance is not indicative of future results. Markets are unpredictable. Be prepared. The government wants to make sure you know that trading has both rewards and risks. And again, don't trade with food or rent money or the college fund. You're going to perform better if you're using money set aside as risk capital. And remember, I'm not soliciting you to buy any stocks, options, futures, cryptos, or any other securities. So let's get started. Today, I'm going to tell you, and we're going to talk about how to completely transform the way you're trading so you can start to seriously grow your account by using a very powerful and patented hedge fund technique. And I want you to imagine for a moment being able to approach the markets every single day. And I know some of you get frustrated with the markets and you feel like the markets are against you. But I want you to think about when you approach the market in the day, I want you to think about it, what it would be like if you were armed with the sophisticated and patented software that a hedge fund developed to reverse their losses into spectacular gains. Now, do you think you'd possibly improve your trading? And I'm watching the questions here, so I can see your comments. I welcome you to type in some things and participate with me here. Now, just imagine being able to identify trades with pinpoint accuracy, just like a hedge fund does. That means getting in and out at the right time. Let me ask you this. If you had the information that a hedge fund has access to, do you think it would help you drastically grow your trading account? And you can go ahead and type in yes or no if you'd like. Now, if your answer is yes, then I totally agree with you. And if you've never thought it was possible to get hedge fund decision tools like this, I got great news. It's totally possible for you to get this tool and use it in your own trading. Now, maybe you're thinking to yourself, oh, John, that'd be great, be able to trade like a hedge fund. But those hedge funds, they're so sophisticated. They have the smartest people working for them, the best software, the coolest tools. How could I possibly have the ability or resources to use stuff like that? Well, the good news is what I'm going to show you is how to see exactly what the hedge funds see in real time, in real world markets, so you can stay ahead of the masses. And you'll have the opportunity to add the tools to your own trading toolkit today, if you'd like. Now, I'm going to share that tool that's essential to my trading. And after you see it, you're going to want to start using it in your own trading immediately. Because once you see it, you'll realize it's an essential part of trading that you are more than likely missing. Most people don't use the information that this tool provides because there's not another place where you can get it. And you're going to see how powerful it is and how it can elevate your trading results. The tool is called Value Charts, and I'm going to explain how this powerful tool can make a huge difference in your trading. Like this gain in Microsoft in just a month, or this Apple trades, which gave us a buy entry making more than 8% in just a couple of days. Or this trade in Solo where it signaled a buy entry on the 30-minute chart and made 7%, more than 7% in less than 3 days. Now, I know some of you don't know me, and I do run a trading room occasionally, so some of you may have heard me speak or spend 4 hours with me during a day, where a couple times a week. But let me tell you a little bit more about myself. I spent most of my professional career as a software engineer, but I've always been investing in trading from the beginning. And sometimes I get asked why I teach others how to trade in the markets. If you're doing so well, why do you have to teach other people how to trade? And the reason is my dad, because he was the one who got me interested in stocks many years ago. And he explained to me that the only way to stay ahead financially, even for an engineer, because he was an engineer as well as I am, he said the stock market is the way you can get ahead. So he convinced me to learn about the stock market. And he struggled to make money in the market and always thought he could do better. He did okay. I wanted to do better too. And I wanted to figure out how to trade so then I could go back and teach my dad. And that would pay him back for all the many wonderful things he did for me. So I was motivated to do that for myself and for my dad. So I spent lots of money, like many of you had, and all kinds of time learning how the markets worked. But I struggled with myself learning this stuff for years until I started to follow the teachings of the group that I'm with now, Basecamp Trading. That's when I finally learned how to understand how markets work and how to trade. And Basecamp Trading is the only place to get this tool that we're talking about today. Now, unfortunately, by the time I learned how to trade correctly, it was too late to teach my dad. So instead of teaching my dad, I teach others who are interested in learning how to trade, and they can then teach others, and so on and so on. So I hope you'll learn how to make money in the markets so you can teach your own dad or your son or your daughter, your husband, your wife, or your best friend. And it's important to have a best friend that you teach how to trade, because once you make enough money where you can quit your job, you need to have other people around you who have enough money to quit their job too, to go do things like fishing or traveling or whatever. So when we succeed in trading, we can give back by helping others learn to trade so they can reach their own financial goals and then share what they learned with others, and so on and so on. And I know that helping so many people like that would have made my dad proud. So I want you to learn how to make more money in the markets, and let's see how to do that today. Now, I would like to see each of you achieve your goals, and then I want you to make even bigger and better goals to achieve. What you're going to learn about today is something that has the capacity to get you back on track toward achieving those goals. Goals that you might have even given up on. I mean, did you have goals when you first started trading and you kind of, didn't get there as fast as you thought you would, and you given up on them? So I'm hoping that what I can provide for you with the software that we have and the system that we have, that you'll start dreaming again, start getting those goals in mind so you can start to focus and picture where you're going. I want you to rekindle those dreams again, because some of you today will have the opportunity to transform your trading. So let's get started. Let me introduce you to that essential tool that I've been talking about that gives you a hedge fund trader's edge in your trading. In fact, I refer to this tool as the hedge fund fixer, and you're going to learn why. And again, it's called Value Charts, or MQ Value Charts. Now, let me start out by showing you what value is and why it's important. And you might think you already know, but it's not what most traders think it is. So let's talk about the three components of trading. So in order to trade, we need three things, and we need to understand each of these components to be able to trade. The first thing is price, and that's something that's provided to us as traders with our charts. It's the current and historic price of the stock or commodity, whatever you're trading. Price shows you the movement in the markets. Momentum shows us the power and potential follow-through of a market. Momentum can be identified through a number of different indicators. Some of you might use MACD. We prefer to use our own MQ momentum. And then the other part that most people don't really consider in their trading is value. Value lets us know whether something is overvalued, undervalued, or fairly valued. Now remember, we're not talking about price. Value separate from price. It's a separate component from this model. And a lot of people have trouble understanding that difference. Now, there are times when something is cheap, but it's still not a good value. And there are times when something is priced high, yet it's an incredible value. For example, an education is priced high, but over your life, it'll pay back a lot. Hopefully. Now, I know my engineering degree, I was able to pay off my student loans fairly quickly. They seemed like a lot, but looking back, it was a great investment. Now, regardless of price, we need to understand the current value to anticipate whether value is or price is likely to rise or fall. Now, once you understand this concept, you can't even imagine trading in a market without having knowledge of what the current value is. And most non-hedge fund traders never consider value separate from price. They don't know they're missing it. They think they are the same. Now, knowing value is critical because it can indicate the potential of price movement. And sadly, value is something that most traders don't have access to. Now, I hope you'll recognize that it's important once we're finished with my presentation today. Most traders, like I said, don't use it because they don't have a good way of identifying it, because value is not as readily available as price or momentum. Price is just the chart. Momentum is MACD or our MQ momentum or other momentum indicators, but value is a little bit more elusive. There are a few indicators other than value charts that maybe come close, but there's only one place you can get this patented hedge fund tool that's proven to show how value impacts things. And I'm getting ahead of myself here, but let me explain a little bit more about why value is critical to your trading and why you're at a disadvantage if you're not using it in your trading. So I struggled with trying to figure out a way to understand value, maybe talking about blue books of cars and things like that. But one of the best things I came up with was understanding the concept of value in a different way here. Even Oscar Wilde has a quote that says, "Nowadays, people know the price of everything and the value of nothing." So at least he understood that value was separate from price. One way of thinking about value is to think of it when you're shopping for something like a diamond or anything that's expensive. But you may have a budget in mind if you're buying a diamond, and you might even have a price in mind which you're willing to pay. But should you just go out and buy the cheapest diamond that you can find without researching it? Now, if you do that, then you're buying based on price without consideration of the value. If your intent is to have the price of the diamond rise over time, then just getting the lowest priced diamond isn't going to assure its price is going to rise, right? You could buy you could pay less, but it's not a good quality diamond and it won't go anywhere in price. But you could pay more and a really good quality diamond, that diamond's probably going to appreciate in value. If you buy the diamond without an understanding of its value, even at a low price, you might be paying too much and you might never get the value or the dollars out of that diamond. So if we're trying to invest in a diamond, there'll be a much better chance of its price rising if we buy a diamond that's a good value, which is probably not the lowest priced diamond available. There's a process used by gemologists to grade a diamond based on criteria, including identifying impurities in the diamond that can change. Some of you know this as all the C's, right? Cut, color, clarity. So the impurities can change the color of the diamond, how clear it is, how the diamond gets cut plays a role in how sparkly the diamond is, and then of course how valuable it is. Also, the size of the diamond is important, number of carats it is, or its weight. And even the source of the diamond, where it's from, can affect its value. So it's quite a complex process that takes a lot of knowledge and training and experience to accurately grade a diamond to determine its value. And if we were looking for the price to rise after our purchase, it's really important to make sure that we're getting a good value at the time that we buy it. That way, its price is expected to increase after we buy it. Now, ideally, we can have the diamond independently certified, which lets us know the value of the diamond. We can get a document like this one here that certifies its value. And once we understand its value, we can then determine if the asking price is too high or too low. If we can buy the diamond knowing it's undervalued at the asking price, in other words, high value but low price, it's likely a better purchase than just buying a cheaper diamond without knowing its value. Because when we don't know the value at all, then who knows if the price we're paying is too high or too low? The seller's asking price is all we have to go by. That's not a great position to be in if you're trying to get good value. As you can see, price alone does not determine value, even though most traders incorrectly believe that value is determined just by price. So trading without understanding value is letting the seller tell you what it's worth. And they have control. Wouldn't you rather be in control when it's time to buy a diamond or a stock? Now, do you think that hedge funds trade without understanding the value of what they're buying and selling? A wise hedge fund manager would never get into something where they didn't clearly understand its value and the potential of benefiting from buying it at the current price. They understand that you need to know the value to be a wise buyer. And now, hopefully, if I've explained this well, so do you. Now, we know value is critical. So how can we determine what the value is when we're trading? Well, it's not easy, but it took a hedge fund to figure it out. And the solution was granted a US patent. Okay. Now, for diamonds, we do have the ability to identify value, which lets us know if we're paying a fair price or not. Then we can determine if the price we're paying is undervalued. If it's overvalued, we know to stay away. That's great for diamonds, but what about the stock market? If we can buy when the markets are undervalued and sell when they're overvalued, then we can trade like the hedge funds do. Unlike diamonds, there isn't a certification for stocks that we can look up and find out what the fair value is, like for example, for what Apple's value is right now. And if there was a book or a certification, since stocks can change so quickly, it would be outdated as soon as the next day. So what can we do? As you can imagine, we do have a solution. The hedge fund came up with their own solution to identify value in the stock market, and that's called value charts. Value charts is the indicator we can use to identify the current value of any market on any time frame. It works on stocks, on options, futures, forex, cryptos, any symbol, and across just about any time frame. And we use it across multiple time frames in different ways. And since this is patented by our company, Basecamp Trading, you can only get it from Basecamp Trading. And not only is it patented, but value charts was analyzed by doctors of leading schools. It was Dr. Abraham Weiner of Wharton, Dr. Eric Laber of the University of Michigan, and Dr. Sheila Nair of UCLA. And they agreed that the value charts algorithm was effective and useful. So it was vetted by leading experts, and that had to be done as part of the patent application. Okay, so now it's also been, as we mentioned before, hedge fund proven, because incorporating value charts approach into a hedge fund saved it. Because what happened, it was losing, and it was losing a certain amount every month. And by applying the value charts approach to the algorithm, they went from losing to a positive increase of $90,000 more profits each month at that time. And this was years ago when value charts was created. And they did this just by adding value charts as a filter to its trading. Now, if it can turn around a hedge fund in such a dramatic way, it can improve anyone's trading. This is why I call value charts the hedge fund fixer. So you're in the right spot. Be glad you're here today, because no one else can offer this tool but Basecamp Trading. And we have it available for MetaStock. So let me tell you more about this unique and valuable hedge fund fixing tool. Now, value charts does a lot of calculations to determine the value, and it makes the complexity of that value almost intuitive, so you can pretty much use it with little to no training. I think by the time you see my presentation here, you're going to understand how to use it. Now, there's more fancy ways to use it, but you'll get a good basic understanding here. Now, the concept is simplified down to just 3 colors on our charts: red, yellow, and green. This is the color mapping. Now, look how the colors on value charts on the left align with the color bands on the right. You can see you got red tops here, then we got a yellow section, and a green section, a yellow section, and a red section. That maps to these scoring values. Okay, and in the middle we have green bars, and green band means that a market's price is fairly valued. Okay, so in here you're paying a fair price, that the value you're getting is as expected. It's matched with price. Okay, above that we get into the yellow, meaning that a market is moderately overvalued. And if we get into the red with these red hats or tips up here, that's going to be a market that is significantly overvalued. Okay, similarly, we have an undervalued yellow on the downside here. That's moderately undervalued. And then down below here, it's significantly undervalued. So let's see if this is simple enough to follow. If I were looking to buy a diamond, if you're going to type something in here, if I were looking to buy a diamond, where would I want to buy it? If you had to choose from these zones, where would you think you would have the best opportunity for price to rise? Where would you buy it? Is it better than VWAP? You bet. It's not really the same thing as VWAP. VWAP doesn't tell you value. It tells you where most of the activity has been centered for the day. Well, I hope you'll say that significantly undervalued is the place you'd want to buy it. Okay, because when the price we're getting when it's at significantly undervalued is going to be, it means that the price we're getting is lower than it should be valued. A fair price would be here when it's green. But if we can get it when it's yellow or red down below, then we're getting a better buy. Okay, this is how we want to buy our stocks, so they have the greatest chance to rise in price. And if you're following what I'm saying, you're beginning to see how value is actually more important than price. In fact, we can determine whether or not we should be buying something without even knowing the price, because if we're using value, that'll tell us it's really not dependent on price. I just want to get in when it's basically on sale. Okay, so let's explain this a little bit more. Now, these colors, why did we choose these colors? Because we want the tool to be easy to use on day one. These colors are already familiar to you as a traffic light, right? Green means move along, yellow or amber means caution, and red means stop. And like a stoplight, we can drive right through the green light and watch out for when they turn yellow or even red. And those mean caution or stop. And for trading, stop might even mean stop and go the other way. The value chart signals help us know when it's time to move ahead and when it's time to be cautious and when it's time to stop and perhaps even reverse. Now, most traders don't have these signals. They don't know when it's okay to proceed or when it's time to stop. And you can imagine, just like in driving, it's dangerous to trade without heeding these signals. So how do we use it? Well, really simply, and in its most simplified form, we want to buy when the markets are undervalued and sell when markets are overvalued. That is, we buy them when they're on sale and we sell them when they're overpriced. And just like when we're shopping, we don't want to buy something when it's overvalued. So we wouldn't want to, if we have red tips up here or even yellow, that's not the time to get into the trade. Okay? Nor do we want to go short or sell something that's already at a low value, because it's not likely to keep going lower. We use value to help us determine if the market has more room to run in that direction. Now, if we're in a long position and we start to see red bars at the top, then we're likely to see it stop rising. Similarly, if we're in a short, and in a market we see that the red bars are appearing below, now we're likely to see it stop falling. We can expect it to possibly rise. Okay. Now, so what does value charts look like on our charts? Well, this is Tesla on the daily chart, and we only have price available in our charts. Well, when that happens, how do we know what the value is? And this is what most traders are working with. They can't determine what the value is. It's difficult to tell. Is the current price here in this chart, is that too high or too low? And you might use previous pivots, you might look at the angle that it's on, but it's not really telling you value. Okay, it's really difficult to tell value without the indicator. Now, it appears that price is starting to trend lower, and price action is telling us that the market's likely to continue falling from here, right? In fact, I would be looking for an entry on a break below this low right here if I was using price action alone. Okay, so I might even jump in early and to take advantage of that if my momentum was strong. But we're not trading with value. We're trading just with price. So let's turn on value charts. So this is the corresponding value charts that go with price here. And we can see the whole new dimension of value. Now, look at the high and low peaks on the price chart and what the corresponding value levels are. Notice how value isn't necessarily aligned with the high or low price pivot. See up here, we got significantly overvalued right here. We came up even more and we only got moderately overvalued. There's a little tip of red right there, which does matter. But you can see how value is telling us a reversal point here and another reversal here, and down it went. Okay, this is why value must be considered separately from price. And most retail traders aren't trading with this knowledge of value. It's unknown to them. They aren't even considering it in their trading decision. They're using just price. But hedge fund traders have access to this type of information, and they use it in their decision making to make a much more informed value-based decision on when to get in or out of trades. Now, some people ask, what do the hedge fund traders know that I don't know? And this is a clear example of one of them. If you had the info that they have, you could make the informed decisions that they make. That is, with value charts, you can begin to trade your own account like a hedge fund would trade it. Now, let's look at this last bar again here. But at this time, we have the added knowledge of value. Remember, price was telling us that it was heading lower here, right? And what is value charts telling us? Well, value charts, if you look at this, it's yellow beneath, which is moderately undervalued. So value charts is indicating moderately undervalued. That means that this market is less likely to keep moving lower. So if we didn't have value charts, we might have gotten into a trade expecting it to move lower. But with value charts, now we can see that the market's already undervalued at this point. And taking a trade to the downside is probably not a good idea. In fact, value is telling us that it's likely a good time to buy Tesla. How could it be that we're dropping here and yet this is a good time to buy Tesla? Well, let's see what happens. Let's let time pass here. Okay. Turns out the value charts would have saved us from a potential loss. In fact, had we got in a reversal at this point, right, we would have had an optimum entry for a long position. So instead of taking a loss here, you could have had a nice gain if you had value charts. Now, if you're new to using hidden value like this, it might be surprising when you see this happen, but it's something that you can easily get used to when you start including value in your trading decisions. And once you're trading with value, you can't even imagine trading without it. I have value charts up on all my charts, and I use it as a filter and have it in other ways that I use it to make sure that I'm on the right side of the trade. And so I can't even imagine trading without it. Now, this is the kind of information that hedge funds have access to, and they use it, and it gives them an edge. And it's the kind of inside information that could give you an edge in your own trading. Without it, you're at a serious disadvantage. And for many of you up until today, you weren't even aware that it existed. Now, let's talk about how value charts can help anticipate price movement. In other words, how can we use it to make better trades? Well, one of the ways that we can use value charts is to think of it in terms of its likelihood to stop price moving in a current direction. That is, if we're moving higher and we get significantly overvalued, what does that mean? We get a red light. Well, it turns out that there's a greater than 90% chance once you get that red hat or red top, which is significantly overvalued, there's a 90% chance we're not going to keep going higher at that point. That means 9 out of 10 times, actually 93% chance is what it is. And when we see that red, we're likely to consolidate or even reverse on that red. Similarly, if we go low, same thing, about a 93% chance. It means 9 out of 10 times when we get a red value charts indication, price won't continue in that direction. It's like a stoplight just lit up and it's time to stop or even reverse. Now for the yellow, well, what kind of impact does that have? Well, that's significant as well. When we get the yellow, we have a 66% chance that price will consolidate or reverse. We won't even make it into the red. That's a 2 out of 3 chance. I mean, if you can get just over a third of your trades with proper money management, if you can get a third of your trades correct, you can start watching your equity curve rise. Imagine what you can do if you can get 2 out of 3 trades working correctly. This means that if we see red or even yellow on value charts, it's likely we're going to pause, and we might even reverse. This is how we can use hidden value to our advantage, just like we could have in that Tesla example. Okay, let me just check a couple of questions here. Kurt asked, why not just use volume profile? Volume profile isn't measuring the same thing. Value is using the past price activity. It's not using volume in its analysis. Is it the daily chart? It doesn't matter what that chart was. It could have been the daily chart. It could be a 5-minute chart. The same thing applies across whatever chart you're looking at. Deepak says, not very convincing and accurate. You haven't traded with it yet, Deepak. So it's actually, let me show you some more examples and we'll see if you still feel that way. And Vikrant says, I think we also should have another color to indicate the required stop loss room so that we know the RRR. One of the things that makes trading doable is if we don't make it overly complicated. What we want to do is we want to have it simple. So in this pressure of trading, you're not having analysis paralysis. In other words, you're not having some indicators telling you to get in and some indicators telling you to get out. I'd rather have one big indicator that says now's a good time to get in, now's a good time to get out. When we make it more complicated, it becomes more difficult to trade and you start second guessing, a deer in the headlights. So it's actually an advantage if we can simplify our trading. Now, here's another example of how value charts can help us with anticipating value extremes. This is Apple. This is on the daily chart. And I want you to notice here how each time we get a red significantly undervalued here, and there is one right here that's barely significantly undervalued, we saw the stop of the decline or even a reversal in price. So we got significantly undervalued here, price went up. Here, price slightly went up. Here, price went up a lot. Here, price went up a lot. Here, price went up a lot. It took a little pause and then went up. Okay, the same thing when we look at it from the other side. Okay, we have all these indications here where we had significantly overvalued points, and each time, with the exception maybe here, although it did eventually go down, they each resulted in the markets pulling back. So this is what the results are on Apple on the daily chart, just applying the value charts filter. So you can see how the hedge fund could be helped quite a bit by understanding where value is and identifying where those entry and exit points would be. This makes it clear how important knowing value is to your trading and identifying better places to get into your trades and when it's time to get our maximum gains. Now at Basecamp Trading, we're all about price action trading and coordinating that with the value. So in fact, we give all of our platinum members at Basecamp Trading our Naked Trading Mastery course because price action is core to everything we do. We call it Naked Trading, by the way, because it refers to reading what the charts are telling us behind all the indicators. And it doesn't mean we don't trade without indicators by any means. We still need indicators because you can't see everything by looking at just price alone. But it does mean that we make sure we can see through our indicators so we can utilize that fundamental price action in coordination with a select group of critical indicators. And value charts is one of those critical indicators because it's impossible to see value without an indicator. So we often use value in combination with price action to trade. The kinds of price action setups that we might include price break or might use would include price breaking through price levels, trend lines, including pauses and trends as micro trend lines, patterns like pennants and triangles, head and shoulders. So we look for those kind of setups, and then we see what's going on with value charts. So here's an example where we have what's called a micro downtrend, and this is where we were moving up, and then we put in a lower high, and we connect the previous pivot to the lower high and draw a line. Okay. And then we get that temporary pullback. I mean, like I said, we call this a micro trend in the opposite direction. Now, when this occurs, we're looking to break through this line for a potential continuation entry that's going to run higher. So let me show you how we use value charts here. Before we display value charts, we can see that price right here is just about approaching our line. And so we're anticipating that we're going to break through that line after this bit of compression and then run. Okay. What we want to know is if we're going to put a trade on here, is it likely to follow through? It's hard to tell, because what it might do is it might come down and do one more test down again and then revisit the line over here. Okay, so by adding in value, it shows that we are approaching the line as fairly valued right here. So if we look down here, see how that's a full green bar, okay, versus over here, which has yellow on it. So this one, when it came up, it's told us that it's probably going to go down, and it did. And then this one is green. So as we're approaching here, we're not getting any indication yet that we are overvalued. So the likelihood of it following through is significant. Let's see what happened. So we jumped through it, and look at how much we ran. That's the kind of movement we're looking for. Now the question is, what do I do with the trade here? Well, look what happened on value. And the question is it going to just run and go through the roof? Or are we going to pause here and maybe come back and retest this as support? We call that a last kiss. Well, value charts telling us right here with this red that it's very likely that not going to continue higher. We can use value charts right there, that red, and say, maybe we should be taking profits here. Maybe we should close out the position. Maybe we should even take a short opportunity here because we're probably going to get pulled back on a last kiss. Well, let's see what happens. We came right back down and tested the line. Okay. Now the question is, are we going to bounce? In other words, are we going to come down here and bounce, or are we going to go through this line? Well, we can look at value charts here. Value charts is telling us kind of neutral here, is that it's not undervalued. It could go further. So we're not getting that clear of a signal from value charts here, but it's also not telling us that we're still moderately overvalued. In fact, we got back to fair value. When we get back to fair value, that's like a value reset. And that means we're going to continue on the initial trend that we just initiated. So the chances are now that we're going to continue higher. Let's see what happens. And up we go. Okay. And look what happened here. We got up to this high right here, and we got into the moderately overvalued. So we knew right about in here that we were getting a little extended, and you can start to take profits. When you got the red, you could actually close out the position. Okay. Now, you don't have to do that. If you want to hold it longer, you can. But you can see that this market here was extended, and then it just died out, went sideways. Now, if you look here, I don't think I have any more history to add in here, but look how we pulled back here and got moderately undervalued. So now that we put some money in our pocket, now we have an opportunity to jump back in again if we get another setup. So we could look at something like a bull flag or something like that that would give us a signal to move higher. So I'm seeing a yellow low right here. That means a 2 out of 3 chance that from there it would continue higher. That's how we trade value charts on the current bar, and that's how it adds to our trading. It's really helpful to have it. All right. Now, the MetaStock version is I would say the best implementation we have of value charts, because MetaStock offers extra things that make it better. And we've seen how value charts can help us identify those critical value turning points in the markets that we trade. So let's look at some of these enhancements to make value charts even better because of MetaStock. And we can squeeze more money out of our markets with fewer trades this way. So some other things that we can get, we can use value charts colors alone to indicate when to enter and exit. We've got these extra tools here. Okay, these are value charts signals that we can see. So there's a buy signal here, a buy signal here, a sell signal over here. And there's also what we call pressure signals, which they aren't full entry signals, but they're saying, watch out because we might see additional movement up. And it's using value to generate these signals. So here you can see bearish pressure. And once we had some bearish pressure, we kind of went sideways here. Okay, but it wasn't a sell signal. It was a take some profits and tighten up your stop, because we may not go much higher for a little bit and then see if you can get further. Okay, so you can get these from the expert advisor that comes with it. Okay, and I think you'll find these are really helpful. Some people just like using these signals. Some people would rather use the value charts indication down below. Now, the other thing too is that we use value dots, and value dots will align with the conditions that are on value charts. So if you want, you can see when you get over a certain level, the dots will appear. Not necessarily just pure yellow. You can set the levels where you want, but here you can see red dot here, and now you can see the value alert right on the chart. So we can see up here we got extended and then pulled back, a little bit of a pause would go sideways. Down here, this would be a stop going lower and reverse to go higher. Okay, you also get the trend ribbon down here, which uses a different microquant technology to help you understand if you're bullish or bearish, and then you can combine that to know that you're bullish through here and then bearish through here, and it can reaffirm things. Now, all these work together to find optimal trades. In fact, we can get an overall bias of the entire stock market with value charts. This is on a weekly chart, and that gives us an optimal sell signal right here. That means that if we're looking at a weekly SPX, now we might be taking profits in many of our individual positions. So we could use the value showing on SPX as an overall overarching time to get out kind of thing. And then down here, we can see after this pullback, and this is weeks, so we got 2 or 3 weeks of pullback, we can see we got significantly undervalued. That gives us the opportunity to jump back in again and write it up, and then maybe take profits up here when we get significantly overvalued. So you can use this as a cycle to tell you when to take your profits in the market. It's a pretty cool setup, and now we're seeing a signal to go lower from that red significantly overvalued. Now, there's other tools as well that you get, because we've packed a lot in the tool. We haven't covered everything, but it also includes MQ momentum, and something we use in every trade. Some of you use MACD. MQ momentum uses a true strength indicator algorithm, and it's an important part of trading. We're going to give you that as part of this suite, and that's why we call it the Value Charts Complete Suite. And value charts or momentum does a lot of things in addition to value charts, and we use it in conjunction. We can help it confirm our trades by kind of pointing to where we expect charts to go, and then we can use it for divergence, like right here, where you had good alignment here. When basically you look at this white line, if it's rising along with price, you're in alignment. But if right here, if the price is dropping to a lower low here, look at the fast line here, the white line is rising, and that was giving us an indication that it wasn't going to keep dropping, and sure enough, we reversed and moved higher. So we can use this indicator along with price and value to have that complete picture of the market. And I mentioned you can use multi-time frame analysis. What that means is that we look at what the analysis is on, say, a higher time frame like the daily, and then do trades on the 30-minute. So if we have a value extreme on the daily, that can act as a filter or a guidance to use on the shorter time frame charts. Just like we could use the weekly charts getting overvalued to know that we probably want to take profits on the daily or on the hourly charts. And of course, there's other things. We've got the expert commentary populates and gives you help with your indicators. So you've got, if you get a signal of a VC buy, it explains what to do, what to consider. It tells you about the value charts values. So this is going to show up for any of the signals that the value charts creates. You've got a bunch of explorations that helps you find conditions in the market where value is existing, and probably the best ones are going to be VC buy and sells for many of you. But you can also just search for significantly over, which is red tops and bottoms, and even something called extremely overvalued. Okay, so, and then just a little bit of pressure. So you can search across the market so that there's a user guide that gives you the information on how to use it. Hopefully you can just pick it up anyways, but this will give you a more complete understanding of it. So you get a whole bunch of things with this package, and there are more ways to trade using value when you get a little bit more advanced. We use it for a bunch of different things. And this value trend trading is actually really cool. That's when you get into a sideways channel and you can use the red extremes just to trade. Get in on the red low and then get out on the red high. You can do that when you're in a channel. And you can learn how these other ones work, but these are just different and more advanced ways of using value charts. And ultimately, value charts can be adapted to fit whatever style you have. You can make it complex or simple. And for some of you, it might just be enter here and exit there. Okay, so we want that simplicity and profitability when we can. So as you can see, trading with value can transform your trading. I hope you can also see if you're trying to trade without it, you're at a serious disadvantage. You don't even know that you're at a disadvantage if you're not trading with value. If it ever feels like the market's chewing you up and eating you for lunch, that's maybe time you got the tools and information that the hedge funds have. They have those tools. They can find these types of moves before they happen. And these are the tools that help them identify the optimal entries and exits and gives them their edge. Now, why would you want to trade without having this type of edge and this type of information at your fingertips? Because you can get it. You can get this technology and get trades like this one in AbbVie making 12% in just the first hour and a half of the market open, or this $21 rise in Facebook over the weekend. So I told you earlier I'd unlock a hidden hedge fund technique to improve your trading, and I showed you how easy the tool is to use that lets you trade like a hedge fund, give you that extra information to help you get those big profits. Now you can transform your trading and get it yourself and trade like a hedge fund. You get all the stuff that we talked about that's patented, and it was vetted by Wharton and UCLA and University of Michigan. The hedge fund turned around using this tool. It's just a proven success. So how much does it cost? Well, here you go. Normally this would be $14.97. Because you're here on this conference today, we have it available for immediate access at $9.97. Okay, I'm going to ask Jeff to come in, and I think Jeff was going to demonstrate a couple things about the tool. I know he likes to do some demonstrations here. Let me check our questions here while we're waiting too.
We have a one or two from YouTube as well. So, yeah, good job.
Oh, thank you very much. So you have to look at questions here if I can see some. Is value based on fundamental data like earnings? No, nope. It's based on price movement, but it's looking at primarily price movement, and that's the prime thing. I'm sorry, Jeff.
I was going to say along those lines, in YouTube, Paul wanted to know: do earnings reports or dividends affect the value of the value charts?
Absolutely. In fact, I personally don't trade through big news events like that. Because you don't know which way they're going to go. But even more importantly, even if you knew which way they're going to go, you don't know how the market's going to respond to it. So like any indicator, value charts is using past history. And when there's a huge change, value is going to change. So I would rather just use value to be in the more predictive areas and not try to anticipate which way the markets are going to interpret a move that you're not supposed to know anything about, right? Unless you had inside information.
John wanted to clarify if it updated during the bar or after the bar. And so I did answer that basically, but I wanted to say the answer out loud just so that it was a little bit more clear. The bar will update during the bar. The only thing that you have to be wary about is it will update during the bar. So like if you get a VC buy signal and the bar is not closed and you get more data, that might go away. So it is going to update as the data comes in, as long as you've got real-time data. Frank wanted to know if you could use this on any time frame.
Yes, every time frame. Tick charts, time charts. Yep. It may not work on Renko charts on some systems because those are synthetic bars. So synthetic bars don't really tell you the extreme of the bar. They're kind of lie to you. Synthetic bars mean that the low is not necessarily where price actually went. And if you don't understand what that means, read up a little bit on what Renko bars are, for example, because if price is just going up, you will still see the Renko bar show you prices that are lower than price actually went. And that can mess with any indicator that's using the high and low or whatever data you have from a bar, including the open and close. So avoid synthetic charts, but it works great on time charts and tick charts. And I have it on all my charts that are time and tick.
What asset classes does this work with? Surrender wanted to know.
All of them. One of the things at Basecamp Trading, and one of the reasons why I finally decided that I was going to, focus on their teachings, is that they didn't have a lot of limitations as far as, this only works on a 30-minute chart, or this only works in futures. Everything that we teach, almost every single thing, applies to every chart. In fact, you could just hide the symbol, hide the time, and just read the chart. And if you're just applying the same techniques, it's just that if you're on a 30-minute chart, you're going to have a much further away target and stop than you would on a 2-minute chart. But you do the same thing, and that simplifies trading a lot.
Chris wants to know, is this better than VWAP? And I just want to say, well, it's kind of a different comparison. Like, it's totally different. It's not the same thing as volume weighted average price. So, but I'll let you also do an answer if you'd like.
Yeah, I actually answered that one, I think, during the webinar earlier. But volume weighted average price is trying to figure out where most shares trade on average, and it's kind of like a magnet. We have a couple of indicators that help us identify levels, and we have one of the things is called the mid. I consider VWAP the mini mid, and it's like a little mini black hole that price is drawn to, and it's not really related to value at all, but it is something that I use in my trading.
Great indicator though too. Yeah, thanks, Chris. I appreciate the question. We hit all the questions. So I do want to show some stuff, John, before I kind of take over the screen and stuff like that. Yeah. Want to make sure to say thank you. Thanks for coming in. That was good.
Hey, you're very welcome.
Let me go ahead, and thanks for all the development work and the design work that you put into this. Let me go ahead and show my screen. I wanted to show Meta. No, I'm going to show Meta, the stock in MetaStock. So, but this has been a great stock this year. Actually, I keep showing this, and for full disclosure, MetaStock has been a great trade for me this year. So with that being said, I just kind of want to give you an idea of how this looks on a chart. And so let me go ahead and turn on the microphone and just kind of using some of the pieces that John was talking about, just kind of show you. So wanted to point out, okay, let me go ahead and pull this over here. If we were looking at here, obviously going into last year, if you remember, Facebook was just getting beat up on it, getting undervalued and sold and sold and sold. I won't use the word undervalued, but I do want to point out right here, back in about September, you got kind of the VC sell. It was a pretty good trade. Right here, though, right around, this is where I would say is kind of the objective bottom. Like, this isn't subjective. This is where it kind of turned around, at least for now, right? And at that very time, if you're kind of taking a look at the value charts, you have the significantly over or undervalued area, okay? And it stayed significantly undervalued for that thing. Here you have this little bullish pressure arrow. It's a bit of a sideways arrow. Indicates that there might be bullish arrow on the chart. If we were kind of waiting for the momentum to shift using the momentum, you'd have noticed, okay, we're undervalued right now. We have this bullish pressure that's coming in. Maybe we'll want to wait until the actual momentum shifts. And right here, if you look from where it went from a bearish momentum put to a bullish momentum, all of that kind of lined up right here. Okay, I'd say in terms of like looking at a stock, and of course this is a good example. I know I've shown a MetaStock a lot, but if I was looking at this chart and kind of everything kind of lines up right here, I would argue that this would be a really good time to buy the stock. So here we did have some bearish pressures that came in. Here we had another buy signal. Here we had some bearish pressure as well. But in terms of kind of being able to kind of easily read what's going on in the chart and kind of being able to pay attention to the momentum and all of that kind of stuff, it worked really, really well. I mean, this is a really good example of a stock that would have worked out. Okay, and they're not all going to be like this. I would encourage you to play with the stocks, really go through kind of the information that's provided, the manuals, understand kind of like how to read all of this stuff. But this is a good read in terms of what's going on. John did mention this, and I do kind of want to reiterate. One of the things that he did a really good job when he was designing this is actually being able to explain what's going on in a commentary. So right here, you've got, I just opened up the commentary window. By default, it's going to look at the current bar. You can move it around if you want. But if we're just looking at the hard right edge where we have to trade, it says right now the status of the bar is it's a fair value. Okay. bar close analysis, the price is within the range equal to its own expected relative value per charts. Here's some things to consider. If you're considering buying this, buying now would be likely be at a fair value relative to its own price. If you're looking to sell, it would be at a fair value. It gives you kind of a breakdown of everything that's going on. And so if I was looking at Meta today and I wanted to buy it, well, we'd be buying it at a fair value. And that's okay. But like if I wanted to find something that's undervalued or significantly undervalued or something along those lines, I could do that as well, because we have one of the best, what I feel is like one of the best scanning engines. So if I go ahead and click into the Power Console and I go into the scanner, I've actually just searched for value charts, and you can see that there are quite a few different value charts that you've got. If I wanted to, I can run it for this scan right here would run, and it would find things that are extremely overvalued, undervalued, significantly overvalued, significantly undervalued. Here, this is kind of the value charts buy signal. If I wanted to go and run a scan and find all of the stocks that had a buy signal today, I can. Okay, and that's one of the things that I think we do particularly well with MetaStock is the ability to scan. And I've said it all week, but it's going to be true all week. If you're over here if you're in the U.S. with us and you want to scan North American stocks, you're going to have all those stocks available for you. They're going to be available to trade. If you're joining us from India, London, Middle East, Asia, whatever it might be, there's 300 different exchanges you can actually kind of apply these analytics to. You can apply them to the markets that you're interested in. So for me, if I want to find stocks that are that have a buy signal today, this VC buy signal that you see on the chart, all I'm going to do, let's go ahead and just do a quick index constituent. So I'm going to click on index constituents right here. Let's just do the S&P 500 to make it quick. Actually, I do have two selected. Let me go ahead and kind of find Turtle because we don't need to run that one again. Okay, but now I've just got the value chart selected. I'm going to run that. What it's literally going to do is it's going to go through those 500 stocks. It's going to weed out all the ones that don't have an opportunity that's a buy signal. And it's just going to show me the ones that do. So I can, at that point, and you'll notice it's rejecting right now 100% of the stocks. With that VC buy signal, it's only going to find the ones that actually have that buy signal. So if I run this stock and there's nothing to look at, that isn't necessarily a bad thing. That just saves me looking at 500 charts. But it's one of the things MetaStock can do. We get a lot of questions about like, okay, what platforms does this work on? And value charts is available on quite a few platforms. But I really think like the engines that are designed behind MetaStock really kind of add power to the tools as well. So, and if you do want to, I know there was a question about what platforms are supported. If you go to the value charts website, you can get a list of that. Or if you message us, we can get it. I'm not sure of what that is offhand, but it does support other platforms. But I just think, you know, with the expert advisor, the commentary, the scanning, all of that kind of stuff is stuff that you just can't get in other platforms. There's a reason it's been rated number 1 30 years in a row. So I'd recommend you try it in MetaStock. But if you get in touch with us, we can give you a complete list. And John, if you want to chime in with a complete list, you're certainly welcome to. So Kira Short says, will it work on the Indian market? Absolutely. You can apply with Reuters data, with the data that we get. We cover 300 exchanges. Thank you for that question, Kishore. Walter, thanks for the value charts question. Yes, on the Indian markets. Okay. All right. So I think that covers kind of the toolbox. I love kind of the story of this thing too, because like all of the accreditations that have got, the patent that's available, that's on it, the hedge fund success story. They were losing $60,000 a month. They turned that around to where they're making $30,000 a month. That's a $90,000 difference. To me, that's very, very impressive. So let's go ahead and talk a little bit. I'm kind of going to skip a little bit ahead because John did a lot of stuff to kind of talk about this. But Frank wanted to know what is included in the value charts offer. So right now, what we're doing here at the conference is we're going to give you $9.97 prices, normally $14.95. That's going to include everything that John showed you. It's going to include the value charts indicator. It's going to include the scans, the commentaries, that microquant. Let me say it right here. The microquant momentum, is that what? Yeah. Okay, I didn't want to say the wrong name. Okay. But in addition to that, we did put together a training class. I do recommend, if you add anything to your training, you want to play with it. So we did a training class that kind of goes through, and John actually sits down and kind of talks a lot about how to use value charts and how to kind of use it. If you don't have MetaStock, we will give you a free version of a free trial to MetaStock. Our real-time program will include the Indian data for you, or whatever markets you're interested in. We'll also include the data that you need. If you're brand new to MetaStock and you need any help, well, if you need any help anytime, call our support team. They're very, very good. I've said over and over again how I think they're one of our biggest assets, to be honest. Just the people. The fact that they get 100% review scores all the time. They do a great job. So if you want to do that, we'll even back it with our 30-day money-back guarantee. You can try it out. If it's helpful for you, like it was helpful for that hedge fund, try it out. There's a pretty good risk-reward ratio there. If it's not helpful, we'll give you your money back. So give us a call, 800-882-3040. You can visit us at metastock.com/saleschat or metastock.com/value chart tape or conf promo. I didn't update the URL there, but both of those will work. So that's available as part of the conference specials. It's a great product. It's been very, very well received. I think that's also why it has all the good accreditations from the business schools and the hedge fund. Anyway, good job today, Sean. Appreciate that. 800-882-3040 or metastock.com/saleschat. Give us a call. Kishore, thanks. Kishore says great. John, thank you for that great presentation. All right, if you guys have any other questions, Surrender says, thanks, John. A powerful addition to a trader's toolkit indeed. So, all right, thanks everybody. It's a really good one. So give it a go. All right, really quickly, and then we're going to move on with today's presentations because we have a lot of really good speakers today. But this time around, I want to say thank you to the CMT Association for sponsoring all of the events this week. They've been sponsoring all of our conferences and summits for a couple of years. They're great people to work with. They have a great reputation. And I said it a little bit earlier before John started, but if you're looking to, if you manage money, if you're looking to start managing money, if you have assets under management, the CMT Association is a really good accrediting organization, something like that. Just, you know what I'm trying to say. So if you're interested in finding out more about them, go to cmtassociation.org. You can also call them at 646-652-3300. I better get to the next presenter. I'm losing the ability to talk already. So in any case, we're MetaStock as well. Again, 30 years in a row. In just a minute, Kelly's going to come on after our next presenter, Silas, and he's going to talk about the MetaStock program a little bit more. But all of our specials today can be found at metastock.com/compromo, metastock.com/saleschat. You can also give us a call, 800-882-3040. So there you go. Our next speaker is Silas Peters. Silas has come in and he does a great job. Really like the pattern that he likes to talk about. I'm not going to spoil what the pattern is, but Silas is a great technician and people really like his methodologies and what he's got to tell you too. So Silas, how are you doing today?
Hey Jeffrey, how you doing? Doing great.
I'm good. Yeah, I trust you got back from the Vegas Expo. Okay.
I did. I made it in one piece. It was good to see you guys out there.
One thing I forget every time I see is just how tall you are. So he's literally a giant among men. So
I feel like I'm shrinking, but
cool.
All right, give me 1 minute if you don't mind here, and
yeah, take your time.
Trying to get my screen in gear.
I'll let you know when we can see it.
All right. So, and I'll try to get you back on time here.
Kelly's next. I was going to say, don't worry too much about it.
Okay. So, how about now?
We're running about 9 minutes late, and that's not uncommon. So.
Okay. Can you guys see the screen there?
We can. I'm going to go ahead and turn off my microphone and my webcam. It's all yours, Silas. Take us away.
All right. Thank you so much, Jeff. Good to see you again. And thanks for having me back on the show. Again, everybody see my screen and hear me loud and clear. Just need some acknowledgement if you don't mind. That way we can officially get going here. As Jeffrey said, my name is Silas Peters from Trades Trending. He made it sound like I'm a really tall, giant person. But always enjoy being on these conferences. MetaStock has been a great host. I know you guys are learning lots. And let's go ahead and get this thing rolling here. This is one of my favorite topics, subjects, strategies, whatever you want to call it. It is my bread and butter strategy. In fact, I've been using it this morning to trade, and we'll dive right in and show examples. Now, before we officially get started, we must take a moment to read the risk disclaimer as required by the regulatory governing bodies and our attorneys. We know trading is risky. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. So, i.e., only risk capital should be used to trade. So now that you understand that, let's ask, what do you trade? I like to see what kind of audience we have in here. Do you trade stocks, options, futures, Forex, maybe even crypto? What is everybody trading? So I trade all of these actively: stocks, options, futures, and currencies. Don't actively trade crypto. I do, quote unquote, invested in crypto. View it more as a lottery ticket, if anything. I don't actively trade it, but I do trade stocks, options, futures, and Forex. So we got stocks, stocks and options, all the above. Stocks and futures, FX, really kind of all over the board here. And that's awesome, because what I'm going to share and teach you today works in all markets. It's highly accurate. It works in all time frames. It's 99% mechanical. And most importantly, it is simple. And I've used this strategy with $500 accounts, $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. I've used this in every market situation. The 08 financial crisis, roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, and more. From scalping, intraday trading, and swing trading for a few days, position trading for weeks and or months. Again, you can do this with small or large accounts, and it can take as little as 15 minutes a week if you wish. Now, before we dive into all this, let me introduce myself so you can see who I am, maybe why you should listen to me. Again, my name is Silas Peters. I'm a husband, a father to these beautiful blonde-haired, blue-eyed beauties, standing here in front of my alma mater at the University of Alabama. And 3 days after I graduated, I sold my car and I headed north to the great Windy City, Chicago. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug and never really looked back. While there, I helped run a global trading desk, placing, managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, commodity trading advisors. What does that mean? It means our 24-hour trade desk was placing, executing, and managing trades in the size of several hundred or thousand contracts, multi six-figure, seven-figure position size. Sizes where a single tick meant a movement of $300,000 or $500,000 was not for the faint of heart. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office, sales, support. From the ground up, we built firms from scratch to brokerage units with several hundred clients and doing block trading in significant size. Also worked for a private family office where we managed around $2.5 billion. Everything from investment portfolios, tax and financial planning, real estate holdings, timber, farmland management, private jet leases, you name it. And then I launched my publishing firm in 2016. And then in 2020, we launched our registered investment advisory, Blue Marlin Advisors, where I'm a partner, co-founder, and COO. And my publishing firm, where we're now, this is where we developed a community with thousands of traders and investors that use the education and tools that I've developed over the years to help them become consistent and profitable. But my journey as a trader was not always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money, a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up accounts, blew up others, and what I like to call revenge trading. I'm sure several of you can attest to that. And all of these experiences were extremely humbling. I almost gave up, almost quit. Nothing seemed to work. I seemed to always be on the wrong side. But do you know what got me back in the game? I was in a dark place. I went back to the very first trading setup that I learned almost 20 years ago. And guess what? I got back on track. I started banking wins. Again, I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process, and found overall consistency. But enough about me. Let's talk about you. Does anybody's trading desk look like this? Is anybody's trading desk like this? This is not my trading desk. I thought it was funny at the time because I feel like it's what the perception of what those on the outside looking in think this is what trading is or what trading is about. And now my desk did look like this for obvious reasons in Chicago, but I've since pared back to a handful of monitors for day-to-day trading, operations, execution, research, and analysis. All this does is lead to unhealthy eyeballs and paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? Let me see in the chat box. I'm raising my hand. I've been there, done that, got the t-shirt. Per Wikipedia, it's the state of overanalyzing or overthinking a situation so the decision or action is never taken, in effect, paralyzing the outcome. So a lot of you guys have been there and done that, and my goal today is to rid yourself of the paralysis analysis demons. We can make trading simpler. Let me paint a quick picture. We know that no stock or market does not go straight up or straight down forever. They go up and down in waves. And literally trillions of dollars have been made by smart traders by recognizing these trends. And at the same time, trillions have been lost by those who think they knew what they were looking at and got it wrong. So right now, let me show you how to get on the right side of these moves. I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. Now, if you stick around, I'm going to show you example after example after example of how the strategy that I'm going to share with you is able to identify moves like this. This is a trade here in GE. We have a 36% move. We have a 26% move. Here in Barnes Group, a 21% move, a 63% move. Bank of America, 28% move, 60% move. Gold futures, this is a 4-hour time frame. We have an $1,800 per contract, $900 per contract. Day traders, 5-minute S&P, 8 points, 2.5 points, 6 points, 4 points. They start to add up. And these types of moves, these setups, happen every single day across all markets and all time frames. This is the Aussie yen and the currencies to show you. Doesn't matter if you're a swing trader, scalper, day trader, it does not matter. With all these examples I just showed you, can it be too simple? Well, we know trading is not easy. It is not easy at all, but we can simplify the process. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. Tried all kinds of stuff. And you know what? Most of it was garbage. But the single most important part of this journey is when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos, indicators, and started focusing on price action, following one simple pattern, it all started clicking. So if you are sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anybody can learn. And you will want to keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make an offer you can't refuse, how you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we're going to be discussing today is the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or bottom. Who here has heard of the 1, 2, 3 pattern before? Let me see. Type a yes, type a no. Let me see in the chat box. A lot of you are familiar. You've heard of it. This is nothing new. This is technical analysis 101. But I will tell you, it is highly, highly overlooked by most traders. And you're going to be kicking yourself in a moment on why you've been ignoring this setup. So let's talk about this setup in general. Setup is price action based. And guess what? Price action is king. And speaking of king, did you know this? Did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on, until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store, and they open one up across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and institutions and wealthy investors do all the research on which markets or stocks to buy and sell. But all we have to do is look at price action, which takes into account all their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, the setup, again, is price action based. The pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high in case that we're going long, inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found with a trade range. And I will stress that it works extremely well when the pattern sets up as significant areas of support resistance or supply demand levels, other high probability technical patterns, head and shoulders, tops, double tops, bottoms, so on. Let's take a look at the basic mechanics. I'll start here with the 1, 2, 3 bottom. When we're looking for a 1, 2, 3 bottom, we are bullish. We're looking to go long. We're looking to buy that market, buy that stock, buy call options, sell bull put credit spreads on that market, expecting it to go higher. So as we have the price going down and we find that last area of support and pull up, we get our number 1. As the market trades higher and pulls back, we get our number 2. As the market comes back down and stops making these higher lows and pulls up, we have our number 3. 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. Let's look at the 1, 2, 3 tops. Same rules apply, only in inverse. When we are looking for 1, 2, 3 tops, we are bearish. We're looking to go short. We're looking to sell that market, buy put options, expecting that stock or market to go lower. Now here, we have the market pressing up, and when we pull back, we get our number 1. As the market retraces lower and pulls back up, we get our number 2. And once the market stops printing these lower highs, we get our number 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. Let's look at some chart examples. Seeing is believing. Now, follow along with me here, and let's take a look at this chart of the Aussie dollar. This is the 6A futures. If you don't trade futures, you can look at FXA, the ETF. Currency traders can look at the Aussie US in the Forex market. You're going to see the exact same pattern, exact same setup. Now, this is a daily chart of the Aussie dollar. Now, when we're looking at a daily chart for this example, we're looking for a 52-week high or 52-week low. That's not an absolute rule. Nothing set in stone there. We'll talk about ways later that we can dial that in a little tighter to find more opportunities. But for these example purposes, we're going to be looking for 52-week highs or 52-week lows. That's exactly what we get. That's our number one. This number one is a 52-week high. You see the market pulls down, retraces back up. We have a 1, 2, 3. Now, this market could have traded as high as these levels here as long as we didn't take out that number one. So we have a 1, 2, 3. Now, you already know the setup, right? 1, 2, 3 top, you're looking to do what? You're looking to short on breaks or closes below the number 2. That's good, that's great, but what about the other important ingredients of the recipe? Where's my risk? Where are my targets? Great questions. Our initial risk goes above the high of the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. And that's about 225 ticks in this example. Okay, so you'll see right off the bat, we have a 1-to-1 risk to reward. Well, we can do better. It's very important to let the market materialize in its anticipated direction. So after the market starts breaking down here, we can move our stop where? The next logical area of resistance or above the number 3 high. And we quickly cut our risk down by 50, 60, 70%. Okay, let's look at another example. This is a daily chart of Walmart. We have a red number 1. Why? It's a 52-week high. 1, 2, 3. We know what 98% of other traders are out there scratching their head on. Well, where am I going to enter? Where is my stop? Where is my profit take? Where are my limit orders? Well, we know that we're looking to get short on breaks or closes but below the number 2. We know our initial risk is going above the high of the 1, and we know our target is the distance between the 1, high of the 1, measured to the low of the 2, measured down, which is about $5 in this example. And we know all of that. We have a complete plan there, days, sometimes weeks in advance. Let's look at some 1, 2, 3 bottoms. Same price pattern, same action, only in inverse. Now, this is a 15-minute chart of the E-mini S&P. If we're looking at an intraday chart, whether it's a tick chart, a 1-minute, 2-minute, 15-minute, does it make sense to look for 52-week highs or 52-week lows? No. So what we do on an intraday chart is we look for what we call session highs and session lows. You know, futures and Forex are trading virtually around the clock. And so wherever you start your trading day, you're looking for a new session high or new session low. So if it's 3 a.m. European, if it's the 9:30 Eastern New York cash open, if it's the last hour of the day, you're looking for a new session high or new session low. So we get a new session low right here as indicated by the number 1. We have a 1, 2, 3 bottom. We're looking to get long on breaks or closes above the number 2. Let's talk about a couple of entry points here. Aggressive traders might work a buy stop, a tick or 2 above the number 2, you're triggered long. An alternative method, at least I prefer, is to A, wait for that market to trade up, come and retest that breakout area and then look for a move higher, or wait for what I call a second pass or a hook back up. Now, if you work a buy stop here, sometimes that market will zip up, reach your target objective, and leave the other traders on the sidelines. No need to get your feelings hurt. We'll have plenty of other opportunities. But sometimes the market will come and take out that number 2 high, and then it will start to roll over, and you'll get stopped out. So I like to wait for that extra confirmation. We get a break and close, and either get a retest, move back higher, or that second pass move to the upside. Okay. Here we have a weekly chart of Apple. These weekly charts, monthly charts are a hell of a way to catch some longer term position type moves. Here we have a multi-week low. We also have a double bottom, 1, 2, 3. Market breaks above that number 2 here on this large bullish candle. Market goes sideways for a few weeks. We come back down, retest, hook back up. That's our confirmation to get long Apple. How? We buy Apple stock. We buy call options, sell bull put credit spreads, whatever your flavor or style is. Now let's talk about failed trades. They don't all work. I hate to bust your bubble, but we're all big boys and girls here. We know that there's no holy grail in trading or in life. It's a trade I probably took on my live account. We have a session high. We have a 1, 2, 3. You're either, if you took the initial breakout, you're short here. If you waited for that second pass hook right here, you're short right here. Now, if you exercise any type of money management, you move your stop above the high of the number 3 and you're stopped out right here. If you sat on your hands, didn't do anything, you're stopped out as we take out the number 1 high. No worries. Notice what we get. This high is greater than this high, so we actually get a new 1, 2, 3 count, and we're going to get another opportunity to short that market, and we're into a profitable trade. All right, this is what I call a no trigger or avoided trade. It's neither good, bad, nor ugly. It is what it is. So here we have a 1, 2, 3 looking to get long here, but the market rolls back over, takes out that number 1. We start the count over. 1, 2, 3 looking to get long here. Market rolls over, takes out that number 1 low. We start the count over. 1, 2, 3. We're finally able to get long on that last attempt. Now, I'm going to tell you why I like this pattern. I like when this happens. Why? Because we have price heading lower. New lows, new lows, new lows. But most of the time, we added an oscillator. Oscillator doing this. Higher lows, higher lows, higher lows. What is that? That is called divergence. It's just extra icing to add to the cake to an already high probability strategy. Let's talk about 1, 2, 3 pattern trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies, this is what I'll tell you. If you're only trading one contract, one stock, one option contract, futures, whatever it is, I would say go for the distance between the 1 and 2 as your target objective. So let's say that we're looking to go long here, and we know our target is the distance between the high of the 1 to, or the, excuse me, the low of the 1 to the high of the 2 measured up. It's uncanny how often it will come tag that almost to a T and then often reverse. So I would say take off your position there. Now, if you have the flexibility to, or to the scalability to trade multiple contracts, I would say, hey, take a third off here, 2/3, half your position, whatever, and then you can trail your balance, trail the rest of your position in whatever works best for you. Moving averages, par, SAR. I like to use good old-fashioned supply and demand levels, okay? Now, I showed you this setup works in any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, the Polish zloty, and pork bellies. I've also showed that this works on any time frame, whether it's tick, 5-minute, hourly, daily, whatever time frame you wish to use, and on any trading style. Let me know in the chat here, are you a position trader, a scalper, swing, tick trader? Let me know in the chat, what is your trading style? Swing and position, day and swing, tick, scalper. Awesome. And the reason I ask is that you ultimately have to figure out what your bread and butter is. I'm not going to tell you that this only works on a weekly chart of ExxonMobil or an hourly chart of the NASDAQ or a 5-minute chart of Bitcoin, because it's not true. It works in every single market in every single time frame. Everybody has different circumstances. Some of you can't be in front of your computer all day. Some of you have no desire to be in front of your computer all day. Some of you only want to swing trade. Maybe you work at 9 to 5. Doesn't matter. These are some of my favorite time frames here. I also like the 1 and 2 minute. And I think the 6-10 tick chart works well too when I'm able to be super focused. But these are the time frames that I like for this strategy. But again, figure out what works best for you. Now, you've seen the proof. Let's look at some real trade examples. What I've just shared with you were certainly not fake examples. Those were real, but let's look at some examples we've utilized in some of our services. Now, you guys and gals can read all this over here on the right-hand side. I'm going to focus on the chart and work my way from left to right. So here we have 3 examples. We have a new number 1 over here. Why? Because it's a 52-week high. So again, we know days in advance, we have a 1, 2, 3 top where we're looking to get short, where our risk is, and where our target is. So we break down below the number 2 here. We get a couple of retests. We reach our $3 or $3,000 per contract price objective. Then we go sideways. I get asked all the time, Silas, does this work in sideways or consolidated markets? Well, yes, it does. You see we have a 1, 2, 3 here. It trades to the upside. I'm really looking for new highs or new lows, but you can trade range bound 1, 2, 3s all you wish. Here we have a new setup. This high is higher than that high. We get a new 1, 2, 3. Let me tell you why I love this particular setup. Not only because of the high probability nature of the 1, 2, 3 top and bottom that we've been discussing, but we're now at a time of the year from a seasonal perspective where crude and energy markets generally trade at the downside. So I got really excited about this short. We found this, and here we had a break below the number 2. We get 3, 4, 5 days of retest. If you can't check it until the end of the day, no worries. We break down. We quickly reach our $4 or $4,000 per contract price objective. The market ends up selling off another $20 or $20,000 per contract. We simply trail our bounce, trail our position until we get stopped out or we get a potential reversal. Here's a potential 1, 2. Here's a potential 1, 2, 3 right here. In fact, I thought this was going to be a long, but what happened? The market broke down, took out that number 1. We finally get our last number 1 here. We get a new count, 1, 2, 3. We're able to get long here and reach our $5 per contract price objective, $5,000 a contract. Now, I want you to remember this chart and the subsequent charts because I'll show you something really special here in a minute. Now, you may or may not be able to see the date on this chart. 2018. Silas, you're killing me. Really, 2018? How about some recent setups, recent results? Well, I'll tell you, it still works because I use it every single day. Look at the last 2 examples in this same market. This is a $5,800 per contract move. Here's a $4,700 per contract move. Let's look at gold. This is actually GLD, the ETF that tracks gold futures. I like to look at futures charts because you're not going to see all the gaps, but nonetheless, you're going to see the same pattern. So we have a 1, 2, 3 over here. We break below, we reach our $4 per contract price objective. Then what? We get a new low. Double bottom, 1, 2, 3. We break above the number 2, reach our $2 per contract price objective. Again, if you want to trade range bound 1, 2, 3s, help yourself. Here's a 1, 2, 3 right here. Trades the upside. Here's a 1, 2, 3 right here. Trades to the downside. I'm only looking here for a new high or a new low. This market is starting to sell off. We start to get number 1 counts. Why? Because these lows here are lower than these lows. Here we have a potential 1, 2, 3. But this little guy right here takes out that low. So here's our final count, 1, 2, 3. We gap higher 2 days in a row. You wouldn't see that on the futures chart, but that's okay. We come back down, retest, hook back up. That's our confirmation to get long gold. How? We buy gold futures, GLD, buy call options, sell bull put credit spreads, whatever you want to do, however you want to trade. There's literally no excuse not to take advantage of those kind of moves. Silas, really, 2018, a chart, come on, show me that this is working in current market environments. How about recent setup here in gold futures? Let's look at a stock, Delta Airlines, just to hammer home the point that this is a recurring pattern in all markets and all time frames. We have a 1, 2, 3 here, retest, $4 profit objective. Here we flip short. 1, 2, 3. Now this one gaps below the number 2 low. I personally don't trade the gaps, but I've got members and students that will aggressively be buying put options right there. We get another shot at shorting Delta Airlines. This high is higher than that high, so we get a new 1, 2, 3 count. Sells off below the number 2. We get a small retest. Makes the $8 move. We flip around to the long side. 1, 2, 3. We break above. We trade back. Come back and retest. And zips up $8 higher. Here are some recent examples. bottom, 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 top. All right, Forex traders, 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. We have a 4-hour chart. We make a multi-session low, double bottom, 1, 2, 3. Aggressive traders might take that initial breakout here. We come back, retest, hook back up, reach our 70 pip profit objective. What do we do now? Well, we don't do anything but wait for a new potential sell. Here we have a 1, 2, nope, 1, 2, nope, 1, 2, nope. Finally get a 1, 2, 3 top. We break down, we come up, hook back down, we reach our 40 pip profit objective. Multiple examples of the Canadian dollar versus Swiss franc. Day traders, 5-minute chart of the NASDAQ. Session low, 1, 2, 3. We break above, we come down, hook back up, reach our 13-point profit objective. Here we have a session high, 1, 2, 3. We break below the number 2. Might have to pop some toms. The market goes sideways. We finally fall, reach our 20 pip profit objective. We get a new session low, 1, 2, 3 bottom, break above. If you're lucky enough to get long in that retest, you reach your 30-point profit objective in about 2 or 3 bars. Multiple examples. 5-minute chart, 137 ticks, 60 ticks, 91 ticks, over and over again. You see what we're doing here. You starting to see the power. We're trading the basic ebbs and flows of the market. So now is when I ask, why are you here? Well, I assume you're here to learn a mechanical, done-for-you strategy for all markets and all time frames. I'm not sure if it gets any more mechanical, simpler, easier. There's really no guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have at least 99 seeing the same thing. Always going to be somebody out there that wants to overcomplicate, overanalyze. We do not need to overcomplicate or overanalyze. But wait, there's more. What if this strategy was automated for you? What if the strategy is plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets and tell you when there is a pitting setup? Well, I would say that's pretty amazing. Well, are you in for a treat? Do you remember the recent case studies we went over? Crude, gold, Delta, NASDAQ, and so on. Well, those charts we just looked at here are those same charts with our 1, 2, 3 indicator. Now, I know you're smart boys and girls. You probably figured this out. But let's talk about what this means. The green arrow is your number 1. The blue arrow is your number 3. The red arrow is your number 2. 1, 2, 3. You might be looking at one of these little chevrons here. It's a visual aid waving to you saying, hey, we've broken below the number 2 or broken above the number 2. If and only if we get a break below or above that number 2, we get these lines plotted onto your chart. What are these? The blue line is your breakout or entry level. The red line is your risk. The lime green line is TP1. Your dark green line is TP2. Take profit 1, take profit 2. Remember, TP1 is simply the distance between the high of the 1, measured to the low of the 2, measured down. And then TP2 is 2 times the distance of TP1. Why all these green arrows? Because it's telling us we're making new lows. Here we stop making new lows. We almost get a 1, 2, 3 there. We trade lower. 1, 2, 3. Here's that one I thought we were going to get long, but the market breaks down. We get no chevron. We get no lines because we never took out the number 2. By the way, no repainting going on. Here's the gold example. 1, 2, 3. We break above that number 2, so we get our plots. Target 1, target 2, and risk. We don't get those 1, 2, 3s here because we're looking for new highs or new lows. Here are those new lows. 1, 2. We take out that low. Here's our last 1, 2, 3. Go back down, TP1, TP2, and we're starting to get new counts over here. Delta Airlines, there's your long, there's your short, there's your short, there's your long. 5-minute NASDAQ, here's your short. Hit TP1, hit TP2, hit TP2 to the tick, which also happens to be a new session low. So we get a 1, 2, 3 bottom. We hook up, come back down, we come back up, TP1. We don't hit TP2, close enough for government work. You shouldn't have lost any money. We get a new session low. 1, 2, 3. We break above, just nips its little head there above the number 2. We come up, trace, come back up. We hit TP1. Notice that as we're waiting for TP2, we're starting to get new session highs. It clues us in that we may get ready to short this market. Well, we hit TP2, and then we hit a new fresh 1, 2, 3 top. We come down, trace up, 1, TP2, and we start making new session lows. So is it training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader, want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, if you just want to simplify your process, add a new strategy, a proven strategy to your toolbox. If you need a specific step-by-step plan and want to avoid learning this all on your own, this training could be for you. This is something anybody can do, even part-time. These are some chart examples. Daily chart of Cardinal Health. I used to plot 1, 2, 3s by hand every single day, and I did it for years. Going, well, this is a new 52-week low or 6-month low. Let me measure $45.13 up to $52.62. Let me do that math. Let me get my calculator. Okay, that's going to be $4.83. So let me add that. That should be my target. None of that. Nobody has time for that. You can't do that if you're trying to trade intraday as well. Plotting target 1, target 2, your risk. Let the power of technology, let MetaStock chart platforms do this for you. Google. How could you have taken advantage of these? You can buy put options. I like to sell bear call spreads right here. You can buy put options. I like to sell bear call spreads. Plotting 1, 2, 3s for you. Here's a 4-hour chart of the Canadian dollar. 233 tick chart of the E-mini S&P. If you'd like to scout, 233 tick chart, 610 tick chart. Flip through multiple charts, time frames, put them side by side. Why do all the work when you can let the power of machines do the work for you? Letting technology scan. Scan for tops, scan for bottoms. Put in your different variables, optionable, scan against the Russell, scan against the S&P, futures, Forex. I've got one monitor dedicated to running watch lists. I've got multiple watch lists, scanning across stocks, futures, currencies, daily, 4-hour, 1-hour, 10-minute. Showed you multiple examples of MetaStock, just like right here. We've also built it out for Thinkorswim, TradeStation, NinjaTrader 8, Wealth Charts, TradingView, and MetaTrader 4. Now, we know there's no real crystal ball in the market, but I like to view this as one that provides me with the process. I'm letting my platform scan the markets for me, locating that setup. I go to my platform for entry, and I manage that trade through exit. And you can start doing this rinse and repeat process every single day with the 3S code. So here's the offer you simply cannot refuse. We've opened up 25 slots where you're going to get the 3S code indicator, 3S code scanner, optimizer, access to weekly strategy and scan sessions, and my private Telegram room access, plus 3 incredible bonuses. You get all of this for a one-time single lifetime fee of $397. And the offer link is metastock.com/code. And I just put that into the chat box for you. Let's talk about what you're getting here before I answer your questions. You're going to get access to the 3S code indicator and scanner for MetaStock, Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, Wealth Charts. Full disclaimer, there is no scanner for TradingView. No scanner for TradingView. It's simply a limitation of that platform. But you get access to all platforms. You can load it on multiple platforms if you trade through multiple platforms if you wish. Now, you're also going to get access to my weekly strategy and scan sessions. These are every Thursday, 11 a.m. Eastern. They're all recorded. If you can't make it, no worries. You go back and access the members area for that recording. Next session is tomorrow. We talk about setups. We do a high-level analysis of key markets, talk about day trading, swing trading, using options, trading minis, micros, more. It's your chance to ask me questions in a live market environment while we look at live setups together. So the indicator and scanner, again, gives you a complete visual plot of the 1, 2, 3 top and bottom reversal areas with your entry, exit, stop, and targets. Customizable settings. You don't want red, you want hot magenta, fine. You don't want green, you want yellow, fine. You don't want a dot, you want a square, fine. You can scan for setups only, trigger only, or both. Scan for tops, bottoms, or both. Scan for day trade setups or swing setups, or both, across all instruments in all time frames. Also going to include the 3S Optimizer, where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests against various inputs and settings to find the best optimization parameters that fit your trading style. You can get the optimizer for Thinkorswim, TradingView, NinjaTrader, and TradeStation. And I'll be working with Jeff on building an optimizer for MetaStock. You add and edit multiple variables such as EMA crosses, trend EMAs, many options for you to choose from. Now with 3S Code Pro Package, I'm throwing in additional bonuses to make this a no-brainer. This chart pattern principle trading manual guide will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern. Bonus 2, my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using the 3S Code strategy. And then bonus 3, access to our private Telegram room channel. I post an idea every single day across different markets and time frames. This is included with this package. Take the free ideas, learn from them. These are some testimonials I receive, get these all the time. I don't ask for them, but it is extremely humbling to see that people are taking action. You're getting results because they take action. You will not get results if you do not take action, and these folks are doing so with the 3S Code. So who here is ready? Metastock.com/code. You can also call 800-882-3040. We've opened up 25 spots. Why 25? Because we want to make sure you get onboarded properly. If you need help with installation, you need help logging in, whatever it is, we have real live human beings that you can speak with. Yeah, want to ask me about the indicator, about a market, I will personally reply to you. We actually do care about our students and our members. We have a wonderful, thriving community. If you are, our tech team can do a remote session. If you need help, they can log into your computer, install it across any platforms. We are here to help you, okay? So that being said, I've got a couple minutes here, and before I turn it over back to Mr. Gibby, let me answer some of these questions here. Yes, it is a one-time lifetime fee. Any upgrades, enhancement that we decide to include, we'll make it available to you. Guys, anytime we do something, we got to do this across 7 platforms. So it's not cheap, but we don't pass that on to you. If we decide to add any kind of features or enhancements, those will be included. Just worked on the Netflix 3-minute chart. Awesome job, Marshall. Thank you, William. Thank you, Scott. Thank you, Nan, Don, Timothy. Congrats. Are trades automatically entered by the system, or does one have to enter it manually after a signal? So Walter, great question. It's not an EA, not a robot, so you will have to manually place it. So it's not placing trades for you. In fact, I don't recommend that. You worked at BK to fund college. Awesome. If a machine can do it, where is the edge? Not sure what you're talking about. 5-minute chart of MINM. Not sure what that means. Does it work on Indian markets? Yes. Doesn't matter if it's a US, UK, Indian, Canadian market. It's price action at the end of the day. So absolutely. Thanks, Kish. If you use a shorter time frame, say 10-minute chart, to use the previous day's chart when identifying the 1, 2, 3 setup, or should you only use the current day shorter time frame? So you have the ability to adjust the settings as far as your look back. And usually for an intraday chart, I'm looking for those session highs, session lows, but you can have the look back to say go back for the week session, the weekly high, weekly low. It really depends on how many opportunities you want to see. So that is available. Can the colors be changed? Yes, Jim, you can adjust the colors. Absolutely. What are my favorite time frames? So really, there's no best time frame. There's no best time frame, but I like the weekly, daily for swing. I like the 4-hour and the 1 hour. These trades can last. I could be in and out by the day, but I'm usually out. Those are within 2 to 3 days usually. I like, for day trading, I like the 1 and 2 minute. I also like the 5 and 10 minutes. I'll let Jeff talk about the MetaStock real-time subscription. All right, guys. So I think, Jeff, I got you back on track. There's a lot of questions here. If anybody has any other questions, and I want to get them back on track, and I see some that I missed, email support@tradestrading.com, support@tradestrading.com, and we'll be happy to answer. There's one more question. Can I share an example how to use options? Yes. So let's say that we have a 1, 2, 3 bottom, and I'm looking to go long. Let's say this is XYZ stock. There's a couple of different ways that you can do this. So you can buy call options, call debit spreads if you wish. Outright calls are called debits, or I like to go and sell bull put credit spreads out of the money. So let's say this is a $50 stock. I might come down here and sell a 45, 40 put spread. Depends on your expiration, how close, volatility, a lot of things that go into options, a lot of nuances there with options, but it is a reversal strategy. So you're looking to, the market's coming down. We're looking for a 1, 2, 3 bottom. So when the market is coming down, that means call premium is cheap. So this is a favorable thing for call buyers. And it means that put option premium is inflated. So this is a good thing for put sellers. All this fear premium right here is driving up put premiums. That is a good thing. We'll come in and sell that inflated premium. Or option buyers can buy cheap calls. So this is why we love this high probability strategy. Support at tradestrading.com or sales@metastock.com. All right, guys. I'm going to turn it back over to Jeff. Thanks again so much for having me. Good to see you again out in Vegas. Hope to see you soon. Take care. Always a wonderful event, and we'll talk soon. Thanks, Jeff.
Thank you, Silas. I really appreciate that. One of the things I promised, let me go ahead and kind of just get my screen back. Let's do this. Make me the presenter, share my screen. Silas, thanks for the great presentation. Really appreciate it. I love all the stuff that Silas actually includes as part of the package as well. He does do a really super good job with it. It includes the Telegram access. It includes any platform you want to install it on. He just does such a great job with it. It's such a great thing. One of the things I promised to show you, Gallo, is the scanning and show you some examples of some real-time charts. And I know we're right on time right now, but I'm going to show this anyway. So there you go. But I wanted to kind of give you an idea of some of the scanning and how you can really find some real-time charts. And I'll show you a couple of real-time charts as well. So right here, I've run the scans. There's basically 6 that are included. I ran the long versions of all the scans. And actually, there's more than that because you can go in and customize like a lot of the different variables. And there's custom scans you can run as well. So I think all in all, if there's a total of about 12 scans. And I love the customizability too. Like you can say, okay, I want at least 5 bars between 0.2 and 3, and I want it to be a pullback of at least this. You can really get in there, and if you're a nerd like me, really play with it, and it is really, really cool in terms of what you want to do. So, but the scans I decided to run to just show you is we've got the long setup. So if I'm looking for something that's kind of had the first point and the second point, and we're kind of haven't triggered in with that third point yet, that would be the scan that I'd run. So in this particular case, against the S&P 500, which is what I chose to run it against, all of these stocks are currently in a setup, meaning they're between 2 and 3. They haven't triggered into that trade yet.
Hey, Jeff, we're not seeing your screen, buddy. If you want to share your screen.
Okay, well, that'll help. Thank you for letting me know.
You bet.
Oh, I am not the presenter. There's your problem. Okay, so don't worry. I haven't shown too much. Here's the scans that we've run against the S&P 500, and this is the long setup. Okay, so this one will show you that anything that's between that second and third point. It hasn't triggered yet. It's just in the setup. And if we want to keep an eye on this, the way you would use this is if you're looking at Huntington Beach, your price right now, when we ran the scan at least, is 196.50, and if it hits 200, you're triggered it. That's the point at which you're going to get a buy signal. Okay, here's the long signal. So these are the ones that have signaled already. They would have signaled on the current bar. I ran this on a daily basis, and so these are all long setups. So in them, you can see in the scan report, you've got L3 Harris, you've got F5 Incorporated, Valero Energy, Capital One Finance, and I'm not going to read them all because we have time, but they are triggered, they're valid, and I can see without even opening the chart that if I wanted to buy Valero Energy, right now it's at 112. My initial target would be 116. My second target would be 123, and my stop loss would be 104. So I can see that just from this report without even looking at the screen. And we'll look at just 1 or 2 of these. The last thing is the position management, and this will just tell you everything on your list that's currently in a trade. So right now you can see here, Bank New York, all of these stocks, Moderna, all of these stocks are currently in 1, 2, 3 trades. You can see what the price is, what your targets are, and what your stop loss is. So I could look at any of these that I want to, but let's just look at a current example, which is what you wanted to look at, Gallo. So if I come in here and let's just do Bank Mellon. Actually, no, let me go up to the long signal. So these will have a signal on the bar today, right now. Let's go ahead and open up, I don't know, L3 Harris. Okay, gonna go ahead and open that up. I'll go ahead and apply the template real quick for 3S code. So don't pay any attention to that. Let's go ahead and do 3S code. I'll go ahead and apply that. And you can see right here, we've got the 1, 2, 3 pattern. Here you're triggering in, and you can see where your stop loss is. You can see where your 2 targets are as well. Okay. Here we had a 1, 2, 3 that we timed out with on time. Here we had a 1, 2, 3, and you hit your first target, but not the second target, and you targeted out with time. So you can kind of see a couple of the old examples as well. Here we had a break, actually a 1, 2, 3 that formed at the top. So there's some super current examples, Gallo, like you wanted to say. The other thing that I'm going to say is if you want more current examples, if you want to kind of see some more charts, maybe there's a couple of stocks that you like to trade and you want to see 3S code on them. Our sales team will be happy to pull any chart that you want to send it to you. You just have to get a hold of them, and you can do that by giving them a call at 800-882-3040. You can also visit them online at metastock.com/saleschat. So there you go. TL, if I was looking at comments, I would have seen that you couldn't see my screen. But I do thank Kelly for kind of popping in and showing that. So a really, really cool pattern. Before, some people call it a W pattern, which I believe is the Elliott wave terminology for it. I could be wrong on that. A 1, 2, 3 top, 1, 2, 3 bottom, M's and W's. Very, very classic pattern. And Silas has done such a good job of kind of setting up a method around it. So I want to reiterate what's included here. So because he includes so many really good bonuses. You get the Telegram room. This is a one-time cost, but you get unlimited access to his private Telegram room. You get the trading course, the cheat sheet, the 25 top patterns, the VIP support to help you get started, the strategies and scan sessions, access to all of this archives. This is for $300, right? $397 actually. And we'll even actually include, if you need it, a trial to MetaStock. So $497 is the normal price for this. $397 here at the event. That does include access to all of the platforms and all of the stuff that Silas talked about. You can sign up for it if you go to metastock.com/saleschat. You'll get it in MetaStock and all of the other platforms that are supported with it. You can do that at metastock.com/comp-promo, and you can give us a call at 800-882-3040. So you're welcome, Gallo. I promised I'd show you some charts. We did end up taking it. Well, we did start late too. It's not uncommon for us to run 6 minutes late. I don't have let me do this real quick. I do want to say thank you to one of our sponsors between the breaks. We'll go ahead and say thank you to AAII for being a sponsor of today's event. AAII is a great company, hugely good reputation. They've been doing their nonprofit since 1978. They've helped literally millions of traders. They do newsletters, training, all kinds of really good stuff, and we're happy to be partnered up with AAII. If you want to find out more about AAII, go to AAII.com. So I'm getting better at it. But that doesn't, AAII, it just doesn't roll off my tongue. I have to get better at saying that, but in any case. Our next presenter is Kelly Clement. Kelly is actually, this is official. Kelly is actually my boss, and he does a really, really good job. He's been working here at MetaStock for a ton of time, like the rest of us. He's a great presenter. He's going to talk and show you a lot about system testing and how you can implement it into your trading. So let's go ahead and bring you on here, Kelly, and let's get you started.
My official title is Jeff's boss. Is that what it came?
Well, president, right?
Yeah, president.
Yeah. Also, YouTube runner. Also,
YouTube
presenter.
runner.
Yeah.
That's my favorite one is YouTube runner.
Yeah, mine too. All right. Let's see. Let me go ahead and send you the title or the presentation. Okay. We can see it. Are you going to do this presentation standing?
I am going to do this presentation standing. I do like standing. Let's see. Let's make sure you're seeing the right screen here. You are seeing the right screen. All right. It sounds like I'm coming through okay as well.
Yep.
Well,
it's all you. Go.
Thank you so much, Jeff. Appreciate it. Well, the very first thing I want to do is actually thank Jeff for all his hard work that he puts into and putting these conferences together. Getting 45 speakers all lined up, all put together, have everything run smoothly is a huge feat, and Jeff does an amazing job at doing that. So that's my very first thing, is to thank Jeff for that. And then the second thing I actually want to mention is the quality of our sponsors that we have as well. I mean, if you think about Stocks and Commodities Magazine, the CMT organization, and the AAII actually being the sponsor of this conference, it shows you the quality that comes into this conference as well. So kudos to Jeff. Thank you to our sponsors. Each of our sponsors is amazing in their own right. So to have them each partner with us to put together this conference is a huge thing, and I'd like to thank them as well. So let's go ahead and jump into my presentation. As Jeff mentioned, my name is Kelly Clement. I've been with MetaStock for 20 years. It's nice to be out of the booth and actually in here presenting. I love talking about MetaStock. I love talking to traders. I love being as part of this. As we go through my presentation today, as with the other presenters, please feel free to ask questions, be engaged, Ask the questions you want to know the answers to so we can focus on that. So let's go ahead and jump in. And of course, I know you're tired of disclaimers, but it is an important part of these presentations. So I'm going to go ahead and read through ours. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. And of course, we always talk about that because there is risk in the market. If there wasn't risk in the market, we all wouldn't be here watching these and we'd just be making millions of dollars every day. So there is risk. Trade with money that you can afford to lose is one of the biggest things. I'm not here to tell you anything to buy or sell. I'm just here to show you how MetaStock works and how you could use it if you wanted to. So let's talk a little bit about MetaStock, who we are, what we do. Jeff's been alluding to this and talking about it, but MetaStock goes back to 1982. Think about that. I mean, that is 41 years in business. There are not a lot of software companies that you can name or mention that have been around for 40 years. IBM, they're one of them. You know, this goes back to the roots of early computers, is how long we've been in the technical analysis field. And it's a huge deal to be around that long and actually being part of it. So we're very proud of that. We're also proud of that award that we have from Stocks and Commodities, the readers of Stocks and Commodities, who have voted us the best software over the last 30 years, which again is another incredible feat to think about that. Voted by the readers of Stocks and Commodities, the best analytical software, 30 years straight. That's huge. So very proud of these things. But let's talk about what we're going to talk about today. So over the last few days, you've seen some different presentations on MetaStock. On Monday, Jeff talked about the RMO and the dynamic trading tools inside of MetaStock. Yesterday, Scott Brown talked about the forecaster. So what am I going to talk about today? Well, I'm going to be talking about charting, scanning, and back testing. I'm going to be showing some workflows that I really like that can help you identify powerful trade opportunities based off of those different things. There's obviously other tools. We have options analysis, we have global data, we have powerful news. And on Friday, Bobby will be talking about the news and some of the other analysis tools that we have as well. So stick around for that on Friday. But let's go ahead and jump in. And here's where I always like to start. If you've seen me present before, I talk about this quite a bit. The pilot's cockpit. And why would I want to show a pilot's cockpit when we're talking about trading? Well, the big thing I like to talk about is discipline. And some of the most disciplined people in their professions are pilots, because what they have to do is they have to get into the cockpit and they have to sit down and they have to go through a checklist before they can do anything. If they don't do that checklist, odds are something's going to go wrong. I travel a lot. I go around the world and I fly in a lot of planes, and I rely on those pilots to do that checklist every time I get on that plane. Now, I also like a show called Airplane Disasters. And you wonder why I would like a show called Airplane Disasters if I travel a lot. Well, the reason why I like it is because when they're looking at an airplane disaster, which is terrible, of course, but what happens is they will take that and they will actually go backwards from the accident and try to figure out what happened. And if it wasn't a mechanical issue, it was because the pilots weren't following something in their checklist. They weren't doing what they were supposed to be doing. And we can equate that to our trading, because if we're not following our rules that we set up when we trade, that's when things go wrong. And I've talked to traders all over the world. It's happened to me. I don't follow my rules, something goes wrong, and that's when we lose. Okay, so let's go ahead and talk about the specifics of what we're going to talk about today, because obviously trade identification is very, very important. How do we find those best trades to get into? So we're going to talk about today how to find the best stocks to trade, when I should get in and out of a trade, how to test your system before you spend your first trading dollar, and finally, how to add some clarity to your trading decisions. And I think kind of what happens is when we're looking at flying on instruments, I like it. Wow, Jack still has one of those computers. That's amazing. I haven't had one of those for a long time. If it still boots up and uses it, yeah, I bet the Smithsonian would love it. So we're going to talk about the four different types of indicators. So these are kind of the core different types of indicators. We have trending indicators, momentum indicators, volatility indicators, and volume indicators. Here's just some examples of those if you're not familiar with these. So if we're talking about trending indicators, we're talking about moving averages, MACD. If we're talking about momentum, we're talking about stochastics, RSI, volatility, Bollinger Bands, and average true range, volume, on balance volume, and Chaikin money flow. Okay, so those are just some examples. Now, when we open up a chart and we kind of look at it, a lot of us have our favorite indicators that we like to trade with. So it may be a MACD, it may be an RSI, it may be a stochastic. You may have a favorite indicator that you like to use. And the question is, well, if I'm looking at that indicator, how do I know if it actually works on the stock that I'm trading? Because every stock trades, or stock, future, Forex, crypto, each trade differently. They may trend, they may have volatility, they may be trading better on volume. So if I were to be looking right here, well, here I have a period of trend and momentum. Okay, here I have some volatility. So these things change. A stock doesn't always trade the same. It may trade differently on a 5-minute versus a 30-minute. So what we really want to do is we want to do a personality test with our stocks and our indicators to see if they perform well. Think of it like Match.com for stocks. Well, does this indicator work with this stock? Well, that's what we're going to talk a little bit about today. So we'll get into that in just a minute. So I'm going to talk about a couple of different workflows on how you can find your preferred indicators. And then secondly, if you have stocks or Forex or crypto or futures, whatever it is you trade, we're going to find how to identify the best indicators on those instruments. Okay, so two different things. And a little bit later on, I am going to ask for some symbols. So if you have some symbols, don't put them in quite yet because I don't want them to get lost. But think about a symbol that you'd like me to look at, test, and identify the best indicators for those particular securities. So we'll look at that in just a few minutes. All right, so let's go ahead and go over into MetaStock. Now, obviously, you've seen quite a bit of MetaStock over the last 2.5 days, and you'll see more of MetaStock over the next 3.5 days. So there's a lot going on, and I'm going to focus on a few key features here to show you kind of how some of these work. And what I want to do to start is I want to start with the MACD indicator. Now, I start with the MACD indicator because a lot of people know the MACD and they understand it a little bit. But let's just talk about it for just a moment if you don't. So here I have a standard candlestick chart. It could be a bar chart. It could be whatever you want to look at. But I'm going to start with putting the MACD indicator on this chart. And we're looking at Apple. We'll just put the standard MACD on here. And what we're going to do is talk about how the MACD generates signals for just a moment. So if I were to look at the MACD here, and I'm just going to grab a line. So what we're looking for with the MACD is we have what's called the signal line, and we have the MACD line, okay? So what we look for is we look for a crossing of these lines to generate signals. So right here would be a signal. We have a crossing of that signal line. Back here, we have a crossing of it. Here we have a crossing, and here we have a crossing. So you can see sometimes it's kind of hard to see if it's crossing because we're kind of really tight right there. We're really tight right there. Here we have a definite cross. So it's a little bit hard to tell. Now, if you're not familiar with the MACD and you want to know, some great things about MetaStock is you can actually always right-click on it. You can go to Help, and it will show you what the MACD is, how it works, how to interpret it, what the parameters of it are, everything about the MACD that you'd ever want to know, some of the math behind it, everything. Okay. Another simple way in MetaStock to know what something is doing is the expert advisor. So the expert advisor does what you'd think it does, is it gives you expert advice. I don't think I attached it. So let's go back here. Click OK, and there's our MACD. So now we can definitively see where the MACD is crossing and where it's generating those signals. So again, I can just see it right here. right here. So we can see this is a little choppy with the MACD. And the challenge with an indicator is saying, okay, well, I want to trade with the MACD, but how do I find opportunities? And this is a big thing that we've been seeing over the last few days, is the Explorer tool in MetaStock. So the Explorer, again, lets me take any indicator or any system and scan through a list of stocks to identify opportunities. Okay, so what I'm going to do here is I'm going to search for the MACD. And we have two different scans in here. We have the MACD expert system, which looks for buys and sells, or we have one that's just a MACD buy signal. Well, let's just do, for the moment, let's do a MACD buy. So we're only going to say, give me a current buy opportunity that's happening today. So we're going to look for that. And then, and this is a great feature of MetaStock 18, if you haven't seen this one before, if you wanted to, instead of scrolling through all the list of explorations that are built in, you can just type in MACD and it'll give you a match of everything with MACD in it. Now you can put it against any list of securities, futures, Forex, whatever it is you're trading. I'm going to use the S&P 500 as my example here. So it's going to scan through the S&P 500 and see what we're getting for buy opportunities. So let's go ahead and run an exploration here. So I'm looking at this on a daily basis. So it's looking at the daily bar today. I could do this on a 5-minute or a 30-minute or a 3-minute or a weekly, whatever your setup time frame is, you can use that as well. Okay, now what am I doing? I'm having the MACD buy signal look through the S&P 500, and we're going to generate a list. Now, the thing about the Explorer is it's my favorite tool in MetaStock, and you've heard that across the last few days. It's everybody's favorite tool. It's what MetaStock does so well, is identifying opportunities. But the funny thing is, it's my favorite tool, but I spend the least amount of time in it because it just quickly identifies opportunities. I don't have to spend a lot of time in it. So that's a great thing about this. So here's my list of 16 opportunities. We've rejected out 487 of them. We have 16 as opportunities. So we have Amazon, we have Aon, we have Charles River Labs, Charles Schwab, Chubb. What I could do is I could sit here and I could go through each of these securities. And okay, there's the buy signal on Amazon. There's the buy signal on Akami. Okay, there's the buy signal on Aon. Okay, and I could just sit here and I could go through all of these and try and figure out what the best one is. But there's a lot of opportunities here, and to really try and figure out which of these is the best opportunity to take would take me some time. I'd really have to sit down and analyze each of these charts individually to figure out which one is the best opportunity. What we're going to do instead is we're going to do our personality test. So we're going to actually just close this for a moment. We're going to close all these charts. And what we're going to do is go back in here to our Power Console, and we're going to do the system test. Now, what a system test is that personality test. This is what it allows us to say, okay, if I was going to take one of those 16 securities, and what we're going to do is run a hypothetical simulation over the last, say, 5 years, and see how well these stocks worked on the MACD. We're going to do a personality test. We're going to see if they match up. And if they do, it's going to give us a better confidence level than if it hadn't performed well. And I'll show you that in just a second. I just want to kind of set up what we're doing here. So again, I'm going to look for the MACD. And we're going to go ahead now and come down here to our list of instruments. Now, I don't want to do the whole S&P 500 because there's not all of these current buy signals. So if I come down to the Power Console here and come down in the very last bottom here, we have this last exploration results. Okay, so I'm going to select that. I'm going to put these 16 symbols now against the MACD expert system. I only looked for long trades, so I'm going to back test the long trades only. And I'm going to look over the last 5 years. Now, why would I want to look over the last 5 years? I mean, if you want to, you could do the last 6 months, you could do the last year, 3 years. I like to look at 5 years because it gives me a pretty good range of how it performs in different markets. So you can see how it performs in volatile markets. We have the COVID crash. We have all these different types of scenarios. And where are we right now? We're kind of choppy. So is it working well in a choppy market? It kind of lets me look at it that way. And that's why I test it that way. Okay, so let's go in here and let's go to now our trade options. I'm not going to spend a lot of time on this stuff because we have great training that teaches you how to do all this. So I just want to kind of show you some high level stuff and show you some quick ways to identify trades, because I need to set everything up, obviously, and then we're going to do some quick ones and show you how fast these workflows can be. Okay, so if I go to account here, it gives me the option of saying how my money is in my account and what I'm willing to risk. Okay, so let's just say here that, well, it looks like I have $1 million today. I don't really have $1 million in my trading account, but this is hypothetical. You could put that you have $10,000, $100, $1 million, 10 million, whatever it is you have in your trading account, you can put it in here. And this is important for system testing, because if I were to ask each of you, and don't answer this one, is if how much money do you have in your trading account? And everybody in this room is going to say something different. Okay, we'd have hundreds of responses, and we don't need to know that. That's your information. Keep that private, please. But everybody's going to be different. And then your risk tolerance is going to be different. So system testing is going to look different for everybody. So if I were to say here that I have $1 million and I'm willing to risk 10% of my equity, I'm willing to risk $100,000. Now, would I risk 10%? Probably not. But it makes the math easy for this demo, okay? So it's 100,000. If I go up and I double to $2 million, well, now I'm risking 200,000 as part of that 10%, okay? You could also say, well, I only trade 100 shares at a time, or 1,000 shares at a time, or 10,000 shares at a time. You can select that and put that in here as well. Or you can just say, I only trade $10,000 at a time. So you can be flexible here. If you trade futures, Forex, crypto, you'll use points only test is what you're going to use. Broker, this is where you'd put in if you pay commission. A lot of us don't pay commission here in the US anymore. I know some international markets, you still pay commission, and that's a real part of trading. So you would actually just put that in here, what you're paying for your commission, so it could be part of your system test as well. And then finally, this realistic market prices. What this means is, okay, I scanned for these buy signals today, but I'm probably going to wait until the market's closed before I get in. So what I'm doing is I'm actually getting in on the next bar. Okay, so that's kind of what that means. So let's go ahead and click OK here, and let's get into the fun stuff. So we're going to go ahead and run our system test. It's going to again put the MACD against those 16 stocks, and again, look how fast that was. That saved me hours of work right there. So I went through 500 securities, I tested these all, and now I have a result. So let's look at it and let's see what it's actually telling us here. So these are our different securities. They match up with the IDs down here. So if I were to expand this out a little bit, you can see number 1 is Akami, and number 16 is Zions Bank Corp. But let's rank this on net profit here. So I can see just from this as a start that Solar Edge was the best performing stock over that 5-year period. Okay, so I know that it performed well over that 5-year period. I know that Equifax was my next one, Aon, and so forth and down. Now, we can't just really say, okay, well, hey, this looked good, I'm going to trade that one. Okay, that's not, we need to dive into this just a little bit more to get some more information out of it. So what I'm going to do, excuse me, I'm going to just close my email back there because it's beeping at me. And what we're going to do is we're going to talk about how to understand if these have a good personality match. Okay, so over that 5-year period, I had 150,000 in profit, 15% gain, 187 trades. Now this one's always interesting to me: trade profit loss. So we had 89 winners, 98 losers. But it was my most profitable one. I had more losers than I had winners. Well, what does that really tell me? Well, it tells me that my winners are big and my losers are small. So let's jump in and let's analyze that just a little bit. Okay, so here's some of that same information. Again, I'm not gonna, there's so much information in here. There's only a few key things that I really look at when I'm system testing, and that's really where I want to focus with you, are the key things I look at. So I look at this. So my profitable trades, I had 89. My average profit was about 7,200. My highest profit was 51,000, and my lowest profit was about 20 bucks. Okay, my average loss was about 5,000. Where here was my average profit was 7,200, highest loss 23,000, and lowest loss about 100. Now, here's something kind of important to think. Okay, when I did this personality test, I did the MACD, right? And what I said is I want to get into a trade when the MACD triggers a buy signal, and it's going to wait until it triggers a sell signal to get me out. Now that may happen where the stock goes up and it comes down, back way down below where I bought it. And that happens with the MACD because it trends and may come back down. And you've all seen that in charts, right? So the way that the system tester here has done this is it just said, get in when it says buy, get out when it says sell. Now, is that really the way we trade? Hopefully not, because what we want to be doing in our trading is actually using stops, protecting our profits. So if we have that big run, we want to be protecting that profit as we go in. And if we have a huge drawdown, we want to be getting out before that happens. And you can put that into the system tester, your stops. In this example, we're not going to do that, but we have great training and great support that shows you how to do that. I like to look at it this way because it just gives me a kind of a raw look at how the system works overall. Okay. Now, again, tons and tons of information and data here. We're not going to look at it all. We're going to look at one other key thing here. So here's all the orders that were placed. Here's all the positions. But this is the one that's the most important to me. This is what we call the equity line. So the equity line is basically what our money has done over time. Okay, so this was my initial equity back here, that $1 million. And we can see here, this is our 5-year period. And now I can look at what my money has done over this 5-year period. Okay, here, it trended very, very well. We made lots of money and very little drawdown. Now, drawdown is when we have profit or money and we lose it. That money's going down, we're drawing down. Okay. Then we have some of that drawdown. It's relatively flat for a while. And these flat periods where you see it is we're not in a trade. Okay. So here, what's happening in the most recent market with this particular one? It's drawing down. So it's been our best performer over the last 5 years, but right now, it's not performing well. It doesn't have that personality match. Okay, so that's what we want to avoid. So that's why looking at this equity line is so important. And what I do is when I system test, I will just jump right in, typically look at the equity line and get a feel for how it's performing. Okay, so here, this one has been more consistent. It's been moving upwards more on a steady basis. So this one looks like it performs better, even though it's the second best performer, it's performed better consistently. And that's what I like to see. Okay, so that was Equifax. Let's look at Aon. Okay, so now to me, this is kind of almost the ideal equity line. What I like to see is this smooth, consistent move up over time. Okay, so now, okay, and this is great now. Okay, I have found one that I like. Does that guarantee that it's going to work well moving forward? No. Hindsight's 20/20, and that's kind of a downfall, I guess you would say, of system testing is it's historic. It goes back historic. But what we're trying to do is say, well, if it's worked consistently well in the past, well, then odds are it's going to move and perform well in the future. Let's just look at one or two more, and then we'll go back and look at the chart of Aon. And I'd like you to think about this and say, well, if I saw that equity line, what would I do? Okay, so this one, we see this, but it's just kind of moves flat. I don't really, it doesn't scream to me. And it's okay if something doesn't work, skip it, right? There's other fish in the sea, there's other opportunities. And that's one of the big things about trading is don't try and force yourself into a trade. Try to find those best trades. Okay, let's look at the bottom performing one. Let's look at Zion. Okay, so what's Zion doing with the MACD right now? It is certainly not trending. It does not have a personality match at all, does it? Okay, so let's take a different approach to this. So let's close this and let's go back to the Explorer and let's try a different indicator, because this can work across any kind of classic indicator or put them in. And as Jeff said in chat there, if you have questions, certainly feel free to ask them. And let's put the RSI against the same S&P 500. And let's see what kind of results we get for opportunities right now. And again, nothing I'm saying should be construed as a I should trade this or I should take this trade. I'm just demonstrating to you again how the software works. So keep that in mind. Okay, so on the RSI, we're rejecting out about 98%. And this time, we don't even need to look at the charts. We can just go right to the system test and jump in and go, okay, well, let's go to the system test. Let's find the RSI. And this is how quickly you can do this once you have everything. And let's scan for the last exploration result there. Let's go long and short, since that's what we looked for this time. And there's our results. And we can see here that IBM was our best performing one over that time. Let's look at our equity line. And that is a pretty good looking equity line. So I went within 30 seconds there, I went from scanning, identifying an opportunity, a list of opportunities, backtesting, and finding one that looks like it may be a good opportunity. And again, don't trade IBM just because of this, make your own decisions. But that's how easy this workflow can be to identify opportunities. Instead of taking hours to do all this work, well, I've just made it in 30 seconds. So if I look at this now, okay, so this was our next performing one. If I were to look at this one versus IBM on what my money has done over time, which would you guys prefer to do? Let's look at, so IBM or ANSS, what do you think? Which one would you choose? Because that equity line can quickly show you how well it's performed. Now this one's interesting. I like this one because it tells us a story of different markets. Okay, we started here with our million. We had a lot of drawdown. It was not a trending stock, but what's it doing these days? It's actually trending quite a bit. So this is actually one to go and look at. Okay, so what we could do, let's go back to IBM here. So now that I've identified IBM, I could come up here, I could look at the chart. And let's just put our smart chart on there. And then I could just grab my RSI, or I could put my RSI expert on, and then I would have that trade to follow. So there's my RSI. Okay, and you can see there it is, it's crossing greater than 30, identifying that opportunity. Okay, so good. This is how you can use it for setups and doing that. So that's one workflow. Now let's talk about the other workflow for just a minute. And here's where I need some symbols. So go ahead and put some chart symbols into chat, please. Because I like to look at it this way. You know, obviously I'm scanning the market, what's going on today, we're seeing what's happening, but you guys have things that you like to look at, what you may be trading. So let's see what we can identify as opportunity or the best indicators for what you are actually looking at. So I'm going to give you just a second to put some instruments here. Now these could be stocks, these could be commodities, these could be crypto, whatever it is you want to look at. Axon. Okay, so BB was our first one there with Axon. let's actually pull up Axon as a chart first. Let's look at it. Okay. Oop, we don't need A, we just need Axon. Okay, and we'll do a couple of these. Oh, hey, BB's like throwing them out. He's like, let's go. All right, so here's Axon. Okay, we have this huge drop today going on Axon. So what we want to do now, what we're going to do for our other workflow is, what we want to do is say, well, I like to trade Axon, but what indicators actually work best on Axon? What should I be using to trade Axon? So what we're going to do is take a little bit of a different approach to it. And we're going to just go to the system tester. And what I'm going to do is just type in Axon up here. And what we're going to do is, let's start with some of the just classic indicators. So let's grab RSI. Let's grab the stochastic RSI. Let's do MACD. Let's do, let's just do a standard stochastic. Okay, so I've got 4 systems there. So I'm going to take these 4 systems and put them against Axon to see which one performs the best. So let's go ahead and run our system tests there. Okay, let's go ahead and pop that open. Okay, so I can see that all of these systems were positive trading Axon. So let's rank on percent gain here. And it tells me that the MACD has been the most efficient over that five-year period. I did the 5-year period again. So 11% gain, 245 trades, 131 winners, 114 losers. Let's look at that equity line. Okay, so what does Axon do? It trends, then it doesn't trend. Okay, it trends and then it doesn't trend. It trends and then it doesn't trend. So right now, what is Axon doing? It is not trending. Okay, so this is we maybe don't want to use it on that right now. So let's maybe look at the stochastic because it is not trending right now. Okay, again, these choppy ones tell us a story over multiple markets. But what's it doing right now? It is trending. So our equity line is trending up. We are having this consistent kind of move. All right, so that tells me a little bit better story. Let's look at the stochastic RSI. And that's trending as well. Now, if you only want to look at how it's doing maybe more in recent markets, let's just do the last 6 months. Let's see how it's performed. And this, if you're more of a short-term trader, this may help you take a look at it in a little bit different light. Okay, so the stochastic oscillator down here, it didn't have any trades during that time. RSI only had 1 trade in the last 6 months. So this kind of gives us a limited view. Oh, I did that across those 16 stocks, excuse me. Let me put Axon back in. Okay, let's just look at Axon over the last 6 months. Okay, again, stochastic had no trades. Let's look at just the MACD over the last 6 months. And you can see that kind of loss. It's kind of bumped up, it's down, it's back out. So we'd probably avoid that. Stochastic RSI over the last 6 months, we have been making money with it. So between the two, that's what I'd look at. Okay, let's take another one of these and let's do a different way of systems here. Okay, so next, let's see, XOM is our next one. This time I'm going to take what we call the 80 performance systems in MetaStock. So these are new to MetaStock 18. We included these for free. It was an add-on that we used to sell for $300 called the Performance Systems Plus, and now they're just all included in MetaStock. So these all have scans, experts, and system tests for them. They're all also open source code, so you can look at them as well. So we're just going to select those 80. We're going to put them against XOM, and let's look at the last year on this. Actually, let's do the last 2 years. Okay, and let's go ahead and run that system test. And this is why system testing is so cool again right here, because what it does is it helps us identify stocks that match the personality of the trading system, because every trading system is going to be different and they all are going to trade differently on different stocks. So if I were to look at any of these on a 5-minute versus the daily, you're going to have different results. And this is why backtesting is so important. Okay, so I looked over a 2-year period. Okay, we had the PS derivative moving average system was our top performer, but look how many trades it had. It's only traded once over the last 2 years. So does that match your trading style? Well, I guess if you're in a trade and it keeps you in a trade for a long time, that's okay, right? We'll keep taking those big profit runs. And there's our equity line. So it's been in that trade the whole time, just kind of bouncing up and down. It hasn't triggered a stop yet. It's still in that trade. So if that matches your personality of your trading style, all the better. Let's look at the next one. It's traded 36 times over 2 years. Okay, there's our equity line. And how's it performing? It's performing pretty well. So we like that as well. Let's go and let's look at the last security here. So GDX. Okay, let's go ahead and run our test. Okay, so this time we have the relative volatility index was our best performing one over the last 2 years. And I like that equity line a lot. That's a good looking equity line. Let's see. We're getting the Rio on the FTSE 100. So I think that would be the Rio, the London one. Let's take a look. Okay. Yep. So we're going to look at Rio on the London Stock Exchange, not the one on the U.S. Stock Exchange for that that one. So the reason why I'm putting .L is because it's on the London Stock Exchange. So that's why I'm putting .L. So we're going to do that against those 80 systems. Now, what I'm going to show you next after we figure out which one is the best one is how to kind of follow the trade after that. I haven't done that yet. So let's go ahead and let's look at that. Let's rank on net profit. Okay, so here the performance system impulse meter was the best performing system. And let's see what our equity line looks like. Okay, nice, fairly consistent. We've had a little pops and bumps along here, but fairly consistent over the last 2 years. So let's actually go and open up Rio.L, and I need to remember the name of the system there. So I think it was the impulse meter. Yeah, impulse meter. Okay, so let's go back here. Let's close this. So now that I have my system that I'm looking to use, we can go to Rio.L. And what I'm going to do is look for that system now. So let's go down. Let's find the impulse meter. And the thing that's a little bit different about this workflow is I know that it works well over time, but it doesn't necessarily tell me that I have a current buy opportunity. So if I were to look at this, I could look at all these buy and sell signals, but I don't have a current signal with it because I've only just tested to see how it performs. So between the two, so if you love trading Rio, and you're trying to find your system, this looked like the best system, but now I'm waiting for an opportunity to trade it. Whereas with the first workflow, we were able to scan the market and we were able to actually identify whether it was a good opportunity. Okay. So I just want to show you one other thing as well. So those are our two core workflows. One of the other things I like to show, since we have a few minutes, is let's actually go back here. I'm going to close this and let's close all these charts. And what I like to talk about is, does the market agree with you? So it's a big question. Okay, I'm about to make a decision. How can I tell if the market agrees with me on what I'm trading and what I'm looking at? Okay, so let's go ahead and go back here to our Explorer. And let's do the stochastic this time. Okay, we'll do the stochastic. We're going to go ahead and scan the market. And let's see what kind of results we get. And then we'll see if the market agrees with us. Okay, we're rejecting about 98%. Once again, this is again what's great. I don't have to spend a lot of time doing this. Okay, I've got 3 buys. I've got about 7 sells. Let's go ahead and test and let's see which one is our preferred one. So let's clear out all these. All right, we're just going to do that stochastic. Oh, I did not unselect everything before I did that. Let's unselect everything and let's just do stochastic again. Okay, and let's do those exploration results. Okay, well, hey, not a great example there because nothing's triggering an opportunity there. Nothing performed well using the stochastic on the group of stocks. And people will say, hey, well, it doesn't work. Nothing works well. Well, it does work because it's telling us what to avoid. Okay, so let's actually go back here and let's go back to the Explorer and let's go back to our MACD test because I think we had some in there. So we'll just go down to our MACD buy. So I can go back to any one that I've run a test on, go back to report. And I think, I'm just going off of memory here, I think that, let's just look at Amazon. Okay, so let's say Amazon here is triggering our buy opportunity as the one that we like the most. Okay, so how can I tell if the market agrees with me? And a great way of doing that, here, let's actually put on our expert advisor here. Okay, so here we have our buy signal. How do I know that the market agrees with what we're looking at here? And a great way to do that is with options. Options tell us a story of what's going on. Even if you don't trade options, which I don't, I'm primarily equity and ETF is what I look at, but I like to look at the options because they tell me a story, okay? So if I come in here and I right click and I go to option scope, so option scope is our options analysis tool that is in MetaStock, but it has a fairly unique feature here. And it's this individual call put ratio, if you will, or sentiment indicator of Amazon. So what it's doing is it's looking at what I have open here, and then it's saying, okay, well, how many calls are, what's the volume on the calls? What's the open interest on the calls? What's the volume on the puts? And what is the volume on the open interest on the puts? So I can see that the call, I have a lot more volume on calls than I do on puts. So there's an expectation of price going up. Excuse me. People are buying the call options. So we're seeing that going up. And there's a lot more open interest on the call side as well. So the market agrees with that buy signal, and people have a lot of there's a lot of volume on the option side and a lot of open interest on the call side as well versus the put side. I could also go in if I were looking at this and I see, okay, my price is at 109 right now. I can see what the market's targeting as well. So let's look at the top volume right now. Let's see, I missed the blink. Okay, so it'll blink at you here when you click this top, and it'll tell you what people are looking at. So 110 is where the top option is for Amazon. So we're at 109. Now what I am looking at when I'm looking at this summation is I am looking at the current ones just coming up and expiring here. So let's maybe take this down a little bit, and let's look at maybe June. Let's look at the June quarterly instead. just to kind of take a further out approach to it, because that's the one that's expiring on May 12th. So that's 2 days out. So of course it's going to be very close to the price. Okay, so let's go June 23. Let's take off June 2nd. Okay, so we can now see what this one is looking like, the June 23, 2023. And we don't have a lot going on there. I think, oh, there we go. Okay, so we can see, again, a lot of interest on the call side versus the put side. Let's go to our top option. And that is 120. So this can kind of help us look at a little bit more of a target price as well. So where are people putting that open interest? Where is the volume? So our volume is at the 120. Where's our open interest? It's also at the 120. So it's an easy way to just quickly go, oh, okay, well, what's the market think? Where does the market think that this is going? So tying it into options is a huge boost to be able to look at these kinds of things. Now, obviously, I showed you a lot of different things today. I showed you how to scan the market, which again, my favorite tool, I love it. How to back test it, how to do that personality test. And then finally, how you could tie options into it a little bit. Again, you don't even need to trade options, but looking at the options data is a critical thing because it really can tie in a lot. So I really like this sentiment indicator inside of the option scope. You don't really need to look at all this other data. Just looking at this helps you understand if the market agrees with you. Even if you're not doing any of the other workflows, understanding if the market agrees with you is a huge thing. So let's talk about MetaStock a little bit more. So there was a question that came up. Well, what is a MetaStock real-time subscription? What is a MetaStock end-of-day subscription? And so there's actually two different versions of MetaStock. There's MetaStock DC that gets you both versions of MetaStock include all the tools I've shown you today. And it just depends on the data that you get, okay? So the MetaStock DC or daily charts allows you to do all the same analysis we've just done on a daily, weekly, monthly, quarterly, yearly basis. So at the end of the day, you're gonna get the data, you can come in, you can scan the market, look for buy and sell opportunities, and then place your trade opportunities for the next day. MetaStock RT, or real time, is basically just that. It's a real-time version of the software. You can look at tick by tick, 1 minute, 5 minute, 30 minute, 60 minute. So you can scan the market on a 30-minute basis or a 2-minute basis, whatever time frame you like to trade. You can also back test in those time frames. So it's a difference between looking at the end of day or real-time data. Okay, so the end of day starts at $59 a month. That includes stocks, futures, and indices data end of day for a particular region. So let's say North America is $69 a month because it actually includes end of day options as well. Other markets globally at $59 a month. The real time starts at $265 a month plus exchange fees and gets you all that. Now on either of those versions, you can get let me mute my phone here. You can get a 3-for-1 trial. So if you go to metastock.com/conf promo or go to metastock.com/sales chat, you can take advantage of that 3-for-1 offer where you pay for the first month, get the second and third month for free, and there's no obligation to continue with it. It's actually a great opportunity to try MetaStock. With that, you also get free unlimited support. So our support staff will help you every step of the way, and that's free. They're right here in our office. We have more support reps than we do have sales reps and marketing combined, which we're very proud of. Support is a hallmark of what we do here. A lot of people will say, I can't go anywhere else because MetaStock support is just so incredible. And I think I could probably say it in the room here. Has anybody talked to our support desk before here? Jeff just mentioned that just in chat. And I don't have any problem asking that because people will say, yep, I love MetaStock chat. And then Jeff's laughing because we just said it at the same time. We always do that. If you've talked to our support staff, yeah, give us your feedback. We love hearing it because they get ranked consistently so high. We give you free unlimited access to recorded training and then also free white glove installation, where what that is, they will help get on your computer, help you install MetaStock, and then they'll talk to you about what it is you want to accomplish with MetaStock. They'll help you set up the charts your charts the way you want to see them. They'll show you how to scan the market if you want. They'll show you how to back test. They'll show you how to forecast. Whatever it is that you want to do, they will help you get it set up. So it really is a great opportunity to try MetaStock. Jeff's going to talk more about some other systems and tools in MetaStock on Saturday. Bobby's going to talk about another aspect of our real-time platform on Friday. So there's a lot to MetaStock, but don't let that worry you, because you're going to find the things that work for you, and then you're going to be able to grow with it. It's a program that's going to grow with you over time and not limit you in any way. And people always tell us that, you know, I learn things about MetaStock I can do just about every day, and that's for a reason, because it's there to grow with you and allow you to do more and more. If there's any, Kishore is asking, what is white glove installation? Again, so that's them MetaStock support helping you one-on-one. They'll schedule a time with you. They'll call you. They'll help you they'll get on your computer with you. They'll help you install MetaStock, walk you through what you want to do with MetaStock, and they'll spend 10 minutes with you or 2 hours with you, whatever you need to help you get up and running with MetaStock in the best and most efficient way. And if there's any other questions, you're welcome to email me. My email address is kelly.clement@metastock.com. I'll put that in the chat as well. And I'd love to hear from people. I'd love to hear your feedback. I know Jeff's given his email a few times. But Jeff, let me go ahead and get it back to you. I'm a minute over. I apologize. Superb. Thank you, Kishore. I appreciate the feedback on that.
Yeah, thank you. I just want to say, while I'm kind of taking control back, good job, Kelly. Also,
thank you, sir.
People love that white glove treatment. And I agree with Kelly. MetaStock's a great program. But I think one of our biggest, let's see, make presenter, me, show my screen. Okay, we're all good there. One of the biggest thing that you have with MetaStock, I hear this all the time, is our support desk. I mean, how often have you called a support desk and felt really good about the experience that you wanted to give them a 5-star rating? But we get 100% positive reviews many weeks. It happens a lot, and they do a really good job. So I think there's a lot to be said for that too. The white glove installation support, where somebody actually sit down with you and talk to you about how to use MetaStock to get the best out of it for you, that's awesome too. I mean, like, where else do you get just a free 2-hour consult like that? Probably 2-hour consult and up to 2-hour consults. So there you go. Surrender says, thanks, Kelly. MetaStock along with Zenith is a powerful market analysis and backtesting platform with a good team behind it. I do think there's a bit of a, it's nice. It's nice to have such a good team in place. So in any case, let's go ahead and kind of just 3-month trial. If you buy 1 month, you'll get the 2nd and 3rd month for free. That'll give you our latest MetaStock 18 with the brand new charting engine. All those performance systems that Kelly was talking about, you're going to get data. You're going to get the white glove installation support. You'll get a free copy of our Unleash the Power of MetaStock, which is going to help you get started. 800-882-3040. You can go to the link that I put in the chat, metastock.com/sales-chat, to chat with somebody, or metastock.com/comp-promo. So very much thank Kelly for kind of spending an hour to kind of go through the system testing. It's a very cool tool, even though we all have a favorite. We know our favorite is the scanner. Anyway, let's go ahead and, well, let's talk a little bit about stocks and commodities. I think it's been a few sessions. Stocks and commodities, we want to thank them for their support. They do a great magazine. 17,000 articles they've done over the years. I've been publishing actively since 1982. If you do that extended trial for MetaStock, you'll get that 5-month subscription for free from Stocks and Commodities. They're just going to give it to you. So go ahead and take advantage of that. And you can also get a really good magazine delivered to you for 5 months straight for free, no additional cost. So anyway, also a real quick thanks to CMT Association and AAII. We're very happy to have them as sponsors as well. We're going to talk to Ed Downs next. Ed is a very smart guy. He's somebody that's been working with MetaStock for as long as I've been an employee, which you know now is 26 years. So I remember when we started, he was selling a bunch of trading methodologies that he created for MetaStock. And what he's going to talk about right now is an artificial intelligence or an AI tool that's going to be very helpful for That's great. AI is a big thing right now, but Ed's been doing it for a while. He knows what he's talking about when it comes to AI. Ed, how are you doing? I can see your mic's on.
Yes, live and kicking.
Very good. Well, welcome. We've been having a good day today.
This is so awesome. You guys do this. It's great to see Kelly again, just before me. That was fantastic. Thanks, Kelly. Great presentation.
Yeah, he did a good job, for sure.
Yeah.
I can see you. I'm waiting to see your screen.
Oh, my screen. Well, hey.
Yeah. We should. I do think we should get an updated photo of you. You look so distinguished these days.
Well, thank you. I do appreciate the high school picture, though. That really does make me feel good.
Yeah. Anyway, let's see. I can see you. I can hear you. I'm gonna get out of the way. Your turn.
Wow. Okay. Just dive right in. All right. Well, hey, again, thank you so much for having me on for another summit. I love doing these things. I look forward to it. And for a whole lot of reasons. I mean, Jeff kind of mentioned our history goes back way back, the Wayback Machine, 1990 or 91 or around there. And just a really quick version of who I am and what we do. I founded Nirvana Systems, not before the rock band, I will say, but Nirvana Systems in '87. And the reason I did it is I was an engineer and I wanted to work on automating stuff. I was trading and I just thought that the computer could do more of the work for me. And so I started doing that. And we built these utilities that could run other software from the outside. I thought that was the best way, to automate trading software. And so the first ones we targeted was MetaStock. And so we made some utilities that drove MetaStock and made it do things like, run all the system tests, collect all the information from them, tabulate them, and slice and dice and all that stuff. And so I actually went to Salt Lake City and visited with Steve Akalis, the founder of Equus International at that time. And it was a great trip. Loved it. He was so fantastic. And everybody there was really great. Jeffrey, everybody. And he said, yeah, we'd love to provide those to our customers. And so we formed a relationship and started promoting those utilities. They're called the Director Series. And then we were selling each other's products as well. They were selling ours, we were selling theirs. So we kind of worked together in a marketing team for a while. And it was great, a lot of fun. And a little bit later, of course, I'm evolving Nirvana Systems, right, and trying to make more automated stuff. And in about 95, I was looking at the state of the art out there and realized that there really wasn't anything going on with artificial intelligence for trading. And so I said, let's do it. So we built a neural network, a genetic algorithm, and some other AI-based tools with technology from that time. And it was actually fairly far along. Neural networks have not changed that much in all that time, believe it or not. They're still the basic same principle. And so we did all that and started providing them, promoting them, and of course other forms of automation. So fast forward to 2019, and I got this other harebrained idea that, hey, we've got this AI technology. Why don't we package that up so it can attach to other programs like MetaStock? And so I called Jeffrey and said, hey, I've got this AI thing. What do you think? You want to provide it for your users? And he loved the idea, was very cordial and helpful. And it was so much fun. We've done 5 of these things. If you go in the MetaStock store, you're going to find five products that we have created specifically really for MetaStock and sort of tailored for MetaStock. And so they're all there. But the crown jewel is what I'm going to talk about today. It's our AI for MetaStock module. And you see the name Fulgent. And the reason that's there is because when we did this, I said, let's make a separate little company over here whose job it is to get our artificial intelligence out into the world. Fulgent comes from the Latin and it means brilliant. So, hey, it's great. So Fulgent Technologies is actually sort of the entity, the owner, but it's Nirvana Systems, my company, built all this stuff going way back. And many versions later, here we are. So I'm going to talk today about our AI, and I have a mission, though. I really enjoy teaching. I've taught probably everything I've ever done. In fact, I've been teaching a 14-year-old to fly my plane. He's almost about to land it. He's had 3 lessons, so I love doing that. It's fun. So I love teaching and bringing people up to speed on whatever it is I do. And so one of the things I do in my webinars is I want to give you information that will help you in this field, because there's a lot of hype right now about AI out there. You've seen it. It's all over the place. My goodness, Chat GPT, what amazing stuff. I use it every day. It's fun. But for trading, it's kind of a muddy deal. I mean, people are making things and claiming it to be AI and all this. You see that a lot. but there's certain things you need to look for to really determine whether you're really, you're seeing something that you can use that really actually is AI. Because it's easy to say it is. And some people just think any computer program is AI, and not so. So we're going to today talk about this AI technology, and of course, we're going to look at ours, of course. But I want to talk about, can AI really help you? And really get into that. And I'm sure if you've seen things, maybe so, maybe not, you may be confused about it. So I want to help you with that. And then also how you can create your own personal AI with your stuff. And that's in MetaStock. That is the grand finale of the webinars, to show you how you do that in our product. If you're interested in doing it, I just think it's just so cool. I have the most amazing developers here. They made all this stuff. I know enough programming to be dangerous. So I said, you guys make it. I'm just going to go tell people about it. Okay. So let's go ahead and dive in here. And I do have, there's on the website, we do have a little free thing. If you go to fulgent.ai and go to the MetaStock tab under platforms, and you'll see there's a report that we did trading options using this AI. It's the thing I have out there that you can go look at if you want to, and it's just a download. So that's there, fulgent.ai. So I just wanted to mention that. Okay, let's dive in, shall we? All right, there it is. Click that. Okay. So can AI be used to trade more profitably? We've seen lots of ways you can trade, lots of great ways, fantastic plugins for MetaStock. I mean, there's so many great things, great different approaches to trading. And so you want to talk about using AI for this. If you look on YouTube and just search AI for trading, you're going to find all these things. And they have different claims. I made an AI robot that traded Apple, and made a gazillion last couple of days or something. You'll see these claims out there. What you won't see is something like I'm going to show you on the next slide here. Of all these YouTube videos, go through, watch them, read them, and what you will not see is performance tests. You won't see someone say, I took my AI and I tested over 5 years of data. Here's the trades. Here's the test. Here's how it worked out. Well, you can performance test our stuff in MetaStock. And so when I ran this against a bunch of the kind of the stock systems that are in there, of course, it generated quite a bit more profit. And you can just see here's a chart that you're going to see more of in a minute with signals that are generated by the AI. And of course, I pick a really great one, but they all are in the 60-70% accurate zone. So they tend to look like this, where all these signals are just like really working great. So you just won't see that if you go out there and look. So that's the first thing. You want to ask, well, where's the proof? Show me the beef. What do you got? And see what they say about that. Okay, let's talk about AI itself. So modern neural networks are used for a lot of things. The most common usage that has been around for a while is called classification, where you show it a bunch of pictures of something, and you say, this is a cat. You show it a bunch of cats, and then you want to show it out of sample pictures that are different cats and see if it can recognize them. And so if we look at that process, here's a neural network right here, and it's formed by what we call nodes, and each node has a connection to every other node downstream from it. And so what happens is this is a picture that has been serialized. And okay, so you got the cat there, and you gotta take a shot and feed it in. So every pixel, it just rasters it like across like this on the picture, and sends it into the neural network. And what's happening is the values are then given to the first input layer. That's what that's called. And then the weights are adjusted inside here, and they keep getting adjusted until, if you say that's a cat, it's going to say, okay, it's going to remember that. And after a while, when you look at new ones, it's going to say, okay, yeah, I think that's a cat. And it'll give you a certainty value, like 0.9, 0.8, whatever it is. And okay, so that's what it does. So using this technology, you can recognize cancer, different things. And of course, it's used in other ways besides classification. ChatGPT uses neural networks. Self-driving cars use neural networks, and they're learned to see certain aspects, of a problem. And I don't know how many are in ChatGPT, probably millions, but it's the new thing, so I got to talk about it. But so that's how that works for classification. And there's other forms of AI, but that's the most common. So can we just do this with the market? Can we show the AI pictures of the market? Okay, here's one. I'm going to show you like a million of these pictures, do the same thing, and figure out what a good chart looks like when I should buy or sell. Well, unfortunately, not every market looks the same. I mean, cats look like cats, dogs look like dogs, but a profitable trade in the market is going to look different every single time. And that's why we use indicators, because it's a fuzzy thing. It's emotional. It's all these things going on. So, you know, if you're going to try to do that, good luck. You spend a long time, and people have tried this. You'll see YouTube, you know, people feeding price information into a neural network. Sorry, it just doesn't work because it's too complicated. Markets are way too complex for this. Okay, now you know where I'm going with this. I guess you can use AI. We're getting to that. Okay, but this is typically what people try to do, and it just doesn't work. All right, so you have to use indicators now rather than the chart, right? You want to feed it indicator measurements, and people go, oh, that's reasonable. Feed it moving average values, whatever. Here, the problem is there's like, just in MetaStock, the ones that you have access to, there's like over 100 of them. Okay, so which ones do you use? What's worse than that? Let's pick one of them. Pick relative strength index. Everybody's used RSI. I kind of like the RSI 7 myself. I'm trading short-term swings. However, there's a lot of RSIs, all these different periodicities. 14 is a common one that's used. Then there's all the interpretations. My goodness. I mean, it just, you know, RSI 14. So if you take the RSI 14, you can say, well, when it goes through 0, I'm going to buy or sell. When it's above or below 20 or 80, you know, or 70 or 30 and 70, I think are the two levels people use. That means when it crosses that or is above or below it, that means bullish or bearish. Diverging with price, you've seen all these different interpretations, and every trading system out there has some form of this with certain indicators. But just look how many what we call permutations there are of RSI. It's infinite, right? I mean, you could do an RSI of 50 periods. I've used that. So it's big, okay? And so with an infinite number of possible indicators, really, because you can take any of those in that 100 list and do this, it's just infinite. I mean, so what do you do? Well, just to put the icing on the cake on that, if you just used 100, not the billion or so that are possible, or more than that, with all these variations, there would be, if 100 true false indicators, like above the 30 RSI or below the 30 RSI, so true or false, is it above or below? Just 100 of those, and then you have to have the don't care case. Well, I don't care what RSI is doing. So that there's 3 states: true, false, and don't care. If you had 100 of those and you're trying to feed it to a neural network or something, there's 2 septillion possible combinations of that. If you take every single possible combination of 100 things with 3 states, you can type in your calculator and find it, probably pull the calculator up, but that's what it is. So, you know, so what the heck? I mean, what do we do? How can we search this space of all of these things and find good stuff? And of course, you know, I'm going to say the answer is AI, and it is, if you use the right one. Okay. So what we do with our AI is we take what's called a rule-based approach. And this is the way almost everyone creates a trading system. I'll give you an example. Here's a couple of, you know, a chart with a moving average on it and some Bollinger Bands, and here's momentum, and what's that down there? MACD volume. So I can say, all right, and this is what people do manually. They try things and they go, aha, I got it. Buy when a Bollinger Band channel narrows and then it expands. So it gets really tight and then it starts expanding. That's a buy signal. All right. It works pretty well most of the time. But let's make it a little more than that. Let's say, and the 20 period moving average has crossed above the 30. What does that tell you? It tells you there's a trend, because the faster one is above the slower one. So that blue is above the red. That's also good. Okay, we got 2 things in our rule now. Those 2 things, let's add some more. Let's say we want momentum to be positive. We make sure this chart is going up like this. And that is related to it, but it's not exactly the same. So we can say add momentum. And then you want to say, well, and MACD is above its moving average. And this uses 2 different moving averages. I think it's the 12 and the 26, if I remember. So it's different than any of these things, related, but different. So I have this rule. It's got 4 things. And when that rule is true, what do I think is going to happen? Bingo, I make a profitable trade. And again, this is how all trading systems are developed manually, by looking at a gazillion charts. Believe me, I've done it. It's just you get really excited because you find something that looks like it works, and then you test it and you go, oh, well, it doesn't really work all the time like I thought it might. All right, so what we're going to do is take this idea of creating rules with things, with indicator relationships, and use a specific kind of AI to do the work for us. And it's called a genetic algorithm. This is far superior to a neural network because it is very specific. A genetic algorithm can take a population of ideas, of indicators. For example, if I take this little strip here, this is what we call a chromosome in the genetic algorithm paradigm, if you will. So every one of these little squares here is an indicator relationship, like RSI 14 less than 30, or MACD is above its moving average, or the Bollinger Band is very tight right now and it just increased a little bit. Each of those things can be programmed as a gene in our chromosome. We call them inputs. We interchange the two things fairly regularly. So I've got these chromosomes, and what I do is I randomly generate about 1,000 of them. And by the way, it's not just 8. We have like 100 different things. And we give it about 200 different relationships. You know, RSI 14 below 30. The Donchian channel is increasing. Volume just spiked. Whatever it is, we write it as a little indicator, and that's one of our inputs, which become a gene on each of these chromosomes. So we generate about 1,000 of them, and then we let it run what's called crossover and mutation. It's a genetic, concept. So what it's going to do is switch these things back and forth between each other, and then it will measure how good is that rule. So if this thing is true, and that thing is true, and this thing is true, everywhere through the data, over 10 years of data, what percent of the time does that create a profitable move? And it can do this really fast because it's been optimized and multi-threaded. So it's really, really fast. It's amazing how quickly it can do it. It goes through those 1,000 potential rules in, I don't know, 1/8 of a second, very, very fast, and evaluates all of them to figure out which ones are profitable. The ones that are profitable kind of float to the top of the population, and then it adds a bunch of new random ones down here and does it again. Just random, just pick stuff, put it in here like that. Okay, and then of course it does the crossover. It'll take one from here. So this was a profitable rule, right? So it takes one from here and puts it in this one, or I'm sorry, like this. It says let's try that same input in this particular potential rule. We don't know if it's going to be a rule or not because we don't know if it's profitable. We'll just mix it up, and try things. And so it's just crossing over and mutating meaning change something just randomly, just make it a different value, whatever, just change it and see if it's profitable. So it does millions and millions and millions of these. And so it's evolving. And over time, they get better. They find profitable rules. They find new, better profitable rules. Using the ones it just found, it finds even more variations that are more profitable than the ones before. So that's what it's doing. And at the end of the process, what we get is something that we call a knowledge base. And the knowledge base has the rules in it, the rules that were found from that process. So each of those things, those chromosomes or sets of inputs, generate a rule if it's profitable, and they go in here. Our knowledge bases typically have 2,000 to 5,000 rules in them. And again, this is over like 200 different inputs and finding the things that are profitable. Isn't that amazing? What's so great about this is it is able to do that work and create these things and find a signal like that, and you don't have to do anything. You just turn it loose. That's it. So I love it. I love automation. I'm telling you, that's my shtick. I love it. Okay, so this is a MetaStock chart. So the next thing I want to talk about is Fulgent AI for MetaStock and how it works. All right, so what we have running in the background of the computer is this Fulgent AI engine, and it is the descendant of our original AI that we built here. We packaged it. We made it run. I didn't. The guys who are really, really smart about this made it run in the background on the computer. You can see it in the system tray with an F there. You see that in a second, but it's there and it's running. MetaStock, when we run certain things in MetaStock, like bring up a chart with the expert, it goes over to the engine and says, I got a chart, and it passes all the data, open, high, low, close, volume over there. What the engine does is it takes all that data and it figures out every single one of those inputs that are used in this knowledge base, all like 200 of them across the entire chart, as far back as it goes. to see if there's any rules in here that are firing on every single bar. So on every single bar, it measures every single thing, and until it finds one that says, oh, this one's happening right now, this rule, these things are happening, these 5, 6, 8, 10 things. And by the way, over all the history, it was like 75% accurate, profitable when these things happened in the history. And so, and you'll see that in the interface here when I bring it up, but it communicates with it. It goes to the knowledge base and then comes back with these signals. Okay, so that's essentially what it's doing. We do have the good stuff here, and I'll tell you, Jeffrey talked about support at MetaStock. I know they support their users really well, but they really supported us in this. I mean, we had to do lots of things. We had to, we wanted stops on the chart. We wanted different things, and we figured out how to do all these different tasks. And one of them was getting the data from the engine back into MetaStock so we could show you things like, that particular signal right there, right, this one was 78% accurate in the historical data. It happened 166 times in the historical data. The bigger that number, the better. And the average profit per trade was about 6%. Okay, so it's really pretty simple. So with that, let me go to, it logged me out. Hold on. Bingo. Here we are. Okay, so this is Amgen. I'm just looking at Dow stocks right now, but you can just do a quick look and see how good these signals are. I mean, you just don't find this out there. I'm telling you, it's not available. Now, they're not perfect. This is looking at every AI signal that it found from the knowledge base, every single one of them. There is a way you can pare it down to only the really good ones. We're going to get to that. That's the configurability part of this discussion. But just looking at all of them, all the ones that it found that were, there, because we do have cutoffs. We don't want any out there that are not good. So all the rules in that knowledge base are good, all 3,000 of them. And so it's looking for, in here, well, what do you got? And so if you look at all of them, they're about 65% accurate to 70, somewhere in that range in terms of, you buy, it makes a move. We also, as I said, MetaStock folks there, Jeffrey and William, love that guy. William Golson, I got to call him out because he's just so awesome, so helpful. I know you guys have probably talked to him in support, but he really helped us a lot. So we have the stops are actually calculated on these bars as it goes up. So if I click in here somewhere, it's going to tell me on that bar what the stop would have been. And it would have been $236.82. So it's actually following that up to the exit up here. So it'll change this every time. We also have a little write-up about the different AI experts that are in here, and there are 4 of them. So let's look at that real quick. All right, so as I said, this thing runs in the system tray. There it is, the F right there. Let's see what it's got. So this is our interface to our software running in the background. And as I say, we have 5 different products in the MetaStock store. So these are different things that we have, patterns and CT Trader and Wave Trader. They're all great. This is the crown jewel, okay, today. So if I double click it, so this is all the products that you have from us are in here. It's pretty simple. If I double click it, it'll show you the experts that we have, and there's 4 of them. They have different purposes, and the way they were created was there's a filter in the strategy that says only look at signals, only look at points in the chart that have this characteristic. So major reversal, like a chart that's really gone down a lot and could be at a big reversal point. Swing trade, that's trades going like this, right? So look at a swing trade opportunity, and we have basic indicators to determine this. So it doesn't have to look at every single bar of data across the whole chart. It can just look at the places where there probably is going to be an AI match somewhere in the vicinity of that bar. So each of these is just a little different. Swing trade, volatility breakout, things that are breaking out, okay? And then my favorite of all, and the swing trades do work really well. There's a nice one right there. My favorite of all is quick move. Quick move is amazing. You can just see it's designed to find quick moves, 5 to 8 bars, boom. That's what it looks for. And it is my favorite. In fact, often I'll just turn these off and just look at that one because it's so good. But they're all in here, and you can easily turn them off. You can turn on the longs and the shorts. I have longs and shorts turned on for quick move, just longs for these. But that's it. That's the interface, and that's what it does. So you turn on the ones you want, and then we're going to talk about this is how you make them better. But we're going to talk about that in a minute. I'm saving that one for a little bit. Okay, so that's the interface and how it works. Actually, you know what? This is a good segue for me to go ahead and do it. Let me go ahead and say, instead of showing all the signals, let's look at the ones that are 70% plus accurate in the history. So I click that little job right there, and it's now adjusting internally for that. Okay. And actually, that usually happens instantly. So there's something else going on the computer that made that slow. I don't know why. And now I'll refresh the chart, and it will show me the ones above 70. Okay, there are fewer, but ooh la la, check it out. I mean, my goodness. Okay, let's do it again. Let's look at the ones that are like above 75. Okay, play it again, Sam. All right, and that's as easy as it is. So it's only going to pull the ones out of the knowledge base that are at least 75% accurate in the history data. Okay. There it goes, bingo. And I can leave that setting. I can look at more charts. Let's go to the right here and just look at a few more charts. Won't do too much of this. You can do that when you get the app. But I'll go ahead and go through a few of them. And like I say, they're, in this mode, they're going to be about, so 75 is the rating for this signal on the right edge here right now. So they should be around the 75% accurate. If you look at 10 trades in the chart, 7.5 of them, boom, 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 should be profitable. So, there are some that aren't. It's not perfect, but it's darn good. Especially, we're going to do the Explorer in a second, and you get to a signal, you can easily look at the chart and see if it's poised to go up just by where is it? Is it in a retracement? Is it at support? Things like that we always look at, but this is going to find those signals for you. Do a couple more here. That's Boeing. Just going through the Dow. All right, there we go. Boom, volatility breakout. Woo, quick move. There's one that didn't work. Swing trade. Okay, volatility breakout. Swing trade. Quick move is my favorite. That's worth getting it right there. It's so good. Volatility breakout goes up to that exit right there. So in the historical data. All right, so that is really, there's not much more to say about the thing. This is what it does, unless we want to talk about configurability. However, we did implement every part of MetaStock with this AI. So the first thing is the chart. The second was the advisor over here. The third thing, or not related to the chart, is the Explorer. And of course, you want to use the Explorer. I love the way they've organized this program. If you don't have MetaStock, folks, it's just so easy. I've used lots and lots of this stuff. And the way they organize it is just so simple and intuitive. So they have the chart here, and then there's their really quote center for option trading and stuff. Here's the Explorer right here. So I click it, and if I were to run this, now think about this for a second. For every bar in that chart, this thing is going to the AI and saying, look at all your stuff. Do I have a signal that I can use? Do I have a rule that's firing? What is the best rule that's firing on this bar through all the bars? So that should take like 30 minutes for one stock. It doesn't. It takes 2 seconds. So if I were to run the Explorer right now, it would take 2 seconds per symbol to go through all of them. So to save time in the webinar, check real quick here. Yep. I have done this before. So I'm going to go ahead and go to reports and reveal reports. And it's right here. I ran it on the S&P 100. There's my 100. And you can see there's other explorations, patterns, and things, other products, right? But for this one, I double click that. Oh no, pattern, password, Uh-oh. Oh, does it think? Let me see here. For some reason. Okay. All right, I know how to get around this. Because I took a different path. You see, you should never do that before a webinar. let me uncheck that, check this guy. Okay, now I can go to the one specific for this deal, and it'll bring up anyway. Pay no attention to that man behind the curtain. I just made a mistake. All right, so here it is. This is the exploration I did on the S&P 100, and we took a lot of care to make this useful because it's got every column here has a purpose. There's obviously new longs, and there aren't any. Interesting. New shorts like today. Okay, oh, there's 3. All right. Here in long. No, okay, so let me stop there. I'm going to go ahead and double click GE, and on the chart behind me there, it's going to bring up GE and go to that signal. Okay, all right, it's right there today. Short right there. What kind of signal is it? See if I can tell. Quick move, my favorite. All right, firing counter trend. Interesting. So there you go. That's the signal right there. So to the right, the let's see here. Yeah, I don't have everything shown. This column over here, the ID, is the ID of the signal. So each of our experts has a number. So 108 is quick move. So you can tell by looking at this, which one it is. And of course, you got the close and all that. But look at this. It's telling you the accuracy of that rule over the historical data is 66% that fired that signal. The average profit per trade is 1%, which is okay. Nothing to write home about. Or maybe not trade. I don't know. You have to decide which ones. I'd look at them and see if they're any good from the chart. But also, it tells you how many times it occurred in the historical data, 400 times. So the same stats you see over here are shown here, and just makes it easier to pick off the ones you want to go look at. So it also tells you how many bars the thing has been in trade. All right. So like, let me see here. Here's one that was a long signal 36 bars ago. Let's see what that baby looks like. All right. Okay. So let's see. It's right there. So it's actually come back to that support level. But so that's what we call an in-trade signal. So you can use this. What I like to do is sort the in long and the in short, bring them to the top, and then look for the ones that are like 2 or 3 days old. So like here, this one. What stock is that? It is American Express. This is our last example because I got more stuff to show you. So, okay, so there it is. It has a swing trade signal right now, right there. And that particular rule had 200 hits in the history, 75% accurate. But you can see some of these are 76. And I've seen 80s in here. They're 79. So it's just real easy to tell which ones you want to go play with and trade. All right. So that's the Explorer. Okay. So the other thing, okay. We also implemented the system tester. That takes a little while to run and everything. So I'm just going to show you sort of what the outcome looks like. Let's see here. Go to our slides again. So you can test any of these systems in the system tester, and this out of sample data. This is the kind of thing that happens. I've seen this happen over and over again, testing against other systems in MetaStock, and it just it's very, very, very accurate. Okay, so we just looked at this. This is today's signals in the Explorer. It talks about the in-trade signals and the statistics for the rules that are firing each signal. About 2 seconds per symbol to run this over the last year of data. It's not long at all. Just let it run. You want to do the whole entire market, give it an hour or something, and you got it. Okay. All right. So now we get to the part that is my favorite, and that is how customizable this thing is, because you can get it and just run it and get those signals and see them and trade them, confirm them yourself in the chart, look at them, look at where they're firing. But the customizability of this thing is really, really, really high. I'm just going to go through a couple things here. You saw that interface I brought up that shows all of our AI products, and you can, very easily set any of them to, just the long trades, just the short trades, or both, long and short. And so each expert I set differently based on what I like about the long or short signals in them. So there you go, there's a short signal there. All right. But this next thing was just mind-blowing that it can do this in this package. Just that we provide, that it's there. The fact that you can retrain this AI on your own thing, okay? I don't care what you're using. If you like Bollinger Bands getting down really tight, if you like RSI below a level, if you like, volatility breakouts, it doesn't matter what it is. If you can make that as a MetaStock indicator, you put that in a file, and I'm going to show you where it is, and our system will train the entire big old piece of data set that you have, the Dow 30, the S&P 500, whatever it is, on that condition with our AI product, with all of those indicators pre-programmed in there. And it's ready just to go look, find stuff about that. So in this case, I'm going to show you where that is in a second, but I have an idea that I want to go long when RSI 3 is below 30, and I want to go short when RSI 3 is above 30. So I took my little color thing here and made these. Those are my sell points. Those are my buy points. Well, that wouldn't be very profitable if I just used that. Obviously, counter trend signals go in here, whatever. But what you can do in MetaStock, let me bring it up here, is I go to, let me see here if I can get to it, indicator builder, and it's Fulgent user input. So I was already on it right there. So that is an indicator that we provide. And the reason it's there is that when you tell our system to retrain on data, which we haven't been doing up to now, we've just been looking at these charts. When you tell it to retrain, it's going to go to this thing. And it's all commented in here. There's stuff in here that it uses. But right there, that's where it is. It says train longs equal RSI 3 less than 30. That's a Boolean condition. Remember in the beginning, I said true, false, don't care. So I want it to look at places where RSI 3 is less than 30 and train to that. I want to look at places where RSI 3 is greater than 70 to train for shorts. So you just go right here in this file and make that anything, any function you've written, any indicator relationship, it doesn't matter what it is. And the program will train to that. Now, I was going to run a quick training session. I think we have time to do that, to show you. Yeah, we do. So let me do that really quick here. There's a few steps to it. So let's just go through it really quick. So what you do is you go into the Explorer. It's good that you see this because it really shows what it does, what it can do. So what I'm going to do is I'm going to activate Fulgent AI stocks parentheses training. This is a very special exploration whose function it is not to look for signals, but to train a new knowledge base, brand new one, on those conditions that I just had in there. And again, it could be anything. And we're going to train it because of time on the Dow 30 because it's got to get data and everything else. And I'm only going to train on 250 periods. Normally, you would train on more stocks than that, and you go back to like 5,000 periods. And just turn it on, let it run overnight. We don't have much time. So we're going to just do it like this for now to show you what it does. So here we go. Start. If I make sure I didn't, it's hard for me to walk and chew go at the same time. So make sure I didn't have too much data turned on. I think we're okay with the Dow 30. There's the training. Yes, sir. All right, go. So first thing, it's got to get all the data, right? So it's going through every single stock in the Dow 30 and saying, here's the data for this stock for 250 bars. That's all we trained on. Normally it'd be a lot more. But it's passing it over to the engine right now. Just every chart, 250 bars, here you go. Here you go. And the engine is holding on to that data. It's getting ready. So got a little more to go here. It's pretty quick. So this is just reading the chart data is all it's doing right now. It's just shipping it over there into the little app that's running in the background. It's not little, it's very large actually, but it's very, very fast. All right, now it's got the data. So now what? Well, now everything works and the creeks don't rise. It'll bring up the AI engine here. Just wait for it, see what it does. A second. I have had demos go wacky on me, so I don't know. I don't think it's going to happen though. Let's see here. Let me go back to Fulgent. There it is. Okay, it was behind. It's initializing, and now it is calculating it's going through every single chart. You can see Amgen down there, and then let's see, there's a AXP, and it says saving samples. So it is going through every chart and measuring all 200 or more. I've got 4 experts turned on here, indicators. And it is. So I could have just turned on one expert. That would have been smarter rather than having them all turned on. And in fact, I am tempted to stop it and just turn one on. But it's okay. It'll get through pretty quick here. It's in HD, so it's going to go through all of them. And again, it's doing all 4 experts at the same time. My bad. Should have picked one. But and I would pick Quick Move. The one I told you is my favorite. This is the one I would do. But you can see here in a second when it gets through this. So it's going through every bar, calculating all the indicators for all 4 of those experts and saving off the values in a database. Because after it finishes doing this, that's when the magic happens. That's when it goes through this process of looking for these rules. With my condition, RSI 3 less than 30, greater than 70, and all these other indicators. Like which indicators work well with that specific condition when that's happening, because that's what I want to find. Okay, it's on VZ. That's nice. Verizon. All right, I think we're still good on time here to get some questions in. We've only got one more thing to tell you about. And now it's training. Isn't that beautiful? Look how fast it is generating those rules. So it goes sideways, it's looking, and at some point it finds a rule and it starts adding them. So this is the number of rules it's found, which is so far 375. And this is the profit per trade that's finding 8.5%. And it'll just go and it'll keep going. There is a setting in the interface. It's just one checkbox that says allow retraining. If you turn that on, it can every night it can just keep going and just keep trying to find new rules, keep trying to find new rules. So that's a thing it does also. But here we have, this is my one curve shows me the number of rules I found. The other curve shows me the profitability. And after it's done this like 1,000 times and generate as many rules as it can, it's at 700 right now, it'll start training for the shorts. And of course, it's going to train all of the experts. So that's what I wanted to show you. This is rocket science. I mean, what this thing is doing under the covers, behind the scenes, is phenomenal. This is real AI running on this. So in the interest of time, because I want to take some questions, I'm going to go ahead and stop it, but I can do that. And what it's going to do is save off its stats really quick here. It's just saving off everything. And then it'll finish. And what I want to show you is what it ends up with. So you see here it says FT stocks retrained. That's on that problem I gave it. I can do it more times. I can do it on different stocks. I can do it on different indicators. I can have as many of these as I want in here. You're not restricted. You can't run 2 FT stocks at the same time. So I'd pick this one, and then my charts would be based on that. Okay. So you can have 5 or 6 of them, however you set it up. And you can delete them. So I can say right click, delete that guy if I want to. So that's it. And of course I've got my rating here, which I would get back to the default of show all and start using it. Start using my retrained database. To shortcut this a little bit, I've got in my PowerPoint here, if I just bring it up real quick. This is what this run did. It found on quick move. That's what I ran it on. Where that is true, there's a signal. Where that is true, there's a signal. Here's a signal. Just think what you could do with this. I mean, whatever your little pet thing is, you train RAI, all of those 200 plus indicators, relationships, and bingo, that's what it does. I think this is probably the most loved feature about this thing, is that you can make it your own and do your own magic with it. I also ran a system test, and the RSI3 system as it is without AI, just buy when RSI3 is below 30 and sell when it's above 70, of course, doesn't work that great. That's like a big losing deal, but the AI that I trained does this in the system tester. So there you go. You guys could probably beat the accuracy I'm getting with my stuff. You put a good indicator relationship in there, and you can do more than one if you just and them together, like RSI3 is below 30 and I'm above my moving average and the Bollinger Band is tight. Whatever you want to do to restrict it is fine. It's going to look at those places. Okay. So people have asked me, what about other things? Can I train on futures? Can I train on whatever? Yes, of course. It's just stock market data. We're talking about technical analysis is greed and fear. It's emotions. And these indicators can find those situations. So combinations of them that form rules find even better situations. So you can do it on anything, end of day or real time, doesn't matter. That's it. And it says see chapter 9 of the Fulgent manual. And I just so happen to have it here. I just want to show you really quick. Oh, what's this? Go away. Really quick. We took a long time making this manual. It has chapters on everything that's in here, how everything works. We made it simple. We talk about the AI process it's using, how to do what I just did, retraining, use your own thing. So if I go to page 28, it's just really full. If I can find it, okay, the full user interface and retraining, here we go. This is that same example. And it shows you exactly what to do. Double click, you select the ones you want, so you change this to be whatever it is you want. I put the comments so it wouldn't read this, it would read this. And we talk about how to edit that file, turn on the training exploration, all the things I did. They're all in here. how many records you want to train on, and we give some guidance on that, and let it go, let it rip, and it will train just like you saw. There it is, going to town, and then you can select that strategy, and so on, and then there's an example I showed. So really powerful stuff. But I'm really proud of the manual because we made it right so it'd be, easy to follow and use, and that's really important. And I know the folks over there, Jeffrey and those guys, feel the same way about it because their stuff's always really good. All right, so that's really it for me on this. I'll take some questions. The summary on what this is it is seamlessly integrated MetaStock and installs. It's just there. There's 4 experts provided, and you can retrain on your indicators, your symbols, your time frame, whatever you want to do. And that is it. All right. So I've been talking really fast. Jeffrey, if you want to go ahead and bring anybody on here, I'm happy to. We got about 10 minutes, so whatever they'd like to ask. Yeah.
Let's see. We have lots of questions. So let's start at the top. Most wants to know, is there a conflict between your software and the new training, or the training? Or will it add the new train indicator to the entire software?
So you activate it so you go in here and you go into the Fulge interface, you turn it on, and then from then on, any chart you bring up is going to go. If you have our expert up, let me just close that real quick here. So that was our training. I can close that and close the expiration. So if you have our expert up, it's going to go to the knowledge base and pull the signals in. So it applies everywhere in MetaStock. You can even, I can just bring up real-time charts right now if I wanted to, but it wasn't trained on real-time charts. So, I don't know how that's going to work out, but it's just there. I mean, you turn it on, literally, by turning on the advisor, the expert. What do you call this? What's the official name for this? It's the advisor, right?
Expert advisor commentary, trademark.
I will remember.
Let's see. Actually, I don't. Expert advisor is trademarked. I don't know about commentary. I'd have to look at that one. But in any case, we're just having fun. Kishore wants to know, how can you and your office help us practically using AI in our trading with MetaStock? I do think we have some pretty good training and the manuals that are available for help with actual implementation. Do you want to talk a little bit more about that?
Okay.
Go ahead. Oh, I mean,
was I supposed to answer that? What was the question? Sorry.
Yeah. So he wanted to know if I know one of the. I'll keep answering it. I know that one of the things I like about working with Ed is a lot of times we talk about how I just talked about after Kelly got done, how much the people help. You have the greatest trading platform in the world, but if you can't get any question about how to use it answered, it doesn't help, right? And I think that's one of the things that Ed does pretty well with, or very well. We can always ask their team questions if we're not sure about things. You can approach them. They have a support desk that's available, and so they do a really good job with that too. But in addition to that, Kishore, we've got really good detailed manuals that can help you implement it, as well as lots of videos up here on our youtube.com/metastock channel, which you should like and subscribe to if you haven't yet. Quick plug. Anyway. Walter wants to know, will this system enter the trades by itself or not? And then the answer is not. It doesn't do the trading for you. It just helps you find the trades. Yeah. But that's a really, really good question.
Yeah. But bringing up a brokerage website and putting them in is pretty easy, right? So,
absolutely. Yeah. Can I train another add-on indicator? So I'll answer that one. I know I could answer it too, but as long as it's open source. So it depends on the indicator. A lot of the add-ons are closed. So the answer for most of them would be no, but quite a few of them are open as well. Like Steve Bigelow's add-on, you could actually take the candlestick patterns from his add-on and put them into the AI because they're all open. It just depends on the add-on. And so what I would have you do is, if you have an add-on that you want to push into the AI, let us know which one it is, and we can answer that question in specifics for you. Yep. David asked a question. I'm going to let you answer this one. So after you're trained, are the new indicators available in real time?
Yeah. Oh, it'll in real time. For every time a new bar comes in, it'll go to the knowledge base and look for rules on that bar, and it's very fast. It's really, really quick. I mean, I wouldn't load 1,000 bars of data because it's going to try to find signals across all of it. But if you had a couple hundred, no problem. Piece of cake. Even 1 minute bars, no problem. You'd want to train on that same data though. You want to do the retraining I talked about on the real-time data, enough of it, 3,000 bars, probably minimally. And yes, absolutely.
We have one comment from some guy named MetaStock in the YouTube channel. He says the AI engine is very cool.
Oh, thank you. Could have said it there myself.
All right, very good. Here we go. Let's see. Eric wants to know, can we put in quant with Excel? I'm not sure. I don't know what that question is asking, really.
I think I know.
Go ahead.
Excel has an AI add-on. It has several things in there that do artificial intelligence with vectors of data. You have like all your indicators. You can basically kind of replicate what the GA is doing. Not really, but it has features for doing it. So it's a separate thing that you could use for training if you knew enough about it. Actually asked ChatGPT this question, and it came back and said, "Oh yeah, Excel's got it's got a classifier, it's got these things." So it's there, but we don't connect to that in any way. It's all of our proprietary stuff for speed, really.
Cool. Michael wants to know, we're getting a lot of really good questions. Michael in YouTube wants to know if you can use this on any time frame, like weekly or monthly, but also like 60 minutes and 5 minutes.
Yeah. It's just looking for indicator relationships that combine to create a good rule. So any chart data is fair game.
Doug wants to know, on custom training, can this be back tested using the system tester?
Yes.
And I think that's oh, okay. Yeah. There you go. Cool. I like the way.
Go ahead.
I'll let you talk. Go ahead.
You're the guest. Screen, and you can run the system tester on it, to see how it actually looks in the historical data. So.
Perfect. Let's see. Timothy wants to know, and this is a pretty interesting question. He wants to know how are the MetaStock forecaster and Fulgent AI different? They're completely different. But I can kind of talk a little bit more about that. Scott came in and talked about the forecaster, and it uses a lot of statistics to identify potential price movement using kind of like the patent that we have in place. It doesn't do what we would traditionally be called artificial intelligence at all. So they're completely, it's like, how's an apple different from an orange? Well, let me get started, right? They're completely different things. So anything to add to that, Ed?
It's a good prediction. I like the technology. I think you guys did a really good job on it. But yeah, they're just very different. I
agree with you. I like it too. Well, that's all the questions that we've got. Okay, so I'm going to kind of talk a little bit about the offer that we're going to do. Okay. Before I kick you out of the room, I want to say thanks for coming in. I appreciate you. Great job too. And thank you everybody for listening. Thanks for all the good questions. And good to see you. Thanks for coming in.
You bet. Good to see you, Jeffrey. Enjoyed it, guys. Take care.
Cool. Let me go ahead and do this real quick. Let me make me the presenter. And I will share my screen. You'll see the Fulgent AI for a second. And I'll turn on my camera. Thanks for all those questions too. So once in a while when I turn on my screen, it shows me just a big, huge picture of me, which won't be helpful. So let me go ahead and fix that. All right, very good. So the Fulgent AI, I love having the artificial intelligence capabilities in MetaStock. Obviously, AI is a hot button topic right now, and this is something that you can get. And I love how Ed's implemented it too. He's always like the ability to kind of go in and AI test your own systems and methods and strategies. I could go on this and on and on and on. Michael wants to know, do you get a trial period with this, or do you get this with a MetaStock trial period? And I will, let me talk about that. So $19.95 is the cost of the Fulgent AI as a one-time product. And here at the conference, we're going to do a $9.97 price. So with that, we're going to give you a trial period, 30-day money-back guarantee, Michael. If you want to try out MetaStock, you got a couple options, but we will throw in a free trial to MetaStock if you buy this. So we're confident that you're going to like it. We're confident you're going to like MetaStock. And so if you pay $9.97, we'll give you the Fulgent AI. That's a one-time cost. We'll back it with a money-back guarantee, 30 days. You can evaluate it and make sure to go through all the training, kick the tires on it, make sure it's something you're super comfortable with. If you don't like it, you get a money back guarantee on it. So your risk reward is a lot better than every trade I ever take. So in any case, you can do that at MetaStock. If you don't have MetaStock and you want a free trial, we'll throw in MetaStock as a copy of it. We'll throw in a free month of it. We'll throw in a free month of the data. If you want real-time data, you might have to pay some exchange fees, but that's it. And then if at the end of 30 days and it's not helpful for you and you don't like it, you can just cancel and we'll give you a refund. So great risk reward. MetaStock.com/conf promo is the best place to take advantage of that. Or another good place is you can give us a call at 800-882-3040, or you can chat online with us at metastock.com/salespchat. So there you go. Give it a go. AI for MetaStock, really, really well implemented by Ed as well. I love, you're going to actually AI your own systems. How cool is that? Anyway, let's go ahead and we will, I want to say thank you to AAII, CMT, and actually I don't have an AAI thing. Well, thanks CMT this time, yeah. I want to say thank you to CMT. I think that's sector anyway. CMT Association and AAI and TASK for sponsoring it. If you are looking, if you want to get some accreditation about technical analysis skills, or you work in the finance industry, or you'd like to work in the finance industry, having a CMT accreditation actually could be really, really helpful for you. In fact, on Friday, I believe, on Friday, we'll have Tyler Wood come in and talk from the CMT Association. And it's quite eye-opening how much it can help you if that's kind of what you want. So if you want to find out more about a CMT accreditation, you want to add those three letters to the end of your name, go to cmtassociation.org, where you can also give them a call at 646-652-3300. So there you go. All right, very cool. And then, of course, we are MetaStock. We are talking about MetaStock all day long. I love MetaStock. The offer, if you just want to try out MetaStock, it's been rated #1 in its price category 30 years in a row. You can get an extended trial. If you buy a month, we'll give you the second and the third month for free. You can do that at metastock.com/conf promo. You can give us a call at 800-882-3040 or metastock.com/salespchat. So go ahead and give it oh, I almost forgot again. Hey Kelly, are you around? Shoot, I almost forgot just another time. I'm gonna let's see. Hold on one sec. I'm gonna just run over here. It's prize time. All right, here's what I need from the audience today. If you're watching on YouTube, if you're watching on GoToWebinar, you're going to help me pick the winner. Actually, Kelly, I don't need you. Don't worry about it. The audience is funner. So what I'd like you to do, if you're watching, give me a number between 1 and 10,565, and I need you to type it in quite quickly because usually I'll kind of do all the sponsorship stuff and things like that. But type in a number in the chat between 1 and 10,565. And you're going to help me pick a winner. The first number that comes through, literally if it's YouTube or GoToWebinar, is going to be the number that wins. But what I need, thank you, Adrian, you win. Or actually, 1367 wins. So what I'm going to give away right now is Adrian Mance's Around the Horn physical book. Got it right here. It's about 187 pages. It talks about his patterns that he likes to trade. It's a really, really good book. It's hardcover. It talks about the list cost of this is $95. I'm going to send it. Yeah. Oh, okay. And my camera is too. It came back by itself. Here's the book if you didn't see it. Let's figure out who 1367 is while I have internet. So let's see. So the winner of that book is James H. With a Yahoo address in US. So James H., if that sounds like you and you have a Yahoo address, you probably just won a book. So congratulations about that. And thank you for all the things. Eric asked a really good question. That Fulgent is a lifetime license. It's not on a subscription. It's a one-time payment. You buy it, you own it forever. And it's only $9.97. So thank you for that question. And thank you for your interest, Eric. And Adrian, Sammy, Walter, Larry, Vincent, Ed, Bob, Carlo, and Donald, thanks for giving me a number. I appreciate it. All right, let's go ahead and get kind of moving along here. Our next speaker today is Rick Sadler. Where's, I need to move my mouse though. Okay, there's my AAI slide. It was just at the end. Rick Sadler, hit and run candlestick trading, very, very nice gentleman. I really like the way Rick talks. I like the way he teaches. I like his candlestick patterns. And you're going to now, or you're going to also, because he's going to start right now. How you doing, Rick?
Hey, Jeff, I'm doing great. How about you?
Good. I can hear you. Let me go ahead and get this presentation over, or the screen over to you.
Okay.
Let's see, make presenter. Yes. All right. I'll make sure we can see you.
Let's see. Let me show my screen. Figure out which screen.
Okay. What I'm seeing is a bunch of quote screens.
Yeah, I think we're. How do I share my different screen?
If you look at the control panel where it says sharing, there's a show screen, and next to screen it says.
Oh, there we go. Show screen.
Yeah. Click on the down arrow, and it'll give you options.
There's the one I want right there.
And it says hello traders.
Hello traders. How are you?
Yeah,
I guess I should have said hello, Jeff. How are you?
I'm doing great, but I'm going to do what I'm really good at. I'm going to get out of the way. Your turn.
Okay. Thank you, Jeff. I appreciate it. Hey, I just want to say to hello, everybody. My name is Rick Sadler, founder of Hit Run Candlesticks. And I would like to, number one, say thank you to MetaStock. I've sat here for the last two presentations and very impressive, very, very impressive. What Kelly talked about, that system testing, that's interesting, very interesting. And that AI program I thought was top notch. We are getting into this AI world, so why shouldn't traders get involved with it? We should. So anyway, again, thank you for MetaStock for bringing me here. I do appreciate that. Okay, so what I'm going to talk about today is 9 trading principles. And I have got some charts to look at too. I'm not going to bore you with just text. The thing about, trading is there are so many people that wake up on a Monday and say that they want to be a stock trader. So they download a program or two, sign up for some subscription somewhere. And by Wednesday noon, they're trading. And by Friday, they've lost most of their money. And trading is, while I think most traders that have been trading for a reasonable amount of time, especially, well, not just especially, but just if you've been trading for any length of time, I think most of those traders would say that trading really is easy. It really is. It's quite simple. Long, if you're looking at something long, find a trend. When the stock runs up and then pulls back, this right here might be a buy area for you. If the stock starts moving up and breaks out right through here, well, this right here might be a buy area for you. It really is simple. I mean, and that honestly is all there is to it, except a whole ton of rules that you probably need to focus on. I've boiled it down to, I think, 9 basic trading principles that I think are a must-have. You might reword them a little bit. You might twist them up just a tiny bit to fit your own trading style. But overall, I think every successful trader has trading rules, whatever they want to call them. I call them trading principles. But I think you have to have these. They're not complicated. They really are not complicated. One of the things that we get into as a trader is we try to outsmart the market. The sooner you realize that you can't do that, the better trader you'll become. you want to attach yourself to the market. Don't try to outsmart the market. Market's smart. The market is a shark, and it's a big shark, and it will bite you. So we've got to have these rules, these principles that we work with, along with our charts. You'll find that I don't know if it depends the questions I get asked today, and please, I love to answer questions. We may get into the subject, I don't know. I love charts. I do not pay attention to the news. I don't pay attention to the propaganda out there. You can't help not to hear about it. I mean, you're an adult, you're human, so you're gonna see the news, you're gonna read the paper, something's gonna pop up on your Google phone app or something. You can't help not to know that there's, this according to a lot of people, this high possibility of a recession knocking at our door. You can't help not to know that. But I do everything I can not to trade with that, and trade strictly with the chart. Okay, man, I've already spent way too much time talking about something that we're not even to a chart yet. I want to mention really quick that if anybody from MetaStock, there's the link right there. I can make sure I get it to Jeff. A 30-day free trial comes with about $7,000 worth of educational material. Basically, what we've done is we've taken majority of our ebooks and a couple of actual training classes and just said, hey, here you go, because you need that starting off. Any kind of in a trial with us, and today I'm going to be covering touching on a little bit of it. A few of my favorite strategies, like the 3/8 trap right here, both bearish and bullish and bearish. Below the highest high in the past 5 days, trending, that's a strategy I like. It's much like the 3/8 trap, actually. The rounded bottom breakout, bullish and bearish version. The pinball setup, 834 strategy in the pinball setup, Trendicator, and the 50 strategy, that's the 50 SMA. The Trendicator, by the way, is a name we use, and I'll tell you right now, all it is the 17 exponential moving average. And the truth of it is, you could use any moving average you want. It just has to fit in your world of trading. I'm going to talk about that for a second. Your world of trading. There could be a trader out there that their world is that big. It's a monster. And they may trade everything under the sun. They may be productive. They may not be productive. Maybe they've traded for 49 years. Maybe they've traded for 9 days. I don't know. But that could be their circle. In other words, they go long, they go short. They go long, they go short. Every chart under the sun, every indicator under the sun they use, this person here is not likely to succeed. So what we want to do is we want to find out what our world is. And let's just stay in our world. Is your world longs? Is your world short? Is your world maybe both of those? Is your world trending charts? Is your world bottom picking? Is your world top picking? What makes sense to you? What can you explain? If you can explain it, that's usually what you want to trade. If you see somebody over there trading something and they just made a bucket of money, but you can't explain the trade setup, I know you might want to be part of that trade, but that's not the trade you want to trade. So, think about staying in your world. In fact, I tell many traders all the time, find 1 or 2 strategies. Yes, just 1 or just 2, and beat it to death. I mean, like 5 years, okay? That's all you trade. When you find that winning the strategy that you're most comfortable with, doesn't mean you're going to win every trade. Not at all. No trader wins every trade. But when you find one that you you can be comfortable with, that's the one you're going to trade the best. So, you know, you might find one in here you like, using the trend. That's where I started this part of the conversation. This is the trend indicator is just a 17 exponential moving average. You could use any moving average you want. Remember, put it in your world. So if you're a short-term swing trader, using the 200 period moving average as any kind of a trigger line or anything like that would be near worthless. So don't bother with that. You've got to find where you're comfortable at, okay, which you can explain. We also have an alert app, members alert app. Any trades we take, we post on that alert app, so you'll get those. All right, 9 principles of trading. Let's go through this. I guess I have an hour today. I'll try to talk for an hour. I think I have enough information for an hour. And if there's any questions, I'll certainly do my best to answer them, okay? So these 9 basic principles, you know, I've got on here, you know, if you follow these, success probabilities puts you in the 75% win rate. Look, if you follow these to a T, are you going to get at least 70%? In today's market, no. Look, my job is here to get you to buy something. I'm not going to lie to you, it is. My job is to tell you how great all these programs are, that the presenters, but I'm not going to fib to you. This market, this is a rough market. Don't let anything kid you, okay? So are you going to get 70% run rate? No, you're not. Especially if you're struggling today, you can follow all the rules you want. You're not going to have a 70% win rate. This, however, is a good market for learning how to trade, which means you might not make a bunch of money, but if you can dabble in trading and break even, if you're a rookie trader, if you're a successful trader, you want to be making some money. You may not be making as much money this year as you made 2 years ago, 3 years ago. But if you can come out of this year and probably next, and you know what a trend is, you know what support and resistance is, if you know what price action is, if you know what chart patterns you like, by golly, you're going to be a good trader. And yes, you could win, have a 75% win rate, possibly greater. That's kind of in the high range, almost not real high range, but it happens from time to time. So like I said, I don't mean to turn anybody off here, but you're going to find that I'm pretty straightforward about this sort of stuff. Some things I'm so straightforward about you might not like. I'll try not to do that today. But I just, anyway, just want to be straight honest with you there. So let's figure out how to move this thing. Here you go. Principle number 1, trade in the direction of the market. Look, I've got some charts that I think shows it off pretty good. I'll show you here some charts that I use. And I have, since the first of the year, I have taken phone calls from people that needed some help. I've had one grown man actually start to cry because they've lost their money. And the main reason for this one particular instance, which most of them, this reason comes into play. But this one instance was absolutely because he listens to the news too much and listens to all the bearishness and that sort of stuff out there. And the market is running, by the way, this black line is what we call the T line. Years ago, when I created the T line, it saved my bacon. It actually caused me to go from part-time trading, wannabe trading, hobby trading to real trading, was that line. And when the market is bullish like this, And who cares that price is going up? Just look at that black line right there. The person that I was talking to on the phone, because they were so hyped up that, oh my God, a recession is going to hit. Oh my God, you know, interest rates are going to go up. Oh my God, oh my God, oh my God, oh my God. They failed to follow the trend and they broke their account. Now, it wasn't all on that single trade there. You know, the SPY has done this, you know, way down and then maybe something like that. That's what it's kind of doing now. Well, every time the SPY would go up, what this person would do would buy short. Well, it would come down a little bit. They never closed it. They just thought they were the smartest cat in the world. And then the market would go up, and what they would do is buy more shorts. Well, if you look at the market currently, it's actually up from, what is it, the October lows. What happens? They blew their account up. What happened to the market crashing? That's basically one of their questions. Well, who said the market's going to crash? Well, all the news says the market's going to crash. Well, I'm afraid all those news people put on pants, just like you and me, one leg at a time. They're no better than you are as a trader. Follow the trend is what I suggest. Follow the trend. Don't worry about the news. And if the market is moving up, trade long. If the market is moving down, trade short. And if price is underneath that line, that is a good time to trade short. If that line is moving up and price is above it, that's a good time to trade long right there. Instead of, well, I'm going to get short. Why get short? Here's another one of my little bugaboos I hear from time to time is, say price moving up right here. Okay. Well, we all learn about, you know, we go to webinars and whatnot. We learn about resistance. All right. I'm going to go short here because we're at resistance. Well, you know what I say to that? Thank goodness we can break through resistance, because if we've never been able to break through resistance, we wouldn't have a stock market right now. Think about that. If price never broke out of resistance, we would never have the stock market right now. Hi, Wendy. The T-line is nothing more than the 8 exponential moving average. 8 exponential moving average, okay? I have found it the most useful, absolutely the most useful over the years, and it is what caused me. There's a lot that goes into it that we're not going to cover today because I only have an hour. That caused me go from, you know, a wannabe trader, a hobbyist, still having another job, to doing this full time, was that line right there. So anyway, you know, just because we hit resistance is not a reason to go short. On the same line, if we hit support, that's no reason to go long either. So there's a lot. Well, there's a lot more reasons, I guess, a lot more conditions that you've got to have before you have a reason to pull the trigger. I keep forgetting how to turn this thing. This is an example of a trend with the trendicator. I'm going to talk about the trendicator now. The trendicator is these dots. This black line, that's the T line right there. The trendicator is these green dots right here. So you could see right here, and the trendicator, again, it's nothing magic, it's nothing secret. It's just the 17 exponential moving average. Now, I don't want everyone to go out there and change their moving averages or whatever, or add this. I don't want you to do that. You've got to have some sort of an idea what you like in a chart. The best thing to do there is to go look at charts that you see you like, you know, you wish you could be in that chart, and find out what moving averages it's working with, or what moving averages are working with it. And I have found that in my world, and this is just for me personally, I mean, somebody else may use the 20 or the 21 EMA, or the 10 maybe, or the, I don't know, the 27.5, who knows. It's the magic is not the moving average or the indicator itself. The magic is how you use the indicator or moving average. Okay, it's not. That's like all indicators. In fact, there's no one super secret magic indicator. The magic is how you use that indicator. Something to think about there. Anyway, when you take a look at this, and the reason we call it the trend indicator is, I need to figure out, there we go. The reason we call it the trend indicator is, let's just start right here. You see where the dots are red? That's a time to be short. See where the dots are green? That's a time to be long. See where the dots are red? See where I'm going with this? It's pretty darn simple. It really is. And we got a little bit short there, a little bit short, and then, but overall you can see the trend is still moving up. So it's a great indicator, visual indicator to tell what direction the market is in. I'm a really big believer in, if the market is trending up, don't go short. Look, I know there's short charts out there. I do know that. And I know there's short charts to be had. But if you want a higher success rate, go with what the market is doing. Remember, don't try to beat the market. Many people have tried to beat the market, and many people are working at Walmart now. You learn to work with the market. You don't beat the market. You learn to work with it. So if it's trending up, work with the market. Don't work against the market. And just like if it's trending down right here, don't be trying to go long. The force is to the downside. Go with the force. Well, let's see, did I do that already? Oh, how did I do that? Here's another way to look at that chart, and this is actually one of my favorite charts to look at. It's with a black background. It's with the red and the green. It just shows up. It just sticks out at me. And then the white line, that's the T line. That's the 8 exponential moving average. And usually what I'm looking for, excuse me, is I don't want to trade in the turns, right in the turns. I don't like to trade there because there's too much unknown. And this whole, that's kind of a wacky right in there. You'll learn to see that. I don't want to trade right there. I mean, I don't want to go short because it really didn't confirm. I'll show you what confirming is. And here, the red dot, I don't really want to go short here because it didn't confirm. Now, before I talk about the confirming, what I want to do is share with you is, what color can I use here? We'll use white. I guess W for white. When you think about it, what is our job? What is our job? Here we go. What is our job? Our job is to make money in trading, okay? Our job is not, and I cannot stress this enough. Our job is not to pick the bottom and pick maybe the top. That is not our job. Let somebody else do that. That is a losing game. That is an absolute losing game. Trying to pick bottoms and trying to pick tops. Go with the trend. So what triggers? Not the first green, not the second green, not the third green. When the white line is over the green dots, that triggers along. If you think, oh my, and I hear this all the time, boy, God, have I missed that trade? Well, I would say not. Not at all. And the same thing is short. What you want is, see the confirmation here? See how we were red dots right in here? And the white line did not go below the dots? It's simple moving average crossover. It's one of the oldest tricks in the book when it comes to trading. And there's nothing wrong with old. I'm telling you that right now. Old is good. I'm getting older and I'm still good. See how the white line went below the red line? That's when we want to look for trades right in here. We don't want to try, picking tops. Let's see. Adrian is asking, what if it's trading sideways? Great question. So I'm hoping everybody knows what their sweet spot is in the market, wherever it may be. And I hope everybody knows where their sour spot is. I'm going to tell you where my sour spot is. My sour spot is chop. I don't trade well in chop. It's just the way it is. I don't trade well in chop. So when I see it moving sideways, I get a little hesitant about trading. I just do not trade well in chop. And I will bet anybody a burger, fries, cold beer, or milkshake, your choice. I'll bet you that if you went and you did a good look at your portfolio, and you went through and found where you made most money and where you lost most money, you'll find that you lost most money when there was chop sideways. But by doggone, we have a trading account. We have 3 monitors. We have a keyboard. We have a mouse. Yeah, we have a desk. By God, I'm going to trade. No one's going to tell me not to trade chop. I don't care if I lose money. I'm going to trade, right? Come on, we all do that. Principle number 2, trade in the direction of the chart being considered. This is this is where I told you about one gentleman actually broke down in tears. This is one of those cases right here where he would just add short. Every time there was a candle that looked a little pitiful, he would go short, and the market would go up, and then maybe another candlestick looked pitiful. Well, he would just add to his short. Look, you can only do this for so long, and your account goes sideways. Why? Well, their reason was because they, every time you turn on the TV or listen to anything, the world's going to come to an end, and for a dozen different reasons. And look, I absolutely recognize there's some bad things out there that cause this market to go down big. I recognize that. But are we trading news? Not if you're a short-term swing trader, you're not. Now, if you're a big investor and you want to buy short and you're going to hold out till, by golly, you make some money, I hope it works out for you. But how do you know that the market's not going to, maybe the market is going to crash. Maybe that is a true statement. Maybe it's going to be in 2023, maybe 2024, maybe 2025. Question you've got to ask yourself, is that your trading world? So for me, that would not be my trading world. I'm a swing trader. So I'm all about buying and taking profits. Swing. Buying, taking profits. Swing. Shorting, taking profits. Swing. If it goes lower, good for it. But if I've made my money, good for me. Let's see, how do I do? There we go. Principle number 3, plan your trade with target areas and protective stops, okay? I think there's a real serious misconception. It's a big word for me. Misconception about targets. So let me try to set this scenario up. You start trading and you go to a service or you sign up for something and somebody sends you an alert on an app, just like we have, and just like I would send you an alert that I bought something. Well, I might talk about some targets. If you're in the trading room, I might talk about some targets up here. But that does not mean that that's where the price is going to go. That does not mean that. And I think every educator out there would agree with me on this. So you've got to have a grip on, all right, you bought it wherever. It goes up to wherever. have you made enough money? And you know, holding a chart, well, that's where somebody said the targets were going to go, and they may go there, but it also might pull back for 6 weeks before it starts moving back up there. So you've got to consider that. In the trading room this morning, I talked about one of the best indicators there is out there, and that's just good old-fashioned common sense. Just good old-fashioned common sense. You see a chart that moves up 3 or 4 or 5 days, big like this, take it to the bank, it's going to pull back. Take it to the bank. And if you can live with the pullback, if the pullback is only little, and maybe that's okay, you know, maybe you've got your stop right here, for instance, and it pulls back, you're okay with that. And if it starts turning green and goes up, hey, you're the smartest cat in the room. You really are. But what if it doesn't? What if it starts pulling back all the way back down, tests this bottom? Don't get caught doing that. Take some money off the table, okay? How much money do you need a week in net profits to double your account? Now, I'm not trying to say you should double your account. That's not what I'm trying to do here. What I'm trying to do here is that's a good plan, okay? That's a great plan. That's a great goal to shoot for. But on the other hand, if you only put 50% on at the end of the year in your account, are you going to complain? No, not at all. If you put 10%, are you going to complain? Nah, you're not going to complain. You sure wish you'd made more money, but you're not going to complain. So, you know, don't be afraid to take those profits along the way. Very important. And just don't get caught in, well, somebody said there's a target at $30. Don't get caught up in that. That's just not real. Okay, I want to talk about one of my favorite chart patterns here. This is a chart that I am currently in right now, Chewy. We bought this yesterday right here on this doji right here. And the reason I bought it is because it might be kind of hard to see. You see the red dots? Right here, the dots started turning green. Okay, so that's one condition. I think you should have multiple conditions in a chart before you have a reason to pull the trigger. So that's one condition right there, and that is the trend starting to turn, just the start of a turn. Notice that price is over the T line. That's the black line right there. My target, my ultimate target is the 50-period moving average. And that is that blue line right there. So if I'm taking a look at this, my only trade here is from there to about there. That's my trade. What if it goes higher? That's another trade. I put on a trade with the expectation of I'm going to buy it here and I'm going to manage price till it moves up here. And then I'm going to close it out because I know I've been trading long enough that at some point the chart is going to pull back. Now, it might pull back well before it gets there. It might start pulling back now, maybe. I can't predict if it is or isn't going to pull back today or not. But now it's all about management in this area right here. So there's a condition that I've set up. Part of what we want here is a distance. I forget the way I have scans set up, but the distance of, I don't know, maybe 10, maybe 8% between the trend indicator and the 50-period moving average. That gives me that possibility of maybe making 8 to 10%. Now I trade probably 99% options, 98% options. So if this little space in here is, say, 10%, and I get it close to the trend indicator, which bought it yesterday, that's pretty darn close to trend indicator, that puts me at maybe a 10% on the stock. That puts me up 25, maybe 30% on the option. So good money there. Really, really good money on this. So this is one of my favorite trades right here. that early turn up to the 50-period moving average. Principle, boy, I feel like I've missed a slide, maybe not. All right, principle number 4, wait for the entry setup. Who here, I don't know if you guys can answer or even if you can hear me now, who here knows what fear of missing out is? It's a term traders use. So fear of missing out is when a stock starts moving up, maybe it moves up again, you can't stand it anymore. So what do? You buy it. You just can't stand it because your trading buddies are all in it. You didn't get it. It's moving up. All of a sudden, it's being mentioned on CNBC. All of a sudden, it's in the news. Oh my gosh! Oh, I missed out. I didn't miss out. By golly, I'm going to get in it. And then what happens is you get in it just to have it pull back. Simple thing to do is just stop doing that. Just simply stop doing that. Common sense. Just stop doing that. So take the 3-8 trap below the highest high in 5 days. These are two of my favorite types of entries, and or above the lowest low in 5 days for a short. So we're going to look at these two examples here. I want to come back up here and talk about this. Entries are very personal. Let me explain this. We could all be looking at the same chart, all right? Same trending chart. We could all see the same rise and the same pullbacks. We could all see that. We can all see that. That's very clear. We can all talk about it. We can all explain it. Some people, they may enter, say, in this area. This is very personal. Some people will enter on what I would call a black candle, so like this, or a red candle for many people. And some people are going to wait for a green candle or a white candle that might look like this. That's very personal. We all get the whole trend. There's nothing new about this. We get the whole pullback thing. We get the whole breakout thing, right? It starts to break out. We get that. Everybody can see that. But when it's time to buy the chart, it is very, very personal. It is not secretive. That's not what I'm saying. One person's buy might be a horrible entry for another person. When we're looking at let's see, can I do this? Let me back this up. When I'm looking at a chart, let me change my little tool here real quick. Frame. When I'm looking at a chart and say it pulls back, the entry area is the top usually, maybe a smidgens more for a breakout, and then down like this, maybe right there. This whole area is the entry area, and of course the breakout is an entry area. So one person might buy here because that's what you like to do. Another person might wait for a breakout. Millions of people maybe might be looking in the middle. It is very personal where a person enters a chart, but not secretive. So just because one person buys here doesn't mean you have to buy here. Be your own trader. Make your own decisions. You'll be far better off. And if you have trouble making that decision, that means you're not really ready to trade. That means you need to do a bit more education and a bit more practice. One of the best places to practice, by the way, and this is no matter what, if you belong to a trading room or you can get into a trading room, one of the best things you could do is share in that trading room. Share charts, share ideas. That will make you a better trader. Okay. All right. So for a long trade, right here, this right here is a perfect 3/8 trap right there. Here we rally up and we pull back, and right there, that's a perfect what we call a 3/8 trap. That's one of the things that we teach is how to find those, how to trade those, and then take profits as well. This is all below the highest high in 5 days. You know, 1, 2, 3, 4, 5. There's the highest high about right there. See, we're below the highest high in 5 days, but I want it above the T line. So you kind of trap price. The 3/8 trap and below the highest high in 5 days are very much the same. Yeah, they're very much the same. Terrific entry, very visual, very clear to see. You can see the trend. I mean, well, I guess you can't see that because if you buy it here, you don't know what it's going to do here. But if you take the T line, there's the trend. Just use the T line. I guess go right there. Take the low of it here, let it bend where it wants, take it down here, and actually that wouldn't be right either, would it? There, it would be right there. There's the trend. Below the lowest high in the past 5 days, and sorry, I should have put the bearish 3/8 trap on here, would be right here. Here's the 1, 2, 3, 4, 5. Actually, that one. Where is it? It's 0, 1, 2, 3, 4, 5. There we go. It's 0, 1, 2, 3, 4, 5. So here's the lowest low in 5 days. Here we come down. Right there would be the entry, and this could have been the entry too, but that would have been the first entry going short. That's a 3/8 trap short. It's also above the highest, above the lowest, above the lowest low in 5 days, but trapped below the T line. Look how it acts below the T line. Look how it acts above the T line. Kind of cool. Man, I got to tell you, I'm running way behind. A stop plan. Always have a stop plan. So on Chewy, I told you I'm currently long Chewy. My stop plan is going to be right here. Why right there? Because go back and ask yourself why you bought the chart. Why do you like the chart? And what I like about it is that we crossed up over the trend indicator. Trend indicator went from red to green. If it went from green to red, why would I be long? It makes no common sense. Well, it might come back up. Yeah, try that out for a little while. Those pants aren't going to fit very well. They really don't. So if we get back below the trend again, I'm out. Principle number 5, take profits into strength or weakness. I have no idea why some traders seem to think that they've got to make 100% on every trade. It could be that you get emails all the time from traders that do make 100% or 200 or 500 or 1,000. I'm sure they've done that once. I'm positive. But if you can make 15 to 25% in what, 3 to 10, 3 to 15, 3 to 20 days overnight, wouldn't you be happy with that? Wouldn't that be enough money? I mean, wouldn't it be? Uh-oh. I've got 2 in there. I'm going to skip that one right there. Here's some recent trades that I've taken, and they're not big. Amazon, 25%. AMD, 38, and then the second half of AMD, 38.9. Tesla, 15. What was this? AT&T. I'm actually still in half of AT&T for 22.45%. Still in AT&T, and it still looks like it's going down. XLF for 32%. Half LABU for 26, SQQQ 12, IWM for 39. These aren't big trades. These aren't 100%ers. They're not big trades at all, but they make you money. The profit's in your pocket. Principle number 8, stay in your lane. Look, you're your own trader. I think I can safely say that we're grown-ass adults in here. So let's act like that. Let's take control of our own trading. Let's be our own boss, okay? Don't trade out of desperation. Never trade for rent. You trade with money that you can afford to lose. That way you don't get panicked. And don't trade all the money you can afford to lose. Did I skip those? Uh-oh. Uh-oh. I have a problem here. Huh. I have a problem here. I'll have to fix that. I have a problem. So learn to recognize junk, okay? Learn to recognize junk. And I want to answer Al there. Awesome presentation. Any losses you can share? You've got to be a member to get my losses. Al, that's the truth, okay? I'm not going to dance around that. I'm not going to skirt the question. I'm not going to hide from it. For losses, you got to be a member for that, okay? So free trial, come on over. You'll know about all the losses. Don't trade junk. You know, maybe this week you can't seem to make any money. Maybe 1 week profitable, next week you lose it. You know, it's not always you. Don't fix everything. Don't try to fix it. Don't switch indicators. Don't switch from a daily to a 5-minute chart. Don't make changes. The very last problem that everybody wants to consider is its market condition. It might not be you. Don't blame yourself. Don't blame yourself. It might be the market condition. Learn when the market is crappy. This is a very current, well, as of this morning, a very current chart of the SPY. And if you have found yourself losing money, and I have to tell you, I know there's somebody in here that's probably making all kinds of money. But for every one person that's making money in this particular little zone, thousands of people are losing money. The reason you're losing money is I'm going to go back to my hamburger, fries, beer, and or milkshake bet. If you go back and you take a look at all your trades, I'll bet you that you've lost most of your money when the market chops sideways. I know, we look at that, well, that's a terrific buying area, you know, that sideways consolidation. Why would I not want to trade that? That's bullish. No, that's a major misconception. It is only bullish when it breaks out and you trade the breakout. It's only bearish when it breaks down and you trade the breakdown. This in here, these are the sharks feeding on you. You go back and you look at your trade history. You'll find that if you made money right here, you gave it all away right here. Learn to recognize when the market is not your market. Okay, very important, very, very important. Oh, principle number 7. I'm sorry, they're out of order. Know when you're over your head, all right? If you have 2 to 3 losing days, don't trade more. Don't trade more. Now, be honest with yourself. Dig deep inside yourself and ask yourself this. When you have losing days, do you actually try to speed up? And most traders do. It's called revenge trading. I would argue don't speed up. Stop. Stop. Go for a walk. Break a window if you want to. But just take a breath. Go look at the market and figure out why you've lost the past 2 or 3 days. Again, I doubt it's you. I seriously doubt it's you. I doubt it's your indicator. I doubt it's your ability to see charts. What I bet it is the market has turned junky. Number 1 rule in trading, do not lose all your money. Nope. The number one rule is not make money. Anyone who thinks that, you're likely to go broke. That is not the number one rule. Number one rule is do not lose all of your money, because once you do, you're cooked. 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 Thought this was voice activated. No. Principle number 9, pay it forward. There are tons and tons of trading rooms out there, and there's tons and tons of places where you don't have to be in a trading room, that you can share trades, you can share charts, share them on YouTube if you want, share them on Facebook pages. You know, if you don't want to be in a service, that's fine, but share. There are tons and tons and tons and tons of people that will be so appreciative of your sharing. Pay it forward. And do you know that when you do that, you will be a better trader? Years and years and years ago, there was somebody that gave me a chance to moderate their trading room. That was the biggest education of my life, because I didn't sit hunkered down over my chair in my office. I had to get out there and show what I was doing. Okay. Share, pay it forward. It'll just be better for you. Yeah, you know, like I said, something goofy on the slides here. Sorry about that, Nicole. I apologize. I think MetaStock has these recordings. They'll send them all out when this webinar is all finished up. I believe it is. Here's a recent trade. An RBB is one of my favorite chart patterns, and that's when we go from the 50-period moving average to the 200. That's what I look for in there. This is one of my recent trades, and it's not necessarily from here to here. It could be from here to here. And this was an RBB breakout right here. But I recently closed Amazon. That was on that list that I showed you there. Here's a recent trade. AMD. Bought AMD right about here, 86.50, right in this area right there. And this was on anticipation of a trend indicator change, and it did. I've since closed it out. Nice trade right in there. 3/8 short. I'm actually currently still in half AT&T. 3/8 trap short. You've got a nice 3/8 trap. We broke out. Here we're moving down. This is probably a 3/8 trap right now that we're in. Maybe. Looking for that to go lower. Here's another XLE. This is a good example of here are some targets. When short, I closed it out. Well, wait a minute. What about those targets? Remember, targets do not have to ever be touched. That's not why. I mean, in a perfect world, we would like that, but trading is by far perfect. In fact, trading is the only thing I know that 2 + 2 doesn't equal 4. Not on any given day does 2 + 2 equal 4 in stock trading. Not any given day. There's a recent trade, RBB setup. Again, one of my favorite trades here. From the 50 to the 200. 50 is the blue, the 200 is the red up there. This right here is growing to be one of my absolute favorite trades setups, and that is that trend indicator change from the bottom. Trend indicator change from the bottom, looking for that to rise up a little bit. The 3/8 trap is where I'm about to run out of time here, but let me see if I can do this. The 3/8 trap is when you have the T line, the 8 exponential moving average, and then you have the 3 exponential moving average, and then you have price trapped in that area right there. See, this is a 3/8 trap right now. It's trapped right in that area. And now what we're looking for is price to go higher. And if price comes back below the lower line, why would you want it? So it's an entry mechanism is what it is. It's an entry mechanism. Entry mechanism. Oracle, Oracle, this is a setup that is really looking great right now as we speak. Now for the recording, this is May 10th, 2023. 3 days from now, it might not be, but right now, that's a beautiful chart. And currently, it's actually up a little bit more. And that's a beautiful 3/8 trap. And that's what we teach to find, to trade. Here's another one, MP, that might be setting it, getting close. That trend indicator breakout and the 50-period moving average. Hey, I made it. Hello, everybody. My name is Rick Sadler. If anyone has any questions, I don't know how much time I have. It is the top of the hour. So I can say if anyone has any questions, please throw them at me, yell at me. Jeff, I don't know if you're there.
I've been able to answer most of the questions, but here's one I promised to ask you from YouTube.
Okay.
And you want to know, does it make sense to use Renko bars when it's choppy instead of candlestick bars? I said it doesn't make sense to me because I'm not familiar with it, but I promised to ask you.
With what?
Did you hear the question?
No, I didn't. It kind of broke up.
The question was, does it make sense to switch to Renko bars to avoid choppiness?
No. Look, if you trade candlesticks now, trading to another, I don't think anything else is going to help you. Chop is chop. Looking at the SPY there, wherever it was, chop is chop, and the Renko is not going to help you. I don't feel it is. I really don't feel it is. So no.
And we are completely out of time, but Nicole wants to know if you can remember what Principle 6 was.
I don't. And I don't know where it went to.
Okay.
I don't know why.
No problem. No problem. We'll make sure. Drop us an email, Nicole. we'll take it up.
Send me an email, rick at hitandruncandlesticks.com. I promise I'll find it. I just don't know why it's not there. Wait a minute here. Hold. Give me one sec. I might have. There it is. Setting realistic goals.
Oh, you talked about that.
Setting realistic goals. For instance, if you just started trading 3 days ago and you want to set a goal of doubling your account, it's not going to happen. Be realistic. And in this one, I think I talked a little about if you were setting a goal for doubling your account, just exactly how much a day would you have to make? Do the math. Use about 210 trading days. You'd be amazed how little you have to make a day to double your account. You'd freak out because we're sometimes so obsessed with making big money. Just so obsessed. I mean, let me see here. 210 days times just $65. That's $13,000. And somebody just starting out, what's wrong with that? I don't think that my math was right there. 210 times 65. No, my math is right. Okay. So it's just incredible on how little you have to make to actually make money if you get this big obsession with being rich out of your mind. You'll get rich. You just have to do it slow. Anyway.
Okay. All right, click on the link if you want a free trial. And Rick, thank you very much for coming in today.
Hey,
that was a good
thank you, Jeff. Thanks again, everybody. Thank you so much.
All right, very cool. Let me go ahead and do this real quick. Okay, open up the price spreadsheet. Pay it forward was, remember when you talked about sharing charts and all that kind of stuff? That was the pay it forward one. We did cover that in the thing. In terms of the question about whether this is recorded and where the recordings will be and all that kind of good stuff, I'll answer that real quick. If you go to youtube.com/metastock, they're there. We're actually streaming it right now. In fact, and all of yesterday's are there. I just finished adding the timestamps to day 1 and day 2, so you can go exactly to what session you want and go ahead and view it. If you go to the channel though, or if you're watching us on YouTube right now, hit the like and subscribe. It helps a great deal, and we do appreciate it. So, and then thank you for all of the feedback and the chats that we've been having in YouTube as well. So in any case, I do want to say real quickly, we are a little bit behind on time, but we do have all of the hit and run candlestick patterns for profits built into MetaStock. And so he talked about quite a few patterns. These are the ones that we've coded for him: the round and bottom breakout, the T-line squeeze, the T-line bounce, the pinball setup, and the 3x8 trap. So I did actually just show an example of them, but these patterns do include all of the commentary. If we come in here, you can see there was a whole bunch of, this is meta, a whole bunch of rounded bottom breakouts right here. You had a T-line bounce right here, a T-line bounce right here. All of them will be displayed on the chart for you. You can click on them. If you want an explanation, it'll explain what they are. And of course, I think Kelly mentioned it once or twice, and I might have brought it up a few times, but MetaStock is really good at scanning. And so if you want to be able to scan these patterns and find them whatever markets that you're interested in, you have that ability. So again, it's a great add-on for MetaStock. It includes the explorations to find those, the expert advisor, layouts to kind of help you configure your charts, and all of those 5 patterns. So it's a really, really cool add-on. What we're going to do here with it, it's normally $7.99. Of course, at the conference, we're going to give you a discount on it. Of course, at the conference, we're going to give you a 30-day money-back guarantee. If you haven't tried our award-winning MetaStock program yet, we'll throw in there a copy of that for you. We'll throw in training to help you get started. We'll even give you unlimited access to our support desk, all the kind of stuff that's included. So $649 here at the conference, money-back guarantee. You can take advantage of that by giving us a call at 800-882-3040. Or you can go to metastock.com/saleschat. And Kelly's putting those links in the chat for you right now. So a great add-on. I wish we had the time to talk a little bit more about it, but let's go ahead and kind of just keep moving because we are running a little bit in the rears right now. Before we start, I'm going to do 2 things though. I do want to say thank you to our sponsors, Stocks and Commodities Magazine, CMT Association, AAA, and AAII. I cannot do that. My tongue does not allow me to say that many vowels in a row. AAII has been doing stuff since 1978. They've helped about 4 million traders. It's a nonprofit. They do a lot of market analysis newsletters. They do a lot of courses. It's a very, very well respected organization, and you can find out more about AAII at AAII.com. So there you go. In terms of, let's go to the next slide. And what I want you guys to do real quickly is to give me a number, and we are going to play pick a winner. So if you give me a number, the number right now is anything between 1 and 10,565. You're going to help me pick a winner. So let's go ahead and tell you what the prize is while you're giving me a number. Type it in the chat. Type it in the chat right now. And the prize that we will be giving away as part of that is May prizes. Let me get to the right place. Let's give away another copy of the Option Strategies newsletter. This is a 3-month subscription. It's done by the Larry McMillan. He does analysis, commentary, education. You know who Larry McMillan is. He's written one of the most famous books on options trading that's out there. He's been doing it for a really long time. But then with this particular 3-month subscription, you're going to get 3 months of his newsletter that he delivers on a weekly basis. It's been published for 31 years. He's been making this this newsletter for 31 years, and he's one of, I don't need to tell you who Larry is. He's one of the most respected gurus in the industry. So we had a lot of numbers come through. I'm actually going to pick one out of YouTube this time. So MetaStock, Kelly, I told you you couldn't pick numbers. I'm letting the audience pick numbers. So we're going to go with Sterling Gray. Sterling picked the number of 9. And let's just go see who that is. So this would be the 9th person that registered for the conference, which was actually pretty cool. Okay, so it's Raid, Raid A with a Gmail address. So Raid A with a Gmail address. I'm going to give your information as a prize winner to the Macmillan Analysis Corporation. They will send you an email with information. Well, actually, they'll probably just start sending you the newsletter. It's pretty easy. So there you go. Thank you for all of the guesses, except for Kelly. Kelly, you don't get to guess. All right. But I do want to say thank you for all of these guesses. Larry, Nicole, Diane, Adrian, Donald, Reg. Thank you. Thanks for the guesses. We'll do it again after this. So let me go ahead and go to AJ Brown. AJ's another guy I ran into in Vegas just a couple weeks ago. AJ does a really good job. I really like AJ's presentations. He's also, as a bonus, a super nice guy. And I'm going to go ahead and kind of get him started and let him go. AJ, how are you doing?
Doing absolutely amazing. Thanks, Jeff.
All right, let's get you the screen. Okay, here it comes.
Okay. There we go.
All right, I can see it. All right, I've told everybody, you may not have heard it. I'm really good at getting out of the way. It's your turn. Go.
All right. Hey, everybody. Yes, I just saw Jeff a couple of weeks ago in Vegas, and it was good catching up. We've known each other, I think, since the time I was living in California, which was back, I left California for Colorado back in 2002. So I've known him for quite a while here, over 20 years. Hey, guys. So I want to share with you kind of my behind the scenes look at how I create a 7-figure income selling options. And I definitely want to, for those of you that are carrying over from the last presentation, he's absolutely right. It's the incremental gains that go towards doubling and tripling your portfolio rather than the one-day gains. And so that's really what my folks and I focus on, is those incremental gains. And we sell options in order to do that. And we do it in kind of a unique way. So let's get right into it. A couple of facts that I like to throw out in the beginning of my presentation. Listen, there's a lot of uncertainty with what's happening in the world right now. I mean, the latest thing that's going on, besides the fact that, you know, these mid-size banks seem to be failing, even though the Fed's trying to tell us that they're all okay. We know that there's even a couple of them queued up right now where there's a loss in confidence in them. But also, in addition to that, I mean, gosh, what's happening in Washington, D.C. with respect to the idea that perhaps the U.S. may not want to be paying their bills. You know, we've elected these politicians and they can't seem to get anything compromised or accomplished. So that's kind of sucky. But the truth is when you look at what's happening in the markets, if you play it right, that can set you up for months, if not years to come. And I'm a perfect example of that. Last time I had a day job was in 2005, and I left that job, and I've been living on my trading incomes along with my family ever since. My wife doesn't work. We just live on our trading incomes. And so one thing you have to realize is that as much as the talking heads like to tell us over and over that so much money was destroyed today in the markets, or this, you know, listen, money is not created or destroyed in the markets. It simply moves from one person's hand to another. And so the key is making sure you understand that equation and how to put yourself on the correct side of that transaction. So before I get even further in the presentation, I do like to ask this question. You could just type this into the Q&A area. Are you here today because you want to learn how to invest, basically learn how to fish and be 100% self-reliant? Or are you somebody who is looking to learn how to fish, but you love having expert fishermen right there to help you. That's the B answer. Or is what you're trying to do is figure out how you can basically fish alongside expert fishermen and do what they do. I mean, I want you to be honest with me. Maybe it's something else. Maybe you're here for a different reason. But let me know what your thoughts are, because I find a lot of people tell me that they're here for A and B, but a lot of times it turns out when I talk to them closely, they're really here for C. And I can tailor my presentation based on what you guys want to do. What's your focus? What's your end game? So Adrian's giving me some answers. Okay, now the answers are starting to roll in. That's good. I'm glad you're being honest here. Okay, a little bit of everything. So let's first, I always do this at the beginning of my presentations. I always do this little thing. Humor me if you've seen this before. 50,000 right this minute, or a penny a day that doubles every day for a month. Let's go through the penny. We know what $50,000 a day works, right? But all right, if I do the penny after 1 week, well, I've got 64 cents to my name. Don't forget, if I gave you the $50,000 free and clear, you wouldn't have to work at or wait for the month to go by. You wouldn't have to figure out what you're doing in order to double that penny. So keep that in mind. So, okay, a week goes by and we're nowhere near equaling up to that $50,000. Let's keep going here. All right, 10 days goes by and we're at $5.12. That's still nowhere near the $50,000. We're having to work. We're having to stay focused. We're having to keep it going. And we're a third of our way through our month. And we're not even anywhere close to 1/10,000th of the way to $50,000. But let's keep going. So we're 2 weeks in. We have $81.92. If this was my wife, she'd be questioning why we're doing all of this effort. We're already halfway through the month. We should have taken the $50,000. I could hear her voice in the back of my head. Day 15, we're about halfway through the month, still nowhere near it. All right. Now that we're about 2/3, actually even more, we're 3 weeks, so we're almost 3/4 of the way through the month. We've got $10,000. We're basically way past the back nine. We've got like 3 holes left if you try to extrapolate a golf course on this. But okay, finally at day 24, the month is almost over, and we finally have that $50,000. How many of you would have been able to stay focused this whole time to day 24 rather than being distracted by shiny objects? That's a good question, because that's what happens to a lot of us. I know I'm speaking from experience. But if you stuck with it, by the end of the month, you'd have $21 million in change, which is not bad. Now, I'm not sure if Albert Einstein actually said this, but compound interest is the most powerful force in the universe, and that's what we just demonstrated, and that's what the speaker before me was talking about. It's the incremental little gains that pile up, and at the end of the year, you've got a big chunk of reward if you focus on those incremental gains. Now, I want to show you this chart right here. This chart, I'd like to kind of get this tattooed in your head, because this is going to show you a trade. I'm going to show you a trade about this later, but the scoop is the longer we stay in this trade, the returns of this are actually exponential, and that's what I want you to pick up on it. And I want you to pick up that there's 2 lines. This is if you go above this line, that's if the directional way of your symbol, your underlying symbol, goes for you. And there's also this gray line, which basically means if the underlying symbol goes against you, you're still making a pretty nice reward. In fact, the other thing you might be noticing is there's a 0 line here, and very quickly this investment over time becomes risk-free, meaning you don't have any of your own money on the table. Now, this is quite an awesome investment, and this is basically what we do selling premium. If you earn, so going back to that whole doubling your money, right? Doubling your penny. If you work it out backwards, and I know that the speaker before me said, hey, we've got 210 trading days, but what about the month? If we wanted to double our investment every year, double our portfolio. So if you have a $5,000 portfolio, doubling it, right? The focus would be 6% on your money every month. If you earn 6% on your money every month, your investment's going to double every year. So if you have a $1,000 portfolio, and a lot of my folks that come working with me, they start with $1,000. We're selling options, so $1,000 will get you pretty far. $1,000 after a year gives you just over $2,000. After 2 years, if you let it compound, it's over $4,000. At the end of 5 years, you've got just under $33,000. And at 10 years, guess what? You're a bona fide millionaire. But the other beautiful part is if you grow your portfolio to about $100,000, that means every year you're generating over $100,000. And you guys know that the median salaried income here in the States, at least, is $87,000. Now, that doesn't account for you guys that live on either coast. We know your cost of living is quite high, but the average white-collar worker who works 60 hours a week in their salaried job makes $87,000. So here's letting your money work for you, and you're getting more than the salaried income. So a lot of folks that I'm working with, their goal is to grow their portfolio to $100,000 and then start taking some, if you will, a sort of dividend off of them to live on. So what am I actually investing in? So what we're selling is theta decay optimized option premium. Holy crap, that's a mouthful. So what is it we're really doing? We're profiting on time passing by. That's why if the underlying symbol goes against us, we still win, right? Because options are influenced very heavily on the number of days they have till expiration. That's the whole theta decay component of them. So we're working on that rather than worrying about underlying symbol direction, trying to guess up, down, or even playing with implied volatilities, which could be a crapshoot as well. So let me just test your listening skills here. If you want to double your portfolio annually, what minimum returns must you make monthly on your portfolio? Just type it into the Q&A. Is it A, 0.5%, B, 1.5%, C, 5%, D, 6%, or E, 10%? Let's see how many of you were paying attention. All right. Excellent. Excellent. And don't worry if you got this wrong. Just make sure you copy this down on your notes. And I forgot to open up and say, if you've got about 3 sheets of paper, I've been told that my presentation usually results in about 3 pages worth of notes. So if you've got 3 pages of blank paper and a pen or a pencil, a pen if you're feeling very confident today and you're not going to make any erasures, then let's go for it. Make sure you're taking notes. 6% right there, okay? So what about this? A lot, I'm dealing with options. Some of you are involved with options. Many of you aren't. Aren't they risky? Well, here's the scoop about options. Well, let's talk about stocks, Forex, commodities, antique cars. The scoop is our goal is to buy when the price is low and sell back when the price is high. And that's really how we make money on those type of investments, isn't it? Is if we buy low, sell high. And if there's no change in price, well, that means that we have to hold on to that asset for a while and hope that it does go up in price. Now, if you're also involved, like in equities, for instance, you can short those things. So if you know how to sell to open and buy to close, you could also make money if it goes down. So you have 2 different ways to make money, and it's all based on the price direction. But with options, we can also make money. We could definitely make money in those 2 ways. In fact, we can leverage those type of movements with stock replacement strategies. But we could also make money if the stock price goes sideways, or the underlying asset, I should say, because we could also do options on ETFs and indexes. We can make money on time passing by, which is what I like to do. We can also make money with options on whether there's fear or confidence growing in the market, right? That there's all these different influences on an options price. And a lot of people just think that there's two types of options, calls and puts, but depending on which strike prices and which expiration dates you choose for the calls and puts that you're buying and selling, these things behave completely different, right? A near-term at-the-money option behaves completely different than a back month, deep in the money, far out in time option would, right? So a lot of new option traders don't pick up on that. They don't realize that these options, based on their strike price, expiration date, and type, whether they're a call or put, could all be completely different, right? And so we want to make sure we understand that, because you know how we talked about how in a typical underlying asset like a stock, an index, an ETF, you can make money if the price goes up, and if you're kind of a little bit more sophisticated, you could also make money if the price goes down. With options, last time the mathematicians wrote papers on it, there's 27 different ways to make money on underlying symbol patterns with options. So you have all this flexibility, right? So the truth is they were created to remove risk, and it's just how you use them, right? So that makes people a little bit intrigued. What are these crazy option utensils, right? It's a financial instrument called a derivative, yet another crap load worth of word salad right there. Truth is that options are typically bought and sold to hedge against risk on stocks, indexes, ETFs. That's not how we're using them here. What we do is we sell their premium to generate very consistent incomes. Let me explain that a little bit. First, my slide person put this little section in here about me. Now, before I even mention anything about me, let me ask this question. How many of you already know who I am? Because I'll skip these slides. We'll save some time here. See if we can't get Jeff kind of caught up here, because if you already know who I am, there's no reason in introducing myself. Okay, let's see here. I've got a couple of, you might want to jot down some of these different sites here, right? I'm on YouTube. I've got podcasts going, Facebook, Twitter. We've got a Friday show. I founded a company called Trading Trainer. They call me the world's most disciplined options trader. I actually think behind my back, they call me the most lazy options trader. I like to think of myself as the most efficient option trader. That's because I like to plan things out as thoroughly as possible so that I have the least amount of risk, the most amount of reward, and the least amount of effort involved in order to set up these positions that just give us a lot of income. I've been in this business since 2002 teaching people. I've got an ebook that you'll find on a lot of successful option traders' computers and tablets. A lot of people have the home study course. I've got a degree in mechanical engineering, blah, blah, blah. Strong background in commercial business investing. And one of the things I think is really important is I also have been, for the last 20 years, really focusing on how to teach people what I know. And when I started, this was 1997, I spent $27,000 on seminars that year. The scoop is I used to go to the hotels. They didn't have much on the internet back then. You went to the hotel on a Saturday, you spent a half day, they got you to pay money to come back for the whole day on Sunday, and the next thing you know, you were on a plane to like Chicago or something for a week event. Not only did I spend all that money in 1997 on seminars, but then I tried to follow what I learned, and some of you could probably identify with this. I wound up following what I thought they were teaching me, and I gave back $85,000 to the market in stupid investments. So write these down, please. How to crack the code. This is what I exactly did. First of all, I stopped taking different seminars on different topics, right? I stopped chasing shiny objects. I settled on one type of investing and learned it very well. And for me, it was options investing. And what I suggest you do is really examine your lifestyle, right? It's really exciting to pursue, for instance, day trading, right? And some of you can, but a lot of you, when you examine your lifestyle, you know, day trading requires you to be in front of the computer. And if you're not, you miss the opportunities, right? And a lot of us, our lifestyles, we want to go off during the day to Costco, right? And if we don't have our mobile device on us and the notifications turned on correctly, we're not going to be able to stop what we're doing when we're shopping for our Cheerios to make that trade that we need to, and we miss the opportunity, and we could actually create a whole bunch of losers. So I examined what my life was like, and I was trying to like get rid of my Hewlett-Packard job. I was a high-end executive in Silicon Valley at Hewlett-Packard, and I was like, I don't want to do this anymore. I'm working too hard. I would rather have my money work for me. And the last thing I want to do when I finally quit this job, and it took me 8 years of trading to be able to get to that point, is create a new job where I have to sit in front of a computer again. I want to go off and start checking things off of my bucket list. So that's what I suggest you do, is find one type of investing and learn how to do it well. And then hire a mentor who is not only currently doing what you want to do, because there's a lot of mentors out there that haven't touched a trading desk in a long time, and they also know how to convey the information to you. They know how to teach. Learn from guided discovery. I'll tell you, trial and error sucks. Trial and error is slow. It's very thorough, but it's slow and it's expensive. Finally, you're hearing this. I heard this in the presentation before me. Join an investment group. Look over each other's shoulders. Leverage with pride. This is something I learned at Hewlett-Packard. It's called leveraging with pride. In grade school, they call it cheating. In real life, it's something that we all do, and it's actually celebrated. We used to buy Canon and Epson printers and take them all apart, find out how they worked, improve like one thing, and then release it as our own printer. I suggest you do the same thing with investing. Join an investment group, and if you see somebody doing a good investment, follow their footsteps, right? There's no harm in doing that. It's called leveraging with pride. And finally, surround yourself with like-minded investors. There's a lot of naysayers out there, and they'll always try to convince you that you're wrong. But if you're around like-minded investors, they'll celebrate your wins with you, and they'll give you, suggestions when you have losses. It's a great play to do. This is how I cracked the code. Last but not least about me, my favorite thing is that I started a foundation. And so all the profits from my education business, this business that I'm talking, why I'm even here in front of you now, we take it into our nonprofit where I take historically underserved inner city kids off the streets, teach them how to invest. Last year, we actually took over 170 kids off of South Side Chicago and have them, really controlling their own destinies. So I'm really a big, passionate person behind our foundation. Okay, back to the topic at hand. This is especially for Adrian, who said, can we get to the punchline? How do we sell premium? 4 simple transactions. Write these down. We write covered calls. Even more, a lot of people know about covered calls, but they don't have as much experience with covered puts. But covered puts, especially right this minute, are working quite well. So make sure you know how to write covered puts. That's flipping the covered call upside down. In addition to that, we like to write covered calls against leaps. That's supercharging our covered call writing. For you academics out there, that's a bull call diagonal debit spread. We like to do a lot of bull call diagonal debit spreads, even more than writing covered calls. And finally, we like to do a lot of covered puts against leaps. That's where we supercharge our covered put writing, bear put diagonal debit spreads. Now that you've written down those 4 trading strategies, realize that covered calls, the bull call diagonal debit spreads, and the bear put diagonal debit spreads are all considered cash trades, especially when you leg into them. And so the beautiful part behind that is that a lot of us do them in our retirement accounts. Retirement accounts are almost, I haven't found one yet that a broker would give you that has any sort of margin associated with it. So these are all cash trades that we do, and we take advantage of the tax benefits of a Roth type of account. Whereas writing covered puts, because the initial covering position is shorting a stock, this one does require a margin account. So keep that in mind. Please take that into your notes. The beautiful part, just on a side note, of course, is that this guy writing the covered puts, the same pattern can be accomplished with doing a bear put diagonal debit spread. So this strategy right here gets the same thing accomplished, and it can be done in a cash trade. Please note that. All right, so let's go through some details on this. First of all, there's this thing called option premium. When you look at the option price, when you look at, like, for instance, the market and it's trading up and down and the options are going up and down, realize that the option price has two components to it. It has an in-the-money value and it has a premium value. Now, some people call that premium value extrinsic value. Some people call the in-the-money value intrinsic value. Those are usually your academic type nerdy people like me that'll call it that. The premium value sometimes is called time value. That makes me cringe because there's a lot more in that premium than just time, but you might hear it be called time value. We're going to call it premium today. So let's take an example. I got this last night after market close. This is let's run through this strategy. So if I buy some Ford stock, if I bought it at last night's closing price, I'd pay $11.86 a share. And then if I turned around right away and sold the Ford May 19th, now that guy's going to expire in 9 days. The Ford May 19th $12 call, I'd make back 22 cents. That would go towards reducing my cost basis, my break-even price on Ford. It's considered an instant dividend, right? And it's an instant dividend of $22 per option contract sold. That's because option contracts are sold in lots of 100 shares. It acts like an expiring coupon because as we get closer to May 19th, this guy is going to go down to zero. So if we're selling to open, we want it to go down in price. And so time is going to work on our benefit, right? So let's go through the scenarios. What happens if Ford closes above $12 on May 19th? That's 9 days from now. Well, we paid $11.86 per share for Ford. We get $12 back for getting exercise. That's 14 cents per share profit. Plus, don't forget, we got that 22 cents per share profit, and that leaves us with 36 cents total profit. That's 3% ROI for 9 days in the trade, right? Remember, we look for 6% a month. If we do a couple of these a month, we'd have our 6%. But that's not even the ideal case. The ideal case is, what if Ford goes flat? See, I look for those stocks that we couldn't trade any other way, the ones that go flat, right? If they're flat by May 19th, well, we paid $11.86 for the Ford stock. We got the 22-cent instant dividend. We got 22 cents that we get to keep so far. That's 1.8% ROI so far for 9 days. But we get to do it again and again and again. This is actually the ideal case because then I just hold on to Ford and every month I collect an income on it. Finally, what if Ford drops by May 19th? So I paid $11.86. I got my 22 cents. This acts as a profit buffer. So Ford would have to drop all the way down below $11.65 for this trade to even be in the red. Now, in a few seconds, I am going to show you how we can reduce our risk on reward even further, but already built into this strategy is what we call a profit buffer. Let me show you a real trade. So this is on Shopify. We just did this recently. Let me expand this to full screen. So we bought some Shopify on March 14th. We bought 300 shares, came out to about just under $13,000, paid $43 a share. A few days later, now we like to leg into our positions, which means we buy the stock and then at a different time we sell our premium. We sold our premium for $1.80 per share, option share. So that reduced our cost basis down to $41.21. Now, this is including my commissions, so that's why there's a couple of penny discrepancies. And then we just wait. And on April 21st, it turns out that Shopify, it closed up a little bit higher than $47. So indeed, I got exercised and I walked away just for a few days in the trade, about a month, a little bit more than a month, 13.4% ROI. Remember, I'm targeting 6. The folks that work the closest with me, it turns out we do make double-digit returns every month. And so we're actually doubling our money every 5 to 6 months. But we target 6%. We aim for the moon, and sometimes we go for the stars. But we target 6%, and if we get better than that, then that's hooray, right? So let's make sure you're paying attention here. What does investing by selling premium create? Does it create an instant dividend? Does it create a discount on our security? Does it set up for us a profit buffer? Does it act like an expiring coupon? Now, answer all that apply, and that intimates that it's more than one answer. It could be A, it could be A and B, it could be B, A, B, C. What do you think? Vincent's got it right. Yes, the answers are coming in now. Fantastic. It's true. It's all of them. It's all of the above, right? It does all of that. And that's why we like to do this type of investing and this type of trading. Now, I'm going to ask you a question. I'm going to get harder, more difficult with these questions. This time, I'm going to ask you a question about a topic I haven't even covered yet. Let's see what you think. How can we lower our investment, increase our returns, and even convert a margin trade into a cash trade? Should we sell out-in-time options? Should we replace the security with options trading at parity? Should we give up and buy mutual funds, or is what I'm talking about not even possible? What do you think? Which of these sounds right? Vincent's right there with the right answer again. Vincent seems to be the one who gets the answer right every time. I give him kudos. So, yeah, a lot of the yes. So the answer actually is B. Replace the security with options trading at parity. And for those of you that said sell farther out in time options, check this out. This is a time curve. I know that we're getting into some nerd speak here, but the farther out you sell your options, the less diminishing returns they have, meaning you have to, when you sell an option, you put yourself under an obligation, and you have to have that obligation for very few returns. So we actually like to stick with options that are near term and at the money when we're selling options. What we can do in order to really boost our investment or boost our potential returns is replace the security with options trading at parity. So let me go through that really quick. First of all, some of you are saying, what are options trading at parity? Well, option premium is the most when an option is at the money. That's why when we sell options, we sell them at the money. But if we want to go deep in the money, the option winds up reducing the premium. In fact, we target having less than 5% premium, and it's almost completely intrinsic value. Again, all this word salad, could you distill it down for me? Well, in other words, a deep in the money option behaves exactly like the underlying security, moving dollar for dollar, only it's a cheaper price. So, okay, we'll substitute buying the stock or shorting the stock with buying a call or buying a put option. But how far out in time should we go? Well, it turns out we want to go far enough out in time with this substitute option so it doesn't interfere with the number of times we can sell premium against it. And I know this from statistics because I've been watching people do this for over 20 years. For our program, the folks tend to sell about 5 months worth of premium. We collect 5 months worth of income off of these initial covering positions. 5 months. Now, sometimes it's 2 months. It's a bell curve. And sometimes it goes all the way out to 8 months, right? But 5 months is the round number. But we want to cover kind of those extreme conditions. So I always recommend going at least 8 months out in time. And we typically go farther out using leaps because the leaps have some liquidity that makes that initial covering position easy to get and easy to get rid of. So what about a substitute? How do we find one that trades at parity? Well, let's take our Ford example. Last night, Ford closed at $11.86. We could actually use the Ford January 2024. So this doesn't expire until January 2024. That's the leap. The $6 call, that thing has only 2.3% extrinsic. The rest is dollar for dollar tracing in the money value. So that's a perfect substitute option to use. And look, it's about half the price of Ford stock. So if you run it through our scenario, we buy this back month option instead of buying the stock. We sell that front month near term at the money option. That's the premium. It's still 22 cents like it was in our previous example. We get our $22 instant dividend. We reduce the back month's option price down, the break-even price down by 22 cents, all of the above. Running through the scenarios, what happens if Ford closes above $12? Well, we paid $6 for that back month option. We get $6 because you get to get the difference. That's why it's called a spread. You get the difference between the $12 option you sold and the $6 option you bought. So I got $6, which basically wipes out any sort of trade there. But we get to keep the 22 cents. A lot of people forget that we get to keep that 22 cents, which actually now results in a 3.7% ROI. That's a lot more than doing it on just the stock itself. And what if it's flat? The ideal case, we pay $6, we get the 22 cents. The 22 cents expires worthless. We do it again and again. We're up at 3.7% ROI so far. And we're just going to rinse and repeat, rinse and repeat, rinse and repeat. This is, again, the ideal case. What if Ford drops? Well, first of all, if Ford drops, don't forget that we've created this profit buffer, lowering our break-even price, and this is including a couple of the commissions that we've paid, so that's why it says $5.79 there. We've got a profit buffer where the underlying or the back month option would have to drop all the way down to $5.79 before this trade is even in the red. But at the same time, I'm about to show you another way that we completely cut off that risk on reward. Stay tuned. I do want to show you a real life example. I always like to, these theoretical ones are all well and good, but wouldn't it be nice to see a real one? This is one trade that my program participants and I did last month on Pulte Homes. Pulte Homes. So we bought the Pulte Homes January 2024 $25 call. These things were $33 a piece, but the underlying stock, if you look at Pulte Homes is trading up around $60. So we got it for about half price. And then we sold a few days later, April 11th. We only had 10 days before expiration. For $1.15, we sold the $60 call. And when April 21st rolled around, we were a little bit above $60, so we wound up getting exercised. We got exercised for the difference between the $25 call and the $60 call. So we got that $35. We wound up walking away for just being in the option part of the trade for about 10 days, being in there under a month with 9.5% ROI. I mean, it doesn't get any harder than that or easier than that. And those two transactions on April 21st, they happen automatically. We just had to do two simple transactions. They weren't even time dependent. on those 2 separate days, and then the trade is set for life, right? Let's keep going. So I just want to remind you, you earn 6% on your money every month. Your portfolio, that's our goal, because if we can invest our portfolio, earn 6%, we're going to double it every year. How can we drastically reduce our risk on return? Sell half as much option premium, sell out in time options, collar the investment by marrying a protective option, or is what I'm saying not even possible? What do you think? Jack asked a good question, by the way. He was looking at the previous examples. He said, doesn't the sell to open require margin? Actually, when you have a covering position in place, whether it be the stock or whether it be the back month option, you're actually protected. It doesn't require margin because you have that initial covering position set up. So your broker looks at it and says, if you get exercised, guess what? I can go ahead and take that covering position and you don't have to worry about the margin. So good question on Jack's part. All right. So the answer is we want to collar our investment by marrying a protective option. Now, here's where we do something a little bit different here at Trading Trainer. A lot of people who think about collaring the investment, they think about doing it at a loss. What we like to do here is we like to select the correct option and select the timing for that option in order that not only does it protect our investment, but it also can be sold later, rolled out at a profit. So remember I showed you this guy? This actually is a representation of this very nice trade that we did. That lasted over 8 months. And I'm just going to walk through, we did this on 2020, but man, this thing lasted all the way up until 2022. It's a perfect example on this. So check this out. We bought ticker PAAS. We bought shares at $34.73. Then we went ahead and sold the premium, $1.76. And at the same exact time that we sold the premium, which was a few days after we bought the initial stock, at the same time, we went ahead and bought a protective option. We bought a protective put down to the $34 strike price. All well and good. We're set up until this thing expires. On September 18th, it expired, so we wound up getting to capture that $1.76. It expired worthless. That $1.76 is ours. And we looked for the best time. It took about less than 3 trading days. We looked for the best time, and we sold back our protective option. We didn't need any more because we didn't have our premium sold. We sold it back for more money than we paid for it. So in other words, we got to keep the $1.76. And in addition to that, we got an additional $1.15 when we rolled out a protective option. That's 2 sources of income every single trading cycle. We did it again. Sold premium at $1.47, bought the protective option at $3.01. Premium expired worthless, meaning we got to keep that $1.47, and we sold back the protective option for $3.62. So we got an additional 61 cents on above and beyond the $1.47. And we just kept doing that month after month. And this is our typical trade right here, where we just one time purchase a stock or purchase a back month option, whether it be a call or a put, and then we sell premium, buy protection, roll it out. And what's really nice is if you look at these, we're only doing 1 day of trading and then maybe a second day of trading when we roll out the option per month. So this isn't like we're sitting in front of the computer all day. We do like 2 transactions per month every month in order to create this income. But here's the other thing that's really cool. Check it out. We've got that protective option in place. And this column here keeps track of our break-even price. Look what happens after the first month of selling premium. We're protecting our position to the $34 strike price with that put. And check it out. Our break-even price is below the $34. So we're actually protecting our position for more money than we've got in it. And that's what this here shows. So if I look really closely, there's my break-even price. And you can see this is the first month. This is the second month. This is the average time that our premium selling investments last. So what's really nice about that is if our position is returned or exercised, we walk away in 5 months with a 65% ROI. However, if the underlying goes against us, we still walk away from the position with a 50% ROI, right? So whether the underlying symbol goes our way or doesn't go our way, because we're not even profiting on time passing by, we're profiting on sideways moving stocks, we make money either way. We're taking advantage of the theta decay, the time passing by. That's absolutely brilliant, if you ask me. If I don't mind say so myself. You'll also notice right here is where we now have no more of our own money on the table. Just because the time passes by, it reduces our break-even price, and now we're protecting our position for more money than we actually have in the trade. So what do we have when our cost basis or our break-even price is less than our protective bailout price? A risk-free investment, a losing trade, too much complexity, a pipe dream. Peggy C is quite the skeptic, which is okay. You can look at more of my portfolio online. The answer is a risk-free investment. Absolutely. So let's review the 3 steps. I'm running out of time here. First things first, buy or short an underlying security, or even better, if you can, buy a substitute option trading at parity. Step 2, sell a near-term at-the-money option for its premium value. Create for yourself an instant dividend and a profit buffer, and collar this whole thing with a married option that is 3 to 6 months out in expiration to protect your investment. Now, we talked about, I showed you how we leg into our positions. So we didn't talk anything about covered puts today or the bear put diagonal debit spreads. I don't have enough time to do that, but I want you to make sure that you jump into that understanding if you're going to do that, because like I said, a lot of our program participants are using those particular strategies right now. When you're doing the covered call, what you like to do is you find these sideways choppy stocks, and we actually have screeners as part of our program where we look for these sideways choppy stocks that you can't trade directionally any other way. And when they're at the bottom of the channel, that's when we ideally like to either buy the stock or the ETF or index, or we buy that call option, that deep in the money, far out in time call option trading at parity. We put a bailout in place, and then we wait for it to hit the level of resistance. That's when we sell our near-term call option. We buy the 3 to 6 month out put option as protection. We let the call option expire worthless, and then we sell back that put option when it bottoms out. Rinse and repeat, rinse and repeat, rinse and repeat. Now, if you're using the covered puts, what's really nice about this is you can start when it's at the top of the channel. So if you happen to see a sideways channeling stock and you don't want to wait for it to bottom, here's where we either short an underlying symbol or buy a put option trading at parity. Then when it's at the bottom, that's when we sell the near-term put option, buy the 3 to 6 month out call option as protection. The put option expires worthless. The call option we roll out to the next month. Rinse and repeat, rinse and repeat, rinse and repeat. That's what we do all day and all night. So how would you like to, and by the way, for Peggy, just go, and I know that you say that the time period is not typical at all looking at the late 2020. Just look for any sideways choppy stocks. If you'd like to reach out to me, I gave my contact information earlier, and I'll give you 10, if not 15 stocks off the top of my head that are sideways choppy right now that you can do this strategy with. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, and also have support whenever you need it. Because that's what it's all about, isn't it? It's all about saving time. It's all about creating clarity. It's all about getting results. So would it be okay if I take a couple of moments? It looks like we started 10 minutes late, so I'll try to get this done in 5 minutes. And that way Jeff can get back on task here. If I or get closer. If I take a couple of moments to tell you a little bit about my materials, my training and tools, and see if they might be right for you. Awesome. Thank you. So this is for someone who doesn't want to pay for a bunch of different data subscriptions, wants everything they need in one place, doesn't want to miss any opportunities, wants to spend more time doing other things than sitting in front of your computer, but doesn't want to do this alone, wants step-by-step instructions. Basically, in summary, it's someone who wants consistent and reliable results. I'm going to skip the testimonial. This is a really powerful testimonial, but just for time's sake, we'll move on. But I help a lot of folks like this person who was a teacher and wound up getting diagnosed with cancer, and we wound up turning things around for her so she could get on with her life. What is this all worth to you? So in our program, just very quickly here, we've got our, this shows kind of our webinar, our web portal. We've got all sorts of video tutorials that you can get a hold of. We've got our monthly live classes and their replays. So the monthly classes are like lecture series, and the replays are like a veritable encyclopedia of everything that you could ever learn. We've got screeners. We've got 3 different screeners for finding these sideways choppy symbols. We got planning tools that help you plan out to the nth degree how this trade's going to work. We have our weekly live workshops. These are my favorite. These are where we actually take symbols, we plan them out, and you can plan them out along with us, and then we give you the trade so that you can follow it and even follow it with your own portfolios, right? We give you the trade, and you learn. We call that learn while you earn. And then we have a messaging system within our web portal where you can send us your trades before you make them, and I personally will review them to make sure that you're not going to do anything silly. So what's that worth to you? Well, I'm also going to tell you that we have a double your money back guarantee. So I want to work with you the same amount of time I work with my kids that are in the kids that are in my foundation. And so I asked them to commit 6 months of time with me. Now, I don't think it's going to take you 6 months to pick this up. In fact, I think you'll pick it up in 1 or 2 weeks. And if you've got some options experience, maybe even faster than that. But I want to be able to review your trades and have you follow along with my trades for at least a full 6 months. So at the end of 6 months, if you're not profiting off of these positions, not only will I give you your money back, I will also give you twice your money back. That's how confident I am in working with me for 6 months. So that's part of it. And also as a bonus for this current conference that we're in, for all you conference participants, I want to make sure that I set you up with one of my coaches, just so you guys can talk about where you are right now and where you want to be at the end of 6 months. And they'll help you chart the fastest way possible from point A to point B. So if you add in the double your money back guarantee and the strategy session, where does that bring you? Well, I'll tell you, our program typically costs $597, about $100 a month. But again, because you're part of, and there's no subscription, there's no you don't have to worry about other data feeds or anything like that. It's a $600 charge. And for today, for you conference participants, I'm reducing it by $100 to $497. So you get $100 off just because you're part of today's conference. So here's how you do it. You go to this optionsinvesting.org optionsinvesting.org/MetaStock. In fact, I'm going to test this right now. So we are at optionsinvesting.org/MetaStock. And here's the important part, because if you go here, you'll notice it says the regular price. You have to go to this promo code field and you have to type in 100DISC. 100DISC. Yes. And it'll reduce the price to $4.97. So that's the key to be able to take advantage of today's bonus. 100DISC, and that'll drop $100 off the price. You could also, if you're having trouble with the order form, just give us a call. Here's our office number, 970-266-8146. Operators are standing by. Peggy wants to know about selling naked puts. Selling naked puts are synthetically equivalent to writing covered calls and doing a buy right. And so that's great and all, but by doing legging into the position, doing some timing and looking for the patterns, and that's where MetaStock, the software MetaStock, comes in. It helps us find those tops and bottoms of the sideways chopping. Even separating our two trades by a couple of days, that will reduce your risk and increase your profits drastically over just selling a naked put. And so that's why we like to do that. I like saving the naked put strategy for a clever way of putting positions long-term into my portfolio, but that's a great question. We already answered Jack. We answered Adrian. I think we answered all the questions unless any other ones have come up. And otherwise, I think I'm done 5 minutes sooner than when I started. So I hope that you guys picked up something. I think that in the chat section, we may or may not have, yes, we did. In the chat area of the webinar software, we've put in the URL, we've put in the promo code, we've put in the phone number. And so, Jeff, thank you for your time, man.
Hey, Jay, thanks for coming. We also put it in the YouTube chat. So if you're watching on YouTube, you can go ahead and join that. You can go ahead and click on it there too. One quick question from Timothy just came in. He wants to know if the renewal rate is the same.
Well, hopefully at the end of 6 months, you'll be good to go, Timothy. But at the same time, we do have people who like to come back because they like to come in on those Thursdays for the they like me handing them the trade, right? Because on Thursdays we plan them out together and then I put it up on the web portal for everybody to follow. And they like to have me review it. So it's actually discounted for subsequent months. You can go month to month, or we even have other periods. But hopefully at the end of 6 months, if you're one of those people who wants to fish for yourself, you're good to go.
I'm not sure what this question means, but I'm going to throw it at you anyway. Maybe you can sort it out. But Kishore Chandra wants to know, does it mean it is a risk-free strategy 100% of the time? Oh, I guess I understand what that means when I read that.
Yeah, so what he's pointing out to, and so it becomes risk-free as time goes by because we collect those additional premiums and such. It reduces our cost basis, our break-even price into our position. But if your positions don't last 1 or 2 cycles, and they usually become risk-free, we've collected enough premiums, we've collected enough money from rolling out our protective options that we can get our break-even price. If our positions don't last long enough for it to be risk-free, it's not. So what you think about is when you initially put on the position, and this is in our program, we really focused on that first set of trades because those are like the most important. That's when you have a potential for loss. But if you can get your position to last 1 or 2 cycles, then the position becomes risk-free.
All right. That's the end of the questions. AJ, thanks for coming in.
Thanks, Jeff. I love these events. Thank you for putting them on. You're so good at putting them on.
Oh, well, thank you. It's a team effort. Thanks for coming. We'll see you again real soon. All right. Very cool. Let me go ahead and do this. And we will do this. Okay. All right. Well, I am kind of getting organized and back to the PowerPoint. Here's what I need from you guys. Sorry, Kishore, we didn't have. You can get in touch with AJ. Give him a call. 970-266-8146. And we didn't get to that question just because it came in right after we kind of transitioned, but I'm sure he'll be happy to answer it. So anyway, all right. And then we'll do this as well. Now, before I say anything else, the next thing I'm going to say is I want you to help me out. You're going to help me pick a winner. We're going to give away a prize. We're going to give it away in just a minute. But in order to do that, you need to pick the winner. So what I would like you to do is give me a number between 1 and 10,689. If you'll do that, you can put it, if you're watching this in YouTube or in GoToWebinar, just put it in the chat set area. And that way, I can tell you who won the prize. I'm going to tell you about the prize, but first I'm going to tell you about Stocks and Commodities magazine. I want to say thank you to Stocks and Commodities for sponsoring our event. Appreciate that. It's really, really, they've been supporting all of our events. You know, we've been running the summits and the conferences. The summits were the first event we started doing, and it was an all-day, full-day event. Like we started it like over 10 years ago now. Maybe it was just exactly 10 years ago. Anyway, they sponsored this. I remember calling them up and going, hey, this is what we want to do, and we're going to kind of bring in these experts, and they're going to talk about trading. Here's what we want you to sponsor it. And they were very, very, they thought it was a great idea. They've been sponsoring us. They've been along for every single one we've done. So I want to say thank you to them. And also our other sponsors, CMT Association, great sponsor, and of course, AAII. So now that we have a bunch of numbers, the first one to give a number was Vincent A. I think he was first between YouTube and GoToWebinar. It came in GoToWebinar. The number he gave was 9456. So I'm going to figure out who that is, and then I'm going to tell you what the prize is. So we'll do it in that order this time around. Let me go ahead and go to my handy dandy spreadsheet, 9456. And the winner is Bill L. Bill L with a Yahoo address in the United Kingdom. So we're careful. Kelly kept getting me that mad because I just say full people's names and email addresses, dox them on the internet. I guess I shouldn't do that. But okay, so this will be Bill L in the UK with a Yahoo address. That should be pretty specific. If that sounds like you just win. You just won. And what did you win? Well, I'm glad you asked. We are going to give you the aggressive power trader. And let me tell you what that is from the description here. So this is an AI-powered algorithm put together by Vlad Karpel. And it's an AI-powered algorithm that helps him bank winning trade after winning trade. It has a good winning record through good months and through bad months, and good markets and bad months. With this, you'll get a watch list of the stocks that Vlad trades with his own money every day before he trades them. You didn't even have to trade them. If you don't want to, you can just watch and see how well they perform. So that's what you won. Let me go ahead and make a note of that because if I don't make a note of it right now, I will totally forget later on to come back and watch a YouTube video. So congratulations, Bill, on that prize. And I better not forget. It didn't copy to the clipboard. Anyway, hopefully you had a chance to read the slide. We've been talking about MetaStock all day. MetaStock's been an award-winning software program. We've been rated #1 for 30 years in a row. Scanning is what we love. Testing, a great tester, one of the best testers in the market. I'm not biased at all. The patented forecaster we talked about. So the offer we have for you is if you pay for a month, we will give you the second and the third month for free. Our DC version in the US costs $69 with all of the data, everything you need to run it. That means daily charts. That means if you buy a month, we'll give you the second and third month for free. You can try the highest rated software for 30 years in a row in its price category for 3 months for about $23 a month. So if you have any questions about any of the offers today, you want to talk to us, you have questions about MetaStock, or you just want to sign up, give us a call at 800-882-3040. You can chat with us online at metastock.com/saleschat, and you can get in touch with us at metastock.com/comp-promo. So our next speaker, you can tell it's getting a little bit later in the day. I'm losing my ability to speak again. Our next speaker is Toni Hansen. Toni is a good friend of mine. She's coming in to talk about trading naked. So I'm going to go ahead and kind of turn the time over to her. Let's get you in here, Toni. How you doing?
Hey there, I am doing good. Let me see here. It's been a while since I've used videos over here. Do you see me? Oh, hey. Hi, everyone.
I don't know why I hide my camera, so I can't see you right now. But let me turn the presentation over to you, because it's so distracting for me to see myself. I usually hide it under something.
I know, I'm not used to it at all.
Yeah.
Remember when we were like at the forefront of all of this online trading and marketing, and we could do it all when we were younger, right?
I haven't lost it yet.
Yeah, now I can't catch up with all of the influencers these days.
Oh, I guess I have. But yeah, I hear what you said. I can see your screen. I can see your PowerPoint over there, but it's kind of like, I'm not sure.
Yeah, let me see. I think I've got you on the wrong screen. So I'm going to try to switch this on over here. We want to show you screen two. All right, there we go. So you should see 4 charts. Is that right?
I can see 4 charts, yes.
Okay, perfect. Okay. Let me get my slideshow going. We're actually going to come back to the charts here too in a little bit.
Okay, sounds good. I'm going to get out of the way. It's your turn.
All right, thanks. All right, welcome everyone, and thank you for joining me here on this lovely afternoon. It's a little bit toasty here in Tucson, but hopefully you all are doing well. The class that I want to give you today here is 3 specific signs of trend exhaustion. So what we're looking at is when we're dealing with a trend, of course, how do we know when that trend is going to end, right? When can we expect a reversal? When can we need to increase our trade management so that we're starting to protect more of our gains? And when can we start to build into our positions more and know that we have a really good probability of a nice trend day? Like today, for example, today was a perfect day to talk about trend exhaustion. And I'm going to go to the live charts here in a little bit. You might see me looking off to the side here because I've got my PowerPoint on another slide here. So we're going to go on through here. And hey, you guys, don't bet the farm, right? Standard disclaimer. So how do we recognize trend exhaustion? So first of all, the basics, of course. Everybody here probably knows what a trend is, what it encompasses, what's an uptrend, what's a downtrend. Well, the thing that I want to show you here is that this very template that I've used here is one that I've used for over 20 years. I came into online trading back in the mid-1990s and I've been here ever since. And what is so interesting about the markets is just how much repetition. It doesn't matter how many years have passed, how many different markets we've seen, how many bull and bear markets, how many things we've seen come and go, you know, are like Forex, for example. Forex wasn't a thing when I started trading. And now we've got the cryptos and just all kinds of markets. And no matter what you're trading, if you understand technical analysis, basically all we are doing is we're just reading human emotions. It doesn't matter what kind of algorithms there are out there. You're still going to be able to trade just by looking at the pure price action on the charts. And that's something that I think a lot of people don't really fully accept. You know, they want something that is a crutch that they think is going to help give them a better edge to trading. And a lot of those crutches really serve more as a way of second guessing yourself, because a lot of the indicators, they rely so much upon this conglomerate of things. I call them the building blocks of price development. So you've probably heard me see that talk about them many, many times over the years. And what they are when our patterns are happening in specific types of markets. So in a specific area in a trend, dealing with specific volume, dealing with specific momentum, and dealing with specific time development. So in today's class, I'm going to be going over all of those and how they work together so that when you are using things like moving averages or Fibonacci or stochastics or Bollinger Bands or whatever else you want to use out there, you're starting to understand, hey, under what circumstances is this going to work really well? And when do I need to back off and not pay as much attention to that? I want you to start to learn how to read charts pure charts, pure price action. So this template that I have here, this is something where you guys will see this exact formation play out day in and day out in the markets, different time frames, over and over again, where you can practically overlay a day's stock or a price action onto this chart and it will repeat. And that's the beautiful thing about this, because we really are just trading human emotions. And I originally had no interest in becoming a trader or having anything to do in finance. I was interested in human beings as people, as creatures of habit, and where we came from and why we do the things we do. I was an archaeologist for a number of years before I fully got into finances. Quite a different about face, right? Not something that you would expect. But I think that my background in the arts and just studying human behaviors, patterns of migration over the years and how we react to different external forces is really something that anybody can bring and use as it applies to the market as well. So without further ado, let's go forward here. And I am going to go back to my screen. And we are going to take a look at the 3 signs of trend exhaustion that you can study and have a really good visual representation so that you can apply them to the markets. And it doesn't require a whole lot of mumbo jumbo extra programming you need to add or anything like that. These are things where you can really just use your own eyes, and you can use your finger if you want to. So something like a measured impulse move. So impulse moves in the market, these are those moves where we get really strong market action and we don't get a lot of that choppiness back and forth. And in fact, this is what drove my trading here this afternoon. And this is a chart of the micros on our Dow. But if we look at our Dow chart here today, you'll see that, let me grab a highlighter here. We have these primary massive moves that are taking place in the market. And so when we're looking at impulse moves and talking about trend exhaustion, well, I want to see something where the momentum is about the same as it is in the past. And then I look at the size of that extension. It's really simple, right? Very straightforward. But you have to keep in mind that all of these signs of trend exhaustion work together. So when we're looking at the size of an impulse move, I'm also looking at the momentum of that move. How fast is it changing? Is it something that is slower than previous moves, or is it something that is substantially stronger than previous moves? And how often am I seeing that impulse move repeat? Is it one that is a smaller move, but it's repeating over and over and over again? Or is it something that on the larger time frames, I'm not seeing as many examples of it? And those are the ones that we really want to get into, because those are the ones that are going to have the strongest potential for a much larger follow through and a much larger reversal, like our beautiful reversal that we had here today. And so when we're talking about these measured impulse moves, all we're talking about are those larger and smaller waves of price action. So the ones that you see here in red, these are the ones that are happening over and over and over again. And when it's on a small time frame, what this means for us is that we've got to watch out when we're trading a pattern that's coming into that small zone of comparable movement, because that's where our reversal patterns can take place. That's where things can go into congestions. That's where things can totally flip around. And it also, so what that means is that on those larger time frames, if we see certain sequences developing in the market, that can become an excellent zone for taking a new trade. And in fact, this exact pattern here is very similar to what we saw today. I'm going to see if I can make this a little bigger. Maybe not. But what we're going to be looking at right here is this is what I call a leg. And I like to think of a lot of trend moves in terms of like anatomical figures. So this is our leg here. And in the middle, we've got that kneecap. So if I clear this, you'll see that there's a little bit of a pause there where we kind of go into like the smaller zone of congestion, but we've got those bigger impulse waves. And then we go into what I call the foot. So here is our foot. And one of the most beautiful signs of trend exhaustion and a reversal pattern happens when we come into a low where it bounces, it breaks that channel, and then we get these 3 fairly evenly spaced lows where you're seeing these smaller measured impulse moves. Now, in this particular pattern, what you want to look for is a pivot high here that's before the 50% between these lows. So, for example, if these are our 3 lows right here, if we look at the 50% zone, I want that pivot high to be at or before the 50% level. Because once it puts in that 3rd low, I have a really strong probability that it's going to reverse. Now, another thing that I need with this particular reversal pattern is I want a parallel trading channel. I would prefer it if volume spikes on that 1st low, has a lower volume spike on the 2nd one, and then a lower volume spike on the 3rd. And this pattern is called momentum reversal. And it is something that I love to teach newer traders because we do see it over and over in the markets. It's not always textbook, but once you learn the basic anatomy of this trade, you're going to be able to start to branch out and start to recognize it when it doesn't look as perfect as other circumstances. And in fact, coming off of the high up here, we also have another variation of it. But you'll notice that the channel is narrowing, whereas down here we had a slight widening with the channel. That's really important in terms of trend exhaustion because when you have a parallel channel like this and it's widening up just slightly or it's exactly parallel, your reversal probability off of that 3rd low is very high that you're going to get a strong reversal. We also want to look at this momentum here compared to here. You want to see it breaking that channel and then having this really nice foot formation. Up here, because it's narrowing, we have a little bit more of that back and forth action before it finally goes and turns around. But you'll notice this nice big blue impulse move here. Well, when we did get our reversal, look at where we started to see things stalling, right at the same momentum move with the same size. So it doesn't mean that the trend can't continue, but that same impulse move with the same momentum has a greater probability that you're going to see some sort of corrective move happening. If you've had multiple impulse moves in a row, there's a greater probability that that's going to either go into a much longer correction, like what we're seeing basically on a lot of our securities on the monthly and yearly timeframes right now, or you're going to get a reversal happening. So it's a great time to start to look for smaller time frame reversals, but when that momentum is really strong, you have to be prepared for choppier potential action to be happening here. And this class, this PowerPoint here is one that I put together about a week or so ago. And we were looking at this as a target zone for the market to reverse. And this is something that I was teaching live. I love to use live examples. I teach a class every day at noon. And I love like traders starting to see what is happening as we're talking about it and understanding the reasoning behind what we're expecting next. And just seeing like those light bulbs going off when they're recognizing it in person, it's wonderful from the standpoint of a teacher and an educator. My mom was a teacher and my dad worked at the university as a head of the engineering science, computer science department. Was as I was growing up. So you know, I come from that background of trying to figure things out. You know, I never accept the fact that people will say, oh, hey, this pattern has a probability of success like 80% of the time. I want to know in that 20% of the time, why is it not working out like it does the rest of the time? And there's always a reason. I might not fully have a great explanation for it yet, but the more time you spend studying something, the more you're going to learn. And even now, I've been trading for 25 years and I'm still learning stuff. And I hope you guys realize that there is no end point in your journey. You're not suddenly a trader where you know like all there is to know about the markets. There's more that I don't know than I do know. But I know that a simple system like this works, and it has worked consistently, and it is something that has been used for decades in trading. And so, you know, this was our measured move here on the ES. And if we go and look at what happened, that was exactly where the low held, and we went and reversed. This is also a pattern called a 2B. It's one of the reversal patterns that I teach where our first low is a little bit higher than the initial low here. And then we go to a slightly lower low, again, with that measured impulse wave, and it creates a trap. And it might get off to a little bit of a slow start, but it is a very good precursor many times for that really strong reversal. So let's go and dive into this some more here. My explanations are popping up here after my slide. But anyways, you know, the impulse waves are fractal in nature. You see them over and over again. So when you're at the end of that larger impulse move, basically what that tells me is that I need to go into a smaller scalp mode if I'm going to trade at all. So on something like the 10,000 tick chart on the ES, you know, it's easy to find stuff on the smaller time frames. But if I was seeing this on something like a 1,000 tick chart on the ES, I would want to stay away from a market where we're now hitting that impulse move unless I have that bigger pattern, such as something like this 2B reversal pattern here, because there'd be a better chance that it's just going to go into chop. So here's another example just showing you how these impulse moves hold at these levels so well. And it doesn't mean that you're going to lead to a full reversal, but it means that trading is going to get more difficult. So a lot of traders, when they're trying to, you know, ride the trend and try to get the most out of a move, they might not get into a trade until it's already approaching near the end of an average impulse move, especially if you're looking at trading like bull flags and bear flags. And they might have felt, oh, wow, I know that, you know, the market's going to turn around here. This is another 2B here. You've got it on the bigger one and then the smaller here. And they'll just kind of keep passing, you know, and the problem is once you get to those impulse moves that are average, it becomes a lot harder to get as much out of the trade. And in fact, one of the things that was really hard for me is that I would get into the new impulse move at good levels where it was beginning, but I wouldn't hold on to it enough. I wouldn't hold through the corrections. And then I found that I was just doing so many executions, and I would make a great move at the beginning of a trend and then maybe at the end of the trend, but it missed the entire center portion of the trend. How many people have been there? Who can relate to that? You can't relate to that. I don't know that I'm going to believe you. But yeah, it is something that we definitely always tend to run into as traders. And my chat box here is not quite working properly for you guys. So Jeff might have to help me out later when it comes to questions that you guys might have. I see questions and answers, but it's all blank. So it's very bizarre. Anyways, let me
There
clear
is
this here.
one question.
Yes, go ahead.
Let's see. Tamundi says, how do you treat a foot reversal with a second high that is higher than the first high? I think foot might be misspelled.
Okay, so that I tend to go into looking at it as a megaphone. So basically what you're doing is, here's your leg, and I wish I had a different color on here. And then you're going into this megaphone formation. So in these, you're going to get a widening up. And in one that is a reversal, very important, in a reversal megaphone, each of those pivot points between 1, 2, 3, 4, and 5, you're going to see a widening. So from 1 to 3 will be your smallest, 2 to 4 is going to be wider, and 3 to 5 is going to be even wider. And in that last portion, if it has 2 impulse moves that are smaller, similar length, that's a beautiful example of where you would get a reversal of that trend. Also, look at the whole megaphone as a whole. Is it something that is still inside that downtrend channel, or is it something where the downtrend channel is over here and now the megaphone is breaking out of that channel? Because once it breaks out of that channel, your probability of a stronger reversal is going to be much, much higher than if it's still in that channel, because it could go into a bigger widening up zone where it just kind of takes a little bit longer to play out. And I'll see if there's any examples of that here as we go forward. But I do want to show you guys more of our action today too. So I'm going to kind of flip through some of these here a little bit fast. And because we've got a lot of stuff here to cover. So momentum shifts are going to be working with our impulse moves, right? So we saw that with the foot, with our foot formation, we're dealing with a momentum shift. That is what's happening. So on some of our impulse moves, we don't have that. We don't have that foot to shift the momentum, and on other ones we do. The ones that have that foot usually are going to give us a higher probability of a new reversal, an impulse move that is going to bring in strong momentum. If we don't have that foot, we can still get a strong reversal, but the probability or predictability of it is lower. So it's easier for traders that are first starting to have more confidence in buying something like this than it is buying something like this, because that is such a strong momentum move. It could go into a trading range. In fact, I call this a widening up zone because it really can do anything. It could go into that megaphone before it turns around. It could go into that foot. It could go into a bear flag and continue lower, just depending upon what the larger time frame is. So when we're looking at those impulse moves, if we're also looking at momentum shifts, this is another clue that we've got trend exhaustion coming into play. So notice here we've got this nice impulse move on the downside here. It's coming in about 3/4 of the way. It's probably around a 76.4% retracement. In fact, if you're going to use any indicators, I love Fibonacci. They just work so well in the markets, and it's one of the things that I teach on a daily basis, because if you need something that's kind of a crutch to give you that added confidence, it is a great one, a great tool to use. The thing is, you have to know how to move your levels. So I use fib fans a lot to help with understanding time development, so that you're not getting into a trade too early, or something is triggering too late, but it's gone past that do or die point. So it's no longer a good level to go and take the position. So I highly recommend that if you're a reversal trader, or if you're looking for trading continuations with like bull flags and bear flags as well. So in here, you'll notice that we've got this change happening where it's coming in to retest this low. First leg is stronger, second leg is weaker overall. Even though we've got those shorter bursts of the smaller impulse moves, the overall momentum is shifting. So compared to our first drop here, now our channel has a much more gradual drop. that is going to give it a much stronger reversal coming off of this. This is one, there's actually, this is a pattern, I call it tilted avalanche. So another thing that we look with trend development is I pay very close attention to wave count. And I focus mostly on 2 wave count. So in most of the trends, what I'm looking at is a move. Surely there has to be a way of changing this color. It's been so long since I've used this platform. But anyways, usually looking at like a 2-wave count like this. So 1 wave down, and that can have 2 smaller waves, 2-wave correction, and then 2 smaller waves. And each of these can have 2 waves. In fact, it's very, very common that they do. But there are times where we can get 3 waves. And usually what happens with that is that it'll take the same amount of time. But what you'll notice is that first part of the correction, and let me go over to the pattern instead here. That first part of the correction here. So if this is our first leg, and there's your second leg, what happens is you get your first leg, second leg, third leg, and your 2-wave corrections is just tilted. And that can happen in many forms. You can have a shorter one with a bigger middle one, and then a shorter one, which is what happened right here. You could have one that is a little bit tilted in the middle like this. And you can even have it like this, where it's coming down, we get the tilt, we get the second wave, we get the tilt, and then we get the third wave. But really, first correction, second correction. That's how I'm looking at trends, and that's how I read them. And it's been a big game changer in terms of thinking, oh, we'll just count in waves of 3, you know, like I've seen like an Elliott wave and things like that. So this is, I come from a background, you guys, I didn't have any education as far as technical analysis goes or how to read charts or trading like that. My very basic understanding was, hey, buy a 7-day pullback into a 20-period moving average. And that was all I knew. And then it was like, well, okay, well, why is it working now? And it's not working here. So what is different? Because clearly there's a lot more that goes into it. And that is where we talk about all of these signs of trend exhaustion that we can look for. So the measured impulse moves, very big one, because it tells you, whoa, be more cautious trading at these levels, because we could start to go into more of the choppier back and forth action. And then momentum gives me a heads up that, hey, I have a better chance of getting a stronger reversal to the trend if this momentum shift is taking place. So flip back over here. Come on, man. I was trying to grab my normal tool here. There we go. Oh, here's an example showing the fib fans and how I use fib fans as well. So this is one where you can see average impulse moves. We've got like here, here, and here. These are all about the same. In here, we have a little bit of a change in momentum. So this becomes something you would watch if you had momentum that was coming in much quicker. But on average, we were getting more of this size for an impulse move. And then what we had here was that slower momentum shift. And within it, we had those 3 waves and the slower shift there on that third wave. And so 2 waves up, a little bit of a shift here. 2 waves back, comes in, goes into this base. I take my fib fan from the low to the high here. I like to see this pullback hold either the 50% or the 61.8%. And then that 76.4% is serving as my go zone. I know that I have a good probability that I can get a new trend starting at that 76.4% zone. So that momentum shift, very important. I got that nice, beautiful 2-wave impulse move. They're the smaller impulse moves. And then I got that congestion. And this is how, over and over again, I'm able to get into these positions where it's very close to the absolute low or absolute high of a new trend because I'm using all of these building blocks put together. Yes, it takes time to learn. Again, I have classes every single day at noon, so you can get basically your immersion program like an exchange student. Hey, drop me off in a foreign country and let's learn a language I don't speak. That's very much the experience. But once you do know the language, you're going to really have a good grasp. And it's like riding a bike. It doesn't matter if you take time away or you go to a different market, because it's not going to change. So here, this is some of my executions that I had on this particular trade here. And where'd my pen go? Here we go. So what you'll notice here is that I also looked at the two-wave correction here. And then look at the volume, you guys. So volume, when you have that dropping and you got this congestion forming, that's a really good indicator that you got a very strong probability that you're going to see momentum picking up, that you're going to be able to start to get that really strong move coming into play. And that is what we had here. Now, this is something, it actually continued even further. I teach classes from noon to 1300 every single day. And so over and over again, you're going to see my recent trades, things that I'm trading, things that I'm watching to trade. And this is something that triggered right after our class. And here, what I was looking at was these smaller measured move levels that we were coming into here. And looking at, it's kind of hard to see it, but a lot of times if I'm trading like the NQ, I'm also looking at the Dow and the ES. So I might see something changing on the Dow or the ES that I might not see on the NASDAQ chart. Now, what I usually look for this pattern is 100% breakout. But I know that if it pulls forward without a pause and gets to 76.4, there's usually going to be a little bit of a correction. So what that means to me is that these aren't full exits on the trade. These are just where I take partials so that I can try to get some better price action and lower my overall basis at that point. You could also just build into a position, but if I know that I've got a chance of getting a little bit of a correction, it makes sense to go ahead and try to get a better base price. Sometimes it will backfire. Sometimes something will just kind of keep going and it won't do that correction. So that's why when it had that little shift there at the top, I took a little bit more off, because that shift told me that I'm going to get a stronger little pullback, and usually it comes back to like the 61.8%. So you can do that to play around with it to try to get more. And obviously volume, again, plays a big role here in our trend. Now let me go switch here. So here, this is something that we see on trends a lot. And it is a huge reason that many traders get trapped or flushed out. So when we're talking about momentum shifting and we're talking about the trend development, a lot of trends will have those three waves in them where the waves are shifting. So you'll have like the strong drop here. Usually that has a very clear, distinct two-wave move. You'll get the second drop here, again with the two-wave move. And then the next one, it might start to chop around a little bit more, and you'll get more of a narrow channel as it's coming to lows. And what often happens is you'll get the break and traders are like, woohoo, I've got a break of the channel. It's showed the momentum shift. I'm at really good support. It's going to take off. This is something you see in penny stocks a lot too. And we saw this in COVID infections a year and a half ago as well. And it pops, and then it flushes, and then you get the turnaround. So I'm always more cautious if there's a lot of choppiness in here as it's moving ahead, because even though that can, yes, give me a decent little flush on the downside, there's a better chance that it might flush. So if I see something and it's not just continuing right away and I'm in it, I am not going to take much of a pullback on that. I'm going to go ahead, and if it pulls back at all, I'll probably get out of it and try to watch for that flush, or I'll take partials so that I can be prepared for the potential for the flush. So when we're looking at trend exhaustion, when you're seeing a trend like that, strong, a little bit weaker, and you're thinking, oh, this is nice rounding off here, watch out. Your best setup is going to be that 2T where it goes and does the flush, or the 2B over here. And usually there's more volume at the first low here than there is when it comes into the higher high or the lower low, but it will see like a single bar on maybe like a 2-second chart where you'll see a really large bar at that lower low or that higher high, where it's basically just taking everybody up or trapping people that are thinking, oh, that trend is still continuing when it's really not. So that is one good thing to watch when you're looking at the momentum and our trend. And here again, very close to that template. We have the move up, stronger move, you get the shift, and then you get the shift over here, and then the breakdown. And when it does this kind of secondary shift in here, that often goes into another strong impulse move. So this is where you want to start to look for a larger time frame than what you would see this on. Go up, like if this were a 500 tick chart, for example, go up to like a 10,000 tick chart, so that you can have an idea, well, what size are a lot of the larger impulse moves, not just the smaller ones. Now, so here's just a closer look using some of our fib fans with the momentum shift again. And again, here, this is where we were looking at, hey, what would we expect from something like Pfizer that was showing some of the trend exhaustion? This is something we were talking about in one of the classes. And we were looking at that main trend with the 3 legs, looking at it, breaking the trend channel, and then having a better chance of coming down, retesting the lows, and going into that widening up zone. And our chart over here is showing exactly how that happened. So it did the 2 waves that broke the channel there, and then we were able to see another move down. And the chart in the upper corner is one of the patterns that you can watch for. So if you see that channel break, you get your 2 waves, and it's just kind of breaking to a lower low, you can start to look for reversal patterns at that point. And sometimes it'll hold that absolute low right there and go and flip around. It can go into things like an inverse head and shoulders. It can go into a bigger foot, but it starts to become a zone where you want to watch those smaller 2-wave back and forth moves. This is another one just recently here that I was trading and looking at the reversal, and it's just another example of that foot. So we've got our leg here. There's not one quarter kneecap. We get that 2-wave correction in here instead. But then we get those 3 evenly spaced highs, and it's kind of widening up a little bit. Now, what was a problem for me on this one is look at where that pivot low is. Remember, I said the distance between the highs, mark that 50%. You want that pivot at 50% or before. So in this one, it's after that 50% level. Very important. I took the short here with the momentum shift, but I took off partials very quickly, and I waited for the retest of the high to go and build in a large position. I did not go into this fully invested here because my pattern was not what I needed to see. And so a lot of trading really just comes down to that discipline of knowing when I have the highest probability, knowing when to push and press my edge. And that can mean, hey, just taking a smaller position and holding it with a little bit of a wider stop, you know, just in case it does keep going, or going and waiting for a lower risk setup like this here. So a lot of times your foot can go into smaller head and shoulders, or even a bigger head and shoulders. And those setups might be more comfortable for you, especially you want that channel to break as it's coming into those highs. So once you start to see that bigger rounding off, your probability or predictability is going to be higher. You can still get a great setup where this is the bigger channel here. You might have had like a, you know, another correction in here, and it does hold here and turns around. And that ends up being the highest high. But if it went and put in those 3 highs outside of the channel, the predictability of that is going to be higher than it is here, even if you're still getting a really beautiful move in this one. So this has a greater chance that it could go into a bigger widening up zone if it's still in that channel. Let me clear that. And just some of those examples here. Again, this was my live trading and what we were looking at for exhaustion. So one of the things too, when you're looking at trend exhaustion, if you see 3 waves and these take that same amount of time, and you see something that goes into twice that amount of time, puts in another low, so you now basically have 4 waves, that is a beautiful reversal zone. It is much more likely to have a trend reversal once you get your 3 waves. And again, really counting this is 1, and this is 2, and this is your 2 wave of correction. And then you're getting that next kind of flush there. So that's where things like 2B patterns happen. That's what happened up here. Now, the problem that I ran into on this is simply that when this came up into here, look at that momentum. There's no momentum shift yet. So it took momentum changing in the smaller scale before we really started to get, you know, full reversal happening. So when you get that shift happening, again, if this is a narrowing channel, it can be more dicey. If it's slightly widening, that is better for the short off the 3rd high. If it's narrowing, I'm going to be more aggressive with the trades, taking off partials faster, adding back in, and then looking for additional setups like your head and shoulders to try to get it going again. And here's a beautiful example of where we were looking at this as it was trading in here, looking for that to do a second wave down and then flip over. So this is actually something I discussed as our pattern for the reversal in the market before we were even breaking to that new low, just because you're seeing the same patterns repeating over and over again. So if we look at today here, clear this, and make our chart larger here. What you'll see is that we had this beautiful 3-wave movement here with kind of a not an extreme momentum channel. So each of our corrections was a good 50% of the previous move. So when you get those 3 lows there, this is just a version of that leg with the foot, except we have a stunted leg. So basically, instead of getting that initial portion with your hip and then going into the kneecap and then the continuation, we had that stunted start. But in here, we usually get, again, the 2 waves, sometimes 3, and then the reversal. Now, I didn't get into the market here this afternoon. I was at an appointment this morning. So when I saw it, we we're already having this strong momentum move here. But you know what? This pattern is something that usually means a trend day. So these are the ones that I have no problem jumping in without a really great continuation pattern, just looking at the smaller little corrections, because my probability is that that is going to continue and get that strong trends movement. So notice the 3 highs and look at where that pivot is happening on those. Very crucial to getting that stronger reversal. And I took it in the NASDAQ, even though this is the Dow chart or your micro Dow. And number 3, count the waves. And I've already gone through a lot of this already here. So if you get 2 waves that are mostly time corrections, you are more likely that that third correction is going to be through price. So that is one rule that is really good to keep an eye on. So even if the trend continues, you're more likely to get a price pullback instead of another zone of congestion. Look at the timing between each of your waves. If you have comparable time development, you have a much higher probability zone of getting that continuation happening. Here's another example, by the way, of that same pattern that I talked about, where we get our waves down, we get that 2 waves of correction, first wave, 2 smaller little corrections here, breaks the trend channel, pops back down again, and then triggers the reversal. So this is just another example of that same setup that we had there. Here, again, same thing. So when we look at this on the downside, and I'm looking at, okay, well, what can I use for target levels? Look at these impulse moves here. See how comparable they are over and over again in those periods where the momentum is the same. So with the really small little tiny corrections in here, I have a better chance that I'm going to get the 3 waves. Now, this is something where I didn't end up getting more out of this. I think I was playing around with this down in here, if I recall correctly. But I had an order on the books from this point right here to protect my gains, because I'm coming into what I call a T3 zone here. So when this had put in a measured move here, and now it's confirming with that second wave as it goes into that correction, I know that I have very good probability of getting that third wave, same momentum, and then I'm going to go into a widening up zone. Most of the time, you're going to be able to get lower lows coming in here, but the predictability starts to get more sketchy. You can have like 2 wave corrections that could have a pretty decent pullback before it goes to a new low. So if I'm being more conservative, or if I'm in the middle of like teaching and stuff, you'll often see me just take everything off at that measured move and look for another setup. I think I reversed this, if I recall correctly, because of the bigger time frame. See again, look at that. This is very much like what we saw here today. And look at where your pivot highs are here. You're right around that 50%. This has a little bit of that slower movement than this one did. Even spacing. And usually with these 3 lows, you want to see the most volume with the first one, second volume, third volume. Here it's a little hard because it's beginning of the day. But let me head on here over, kind of rush through the last couple of slides I got for you guys. I always, I'll do like weekend seminars and I'll be like, hey, this is a 3-hour class. And it's kind of a running joke that I always end up going longer because there's always so much more. Here's that same pattern though. Look at that. Again, the 3, the flush with the 2 wave correction, the move to the low, and then the reversal. And we actually saw something very similar to that in the Bitcoin coming off of the lows. But again, that 3 wave move, that tells me I'm going into a widening up zone. Use more caution at that point. So these are all just repeating the same thing that I was talking about. And Jeff, are you recording this? Because if so, our traders can go back and take a look at these here as we're looking at the
we're not recording it. We're streaming it straight to the Facebook, for the YouTube.
All right. Well, perfect.
And anybody that wants to go look at the recordings can go to youtube.com/metastock. The recordings are free, but like and subscribe. It helps.
Look at this, you guys. I mean, these patterns are repeating over and over and over again. So everything I've talked about today, if you just focus on just the ones that I talked about in this session, you could just trade that. I mean, yeah, you might have to wait for the patterns to develop, but they are very high probability trend exhaustions, and you can use them at the very least to help you understand, hey, here's where risk is going to start to get higher. Here's where I need to be less aggressive trading in the direction of the trend, or here's what extra potential I still have on this trend. So I have a wonderful book out that you guys can get as an ebook. I've written a number of books over the years, but I haven't had time to dive into that lately. I need to do another one new, but Simple Steps to Trading Discipline. So I've updated this ebook, and it goes through all of my building blocks of price development and into how to analyze the trades and really diving into what you need to be doing to have that growth mindset as a trader and continue to learn and continue to grow as a trader and develop that core base, you know, your peanut butter and jelly sandwich. Hey, where if you're a rush, you can always grab that sandwich. What's your peanut butter and jelly trade, right? This is something that is going to be reliable. You're not going to have to like look for all of these other crazy ingredients. You just have that core trade, and then go and learn to experiment from there. And of course, you can come join me for shortcuts. You know, we've already tried out a lot of different variations and know what things you don't want to put in your peanut butter and jelly sandwich. So here is the way you can get that ebook. And if you email me personally, this is my personal email address, I will set you up with an invitation for my League of Traders, which is at noon every day, so that you can go ahead and join me for a trial here. No purchase necessary. I'm not even going to put you on an email list or anything. I'll just keep it separate. So you're not going to get into any long-term database, whatever. You're just going to get the Zoom link for a free trial to League of Traders so that you can check it out and see how we do all this live. So thank you, Jeff, for inviting me here, and it's always good to see you.
You bet. Thanks for coming, Toni. It's great to see you. Thanks for coming with us today and spending a little bit of time. I appreciate it.
Thank you so much. All right, you guys have a wonderful rest of your day, and I look forward to getting to know some of you more.
We put the link in the description, in chat and in YouTube, so go get the free ebook. Thank you, Toni.
Thank you. Bye.
All right. Bye. Okay. We do this and this. Go ahead and turn it over to me again. Presenter. Show my screen. We'll go ahead and do this. Okay. And let's talk about, I don't know, for our sponsors, let's talk about, hello, Oscar. How are you? Okay. Well, Oscar's getting his audio connected and all that kind of stuff. I'm just going to tell you quickly about one of our sponsors, Stocks and Commodities Magazine. We appreciate Stocks and Commodities. If you do any of the subscriptions today, or any of the MetaStock purchases, will give you at least 5 months. Actually, Stocks and Commodities will give you 5 months. So how cool is that? But they are great to work with. They've been supporting us forever, and we appreciate that. So very, very good. We great to have them. Also want to take a moment and say thanks to CMT Association and AAII for both being sponsors as well. Now, from the audience, I want you to give me another number. We're going to announce a prize winner. We're going to do it real quick, and then we're going to turn the time over to another really good speaker. The number that I need from GoToWebinar or from YouTube via chat is any number between 1 and 10,689. Or Oscar, I can see you right now. Maybe you can just give us a number. I can't hear you though.
62.
All right, I can hear you now. That works better.
I went with
should we
number
just go with
62.
10
I don't
minutes?
know why.
Hold on. Okay, say it again.
Number 62.
Number 62. Okay. Then we're going to reward somebody for registering early. And I love that. So hold on just a second. Let me pull up my registration list. N62. Okay. That would be Larry F. in the USA with a Gmail account. So if that sounds like you, if your name's Larry and your last name starts with an F and you have a Gmail account and you live in the US, there's probably only a couple hundred of you, but you may have already won. So if you did, here's what you're going to get. We're going to go ahead and give you 3 months of the MetaStock real-time program. We're going to give you Unleash the Power of MetaStock as well with that, which is some training to help you get started. We're going to give you, these screens are in my way, 3 months of real-time data, the scanning, the testing, the platform that's been rated #1 in its price category for basically 30 years in a row. So we'll go ahead and give you that. I'll get in touch with you. I'm going to take a note of your information right here as soon as I get Oscar started. But it's a fantastic price. We're also going to give you 3 months of learnmetastock.com, which is a website that will help you with learning all the bells and whistles of MetaStock. So thank you for all the numbers. Thank you, Toni, for coming in. Oscar, before I let you go, I'm going to talk a little bit about you. Is that all right?
Absolutely. Well, it depends on what you want to say about me, but sure, let's go for it.
I'll make you the presenter so we can get your screen shared. But Oscar is somebody, if you haven't already, and you should already, but I want you to have a notepad and I want you to have a pen, because when Oscar talks about the market, you should be taking notes. And you should have been taking notes all day, but I really we refer to Scott or Oscar, not Scott. Scott's somebody else. We refer to Oscar internally as the chart whisperer. And he's an awesome presenter. You're going to enjoy the hour that's coming up. So, Oscar, that's what I want to say about you.
Thank you.
Before we also get started, I want to say this too. You should go to livewithoscar.com and sign up for his service there. And Oscar, you better talk about that.
I will do my best. I know I don't do much selling when I do these events. I've been yelled at by everyone, so I will try to at least tell you where to find me at the end of this, if nothing else.
I cannot see your screen, but I think that might be my issue. Kelly, can you let me know if you?
No,
okay,
that was me.
Very cool. Okay, cool. In that case, Oscar, I'm getting out of the way. I'm going to get my pen out. So it's your turn. Go.
Well, let me start with this. Good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in. MetaStock, you put on such a great presentation as always, and I'd like to give you a special round of applause. MetaStock, thank you, and thank you for having me. Traders, some of you may know me, some of you may not. I think you will be loving me at the end of this chart segment if you're worried about which way the market's going to go, the stock market in general. Are we going up? Are we going down? What's going to happen? Well, I think the charts will tell us exactly that. If you like what you see in this chart segment, of course, I will show you where you can find me. I'm live in a live trading room, microphone and camera, basically every waking moment of my life, because I live there and I do this for myself. And I let a bunch of traders look over my shoulder and hang out with me. So if you would like to join me, of course, I will show you towards the end of the presentation where you can find me. I do a YouTube video every night, or just about every night. That video will tell you what I expect to happen the very next day in the markets. Then you will find me live in my trading room acting out that very video with all of you Omniacs. So we'll get to all of that later. What I wanted to do today was I wanted to show you something that I find very interesting. So let's just look back at this piece of paper for a moment. We looked at charts together. This crowd from MetaStock and myself here, I put together a webinar in February, and in that webinar, I basically said, this is how the stock market bottoms are born, and the bottom is in. And of course, you can watch this video in its entirety. It was filmed on 2/7. There is a video almost every night, by the way. So after that video, I started to do webinars, and I will tell you right now, many people in those webinars, or many people who watch those webinars, are absolutely on the other side of the token, and they are calling for the downside of the stock market. I only call what I see. I have no professional opinion about which way a market is going to go. I use the chart to tell me where it's going to go. So we looked at charts in February. We thought the bottom was in. I did videos and seminars and webinars, and I've been calling the bottom since. Where are we now? That's what we need to find out. And this is what's going to be nice about this presentation is I'm going to use the exact same charts that we used in February together. I left notes on the charts, like a needs list. Each chart, if we left a needs list off to the left, and then we hope those needs were filled to keep the market bullish and prove the bottom's in. And then over here, we'll see where we are. So I'm going to take you back to the S&P chart, this exact same chart that we used in our webinar in February when we said the bottom was in. But the needs were this. It must get above the 200 bar moving average, which is this teal average right here. So it's got to get above this average. And it was not. It was down here and it wasn't above the average, right? So one of the needs that we have on the list is you must get above the 200 bar moving average to keep the market bullish. Well, it gets above the 200 bar moving average right here. First time. Now we're above. What else did it need to do on the needs list? It needed to get above this red resistance line. So we are now getting above the red resistance line, or I should say we are well above the red resistance line. We actually came back down and tested the lows, tested the 200 bar moving average, tested the red resistance line, and have bulled up into a bull flag, which means everything on our needs list has been met, which means the market stays bullish. The ES is now above the 200 bar moving average. It is above the red resistance line or resistance channel. And it is now in channels like this one that are bullish. It's now in a bullish channel and in a bull flag. So it shows that in February when the bottom was coming in and the charts proved that the bottom would be coming in, that it was the bottom, but that's only one chart. And one chart would never be able to prove that we will work higher this year, not lower. So we're going to look at a bunch of other charts, the very same charts that we looked at in the beginning of this year in February, and we'll see where they stand now. So let's just go to the next one. I've got a ton of these, so we'll try to get through them quickly. The NASDAQ chart needs. The NASDAQ needed to get above the red resistance line. That's this red line right here. We were going to need to get above that. What else do? We need to get above the 150 bar moving average, which is a sell trigger. Okay, so looking at the chart from where it was, this is a sell trigger, as you can see. It's 150 bar moving average, and every time you get near it, it becomes a sell. Again here, you finally get back to it, the blue line, and it becomes a sell. Well, we need to get above that. We did right here. It is working. The markets are getting more bullish. The market is changing complexion was the note that we put in when it was all the way down here at the lows. As it started to make this upward projection, or trajection, I should say, once the trajectory started, we started recognizing its changing complexion. We called bottom, and we gave a much higher level for the market to go this year. I will say, looking at the charts so far, we are now above the red resistance line. That red line, we are well above it, right? We got above it here when we got above the 150 bar moving average. So it's also above the 150, and it's become a buy trigger. That's different. It was a sell trigger. Every time you went near it, here it was a sell. Here it was a sell. Here the 150 bar moving average was a sell. Suddenly it becomes a buy trigger, and that is our buy trigger. Takes off from there. It's in a nice bullish channel right now. And I have to say, I think we're right so far. And we'll go over all the charts, but I don't think we should be looking for the downside. I think we continue to look for the upside. According to these charts, you're now in a nice green bullish channel going upwards. No more downwards channel like this was. Complexion has changed. Well, that was back in February. Look how much better it looks today. I am telling you, the people out there calling the downside, I think they're using personality. I think they're using fundamentals, and the fundamentals look horrible. But if you use the chart says ignore the fundamentals. We are in a bullish market right now, not bearish. All right, that's been 2 charts. Let's see what else we have to make that point. So if we move further, we'll look at, let's see, I got a whole bunch of these pretty little charts. We're going to start here. We just did NASDAQ. Transportation average, 3rd chart. So this one is the chart that I can show you that actually has an argument for the downside, but it's the only one that I can find. So of the indices charts that I follow, let's go over this one. It started with this capitulation day top. Market rallied up. We knew that was capitulation day. The market has ever since been breaking. The needs that were on this chart was it needs to get above the 200 bar moving average, and it needs to get above the red resistance channel. That red resistance channel, of course, as you can see, is this one. Big channel here, right? Resistance, support, support, resistance. So it's in a big channel. So one of the needs is it's got to get above that channel. And it does get above the channel. After a little dip, it gets above and stays above. What else did it need to do? It needed to get above the 200 bar moving average. Well, let me blow this up a little. We are above the 200 bar moving average. And it's in some sort of an upward trajectory. You can tell by these blue lines. But the problem on this chart is it's got a little bit of a head and shoulders, right? This could literally be a left shoulder. We'll find out soon enough. We're not going to call it that until if it breaks down, then we know it is for sure. But it looks like it's building into a head and shoulders. Now, this would be contrary to everything else that we've looked at so far, but we've got to look at all the charts, and we're certainly not going to hide from the ones that look different. So it is currently above the 200 bar moving average, one of the needs. It is currently above the red resistance channel. However, it is in a possible head and shoulders formation, which should point towards the downside if, in fact, that turns out to be a head and shoulders. The thing I'm wondering about this one chart is it can't just be one chart. That's not the way this works. So we've had S&P looking good. We've had NASDAQ looking good. You don't have the transportation average looking as beautiful as you'd like, but it's the only one so far, and we're going to go through a bunch of others. So it's the only doubter that we're in a bullish market at this point. But there's plenty of pretty little charts for us to look at, so we'll find everything else that points in either direction. So after looking at the transportation average, we looked at crude together in our last webinar. Now in the crude, we figured I would just show you what was a really smart tip to use on crude for you to decide which way crude will go, projection, direction-wise. So as it turns out, the crude oil is doing exactly what it was doing back in February when we looked at it. And here's the tip on the crude oil chart. Staying below the 100 bar moving average is key to crude oil's direction. And as you can see, it is like magic on this chart. Look at all the times it just stops cold and turns direction at the 100 bar moving average, simple moving average on crude. All right, well, if you're going to use something today, make sure that you know when you get to that 100 bar moving average in crude, something dynamic will happen. It will stop and drop, or if you can get above, you've got a rally coming your way, all the way up to the top of the red channel maybe. So what I want you to keep your eye on for crude right now is the 100 bar simple moving average. That is your trigger. And I will tell you that below 77, the price of crude is actually a buoy for the stock market. It keeps the stock market buoyant, or it helps to. So crude being lower actually helps to usher in my thesis that the bottom is in. And we thought that in February of the year. And so far, we've been right about the stock market. Cheaper crude would absolutely help that to be possible. Now, you see crude's been stuck in this channel, and that 100 bar moving average is your trigger. Just wait for it to get back up there, and that should help you out greatly when you trade crude next. And just to show you the price, let's see what price comes in. We come in at about 76.70, somewhere right around there in your crude on the 100 bar moving average. Now, those averages will shift and change from market to market, and sometimes Wall Street abandons the 100 and goes to a 200 or a 50 or whatever. The 100 is working really well on crude, so it's the same tip that we used back here in the past. will continue using that tip on crude oil. If you've got questions, I will answer all of them, but let's wait until I get through this chart segment, and then you let me know what you'd like to speak to me about. So after we looked at crude oil, we looked at T-bonds. All right, so this was another chart that was in our chart segment. Now, bonds, this brings in a fundamental. Here's the fundamental in bonds right now, this guy right here. The Fed must pause at this juncture. They must pause raising rates at this juncture. They're done. If they continue to raise rates at this juncture, what you're looking at is something that all of us couldn't possibly avoid. What I mean by that is what you're looking at is the possibility of 7 to 10% return. So you would get a 7 to 10% return from the stock market or the E-mini S&P. At the same time, you right now can get 5.25% return with zero risk, zero, to your portfolio. So, are you willing to risk 100% of your portfolio? You know what? Let's put this in a frame. This way we can both read it. Would you be willing to risk 100% of your 401k to get 7 to 10% out of the stock market? Yes, that's what we all do. But if the bond market's willing to give you 5.5 to 6%, why would you even risk a dime to get between 7 and 10? You wouldn't. What's going to happen if the Fed continues raising rates any further is that you are going to get something that's a flight to quality, but that flight will be this: out of banks, out of stocks, and into bonds. And this, what will happen is the Fed will become the entire market. They can't allow that to happen. So I am telling you now, these charts are telling us that the Fed is going to pause. They're going to go in a pause mode and stop raising rates. Now, that's the fundamental. Let's go look at the technical. Just wanted to make sure I mention this to you because it's definitely what's going to happen next. If the Fed continues raising rates, they're going to put us and themselves in a really big box. The stock market's going to crack. Banks are going to get hammered because everyone's going to put their money in bonds. And the Fed's going to be holding up all of it. They don't want to have to do that. So the needs list was, it's got to get above the 150 ball moving average. It actually did right here. Bonds got above the 150 for the first time in a long time. Look at how the 150 ball moving average for a long time kept bonds in check while it's above it right now. That's interesting. So we are above, thankfully, 150 ball moving average. We're finally in a channel moving towards the upside, not the downside. And if you ask me right here at this policy shift, when the Fed went from full points to half points, then they went to quarter points, I think the bond market recognizes that the Fed is almost done because, look, now it's going in this direction as opposed to this direction, which is the way it has been going for such a long time, right? For the longest time, you had bonds moving lower. Let me explain to you how this works. When bond futures move lower, rates go up. When bond futures go up, rates come down. You've had bond futures falling apart, rates going up. Now they're starting to level out, and I think it's a clue that so too is the Fed. Let's hope we hold that 150 ball moving average on this downward move. Plus this whole thing right here, there's nothing wrong with calling this whole thing right here a flag. Look, this whole piece, we could easily say is some kind of a bull flag, right? You could drop a line up here, you could create a parallel to it and put one down here. And the next thing you know, if we drop a little flagpole right here, it'll look like we've got a bull flag in bonds. Now, I'm not going to call it an absolute bull flag. What I'm going to say is we are moving higher because I like the trajectory that you're seeing of these trend lines right here. So we'll turn them both blue, we'll make it a little thicker. So now you've got us moving in a slightly more upwards pattern. And if you don't know how bonds work, you see this little illustration right here? Pretend that's a seesaw or, a teeter-totter out in a park. If you've got bonds on one side and interest rates on the other, bonds are dropping, the kid on the other side is going up. Those are interest rates. That's how it works inherently. You don't have to ask anyone. I promise you that's the way this works. So if bond futures are going down, interest rates are going up. Now, makes sense during this whole time. But look, now we're starting to work in that direction. I think the bond market's starting to tell us that the Fed's almost done raising rates, if not done already. So that's your bond market, and the 150 is your, you have to be patient and wait for it, but that's your trigger on bonds. Let's see what else we have out there to look at. Okay, so we're in the AB series, and we just did bonds. Let's see what's next here. Dollar index. Now, the dollar index, when we looked at it last, was starting to just finally come down from this massive rally. And the tip that we had back here was the 70 ball moving average seems to be magical on the dollar index. Why? I don't know. I don't care. I don't look to reinvent the wheel. But when I find the wheel Wall Street's using, I throw it on my car and rock and roll we go. So the 70 ball moving average seems to be locked in their algorithm. If you look, it holds all the way. It holds here. It holds here. It holds here. It holds here. It holds here again every time the market gets near it. And then when it finally gets under it, red arrow now, right, or red circle with a red arrow, it breaks. All right, so now we got something different. Now you broke the 70 ball moving average. We go into a downward channel, and now the 70 seems to be keeping us in check. This chart seems to be here just because we looked at it last time. It's got nothing to do with the thesis of the bottom being in. I just wanted to show you every chart that we looked at last time. So being that the dollar popped up and it's there, the 70 ball moving average is your key to direction in the dollar. You sell it when it gets to it. If it gets above, you think about getting long. So that would be, I guess, the tip off the US dollar index. We don't really trade dollars though, right? What we trade instead are euros. The dollars, I don't really find a lot of traders getting into dollars. If you want to be in the dollar, you take an opposite position in the euro. So let's go look at the euro. So the euro was doing exactly the same thing the dollar was doing. For quite some time, it was holding that 70 ball moving average, but it was keeping it in check from going above. If you remember, the 70 ball moving average on the dollar index was holding it down here from going lower. Instead, it works as the opposite in the euro. So that makes sense. Euro and dollars are opposite each other. So that worked for quite some time. The tip is this on the euro. This is a good one. A lot of you trade this. The 70 moving average is no longer in vogue on the euro. It has moved. The 18 ball moving average is the new algorithm. I don't know why. Again, I don't care why, but there it is. And it's perfect. It's been working perfectly. So they switched to something little, like an 18 ball moving average, when the 70 was what they were using for a good 2 years. So right now, the 18 ball moving average is your trigger in euro currency. Keep that in mind. If you want to be a seller, sell under that average. If you want to be a buyer, buy when it hits the average. That's the 18 ball moving average in your euro. I hope some of this is helping you. And I hope looking at the charts now compared to where they were in the past is helping us see that this is way more bullish than it is bearish. The street, I think, is wrong. Let's keep looking at more charts. So we just did dollars and euro. What else did we look at next? We looked at Bitcoin. Now, here's Bitcoin before February 7th, right? Everything seems to have changed February 7th. It looked terrible. Head and shoulders, bearish formation, down it goes, leads to a bear flag, fails at the 200 ball moving average, and down it goes. Boom, 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 boom. Looking terrible, but it gets a little promising when it gets above the red line right here. So that's a little promising. So that's where it was, but I think what we want to look at is Bitcoin now. Just check this out. That's what the chart looked like when we looked at it in Feb. Check this chart out now. You're going to love Bitcoin. This is what Bitcoin looks like now. All I did was move from the ugliness of back there to where we are today. Bitcoin, Bitcoin, Bitcoin. You got to love this, baby. Since it bottomed, it has been doing a fantastic job. It got above the 50 ball moving average, which used to be its sell trigger. As you can see, sell trigger, sell trigger. It gets above that sell trigger right here. It finally holds the 50 ball moving average. And you know, Wall Street loves that 50. So It holds the 50, starts to go into this wonderful channel that we're looking at right here. Let me see if I can make that channel line a little deeper for you so you can see it. So check this out. Now we're looking at, well, I can just leave it like that. Look at the channel that was created. After that low was put in February, look at this wonderful channel and the excellent holds of the 50 ball moving average. And you're probably getting right back into that channel tonight or tomorrow. And it just looks fantastic. Even if it comes off a bit, Bitcoin is looking as good as the stock market. Why would that be? Because Wall Street's algos watch the 50 ball moving average in Bitcoin as aptly as they would in the stock market. So if Bitcoin stays above the 50 MA, it will attract buyers. And that's what it seems to do every time. Look what it did here. See how it attracted the buyers? So that's your tip on Bitcoin. If you're looking for a Bitcoin tip, whatever reason, the 50 came into play, and it looks like the end-all be-all for Bitcoin at the moment. What I really like about Bitcoin is it's on its way to 85,000, which it should be there in about 3 years, 1 month, according to Omni calculations. So Bitcoin's looking fantastic. Now let's get back into why the stock market is moving higher instead of lower. At least that's what we think it's going to do. Check this out. We looked at NVIDIA. If you guys, gals, traders remember, we were working back here at this thing called the knock-knock technique. Does anyone remember knock, knock, knock? And I said there is no shot that you could knock on this door 3, 4, 5 times without it breaking through. So it had knocked on the door 4 times when we looked at it last. The 5th knock came and it broke through. That's what we were looking at back then. The 90 ball moving average was our trigger. And as you can see with the 90 ball moving average, it absolutely is the trigger here, right? Everywhere you look, the 90 just worked so well. So the 90 was your trigger. Well, that trigger has changed, kids. It's gotten to a much smaller trigger. Once we got above the red resistance line and started to break out, we went from a 90 ball moving average to a 31 ball moving average. Watch this. Look how well this one works. I don't try to figure out why Wall Street flips to these things. I just use them. We're here to go faster in our car, not reinvent them. So look at that 31 ball moving average, how well it's just holding the market up now. So they switched to a 31 bar algorithm, and we're in a bullish F flag inside of a bullish channel. That's enough to tell me that NVIDIA looks fantastic, right? NVIDIA is a big part of our stock market. Well, if the stock market is crashing, how come NVIDIA is going up, not down? All right, let's go look at something else. NVIDIA, look at, okay, Zoom. So this really doesn't need to be in today's presentation. Zoom is here because we looked at Zoom in our last presentation, and you guys were asking me what works on Zoom, and I pointed out the 55 ball moving average is your trigger on Zoom. It's still the same trigger. Nothing has changed. So the 55 ball moving average is your trigger on Zoom. It's still the same. I don't have anything to say about Zoom. Look at that chart. There's nothing anyone can say. So we're not going to spend any time analyzing it, but it was something in our past webinar. So I thought I would just move it forward. So what was working was the 55 ball moving average on Zoom. It is still the same. You can use that as your sell trigger when it gets to it. And what else do we have to look at here? Now it starts to get pretty, if you ask me. Now we start to get back into whether or not we're bull or bear market. The all-time highs of the Dow Jones, this is it right here. We put them in last year, and the market started to come off a little bit. Since then, we've put in this tremendous resistance line. Tremendous. Let me just grab a little tool for us. Look at this resistance line that started working here. You hit it again here. We hit it again here. We hit it again here. Resistance is working undoubtedly. What's the difference, though? The difference is the low that you made. You put in this high, this low, a lower high, a lower low. And then suddenly we put in a high, right? You can't call that another high. So we put in a high to a low. And we come back and we're trying to work on putting in another higher high in the form of a pennant moving up. And as opposed to what was happening here, spending a lot of time below the 50-ball moving average, we are now spending a lot of time above the 50-ball moving average. So I think the Dow Jones is starting to look prettier, working its way up, but there's more convincing that we're going to go through, I promise you. And let's see, what chart are we working on right now? Oh, yeah. Okay, so we just did the Dow. Now, here's the one that really starts to get me. Traders, we're talking about the downside. A lot of people are. The street is, TV is. I'm talking about the upside, and I'm showing technical reasons why. If I'm wrong, the charts are backwards. You see this head and shoulders on the left? It's called an upright head and shoulders. Just move this little dialog box out of our way. This is called an upright head and shoulders, where you have the left shoulder, the head, the right shoulder, and that means the market should drop. Well, it did, and it stopped cold at the 200-ball moving average, and it got worse, and it just kept dropping, right? So we know that the head and shoulders brought us down. Well, if that's the case, we have an inverted head and shoulders right here, top day where we are today. That's the opposite view of the head and shoulders. That's up here, which is an upright. Well, if the upright head and shoulders made us go lower, shouldn't the inverted head and shoulders make us go higher? Isn't that the way it works, right? This one took us down. Shouldn't this one take us back up? The bottom seems to be in. We're above resistance. We're above the 200-ball moving average, and we've got an inverted head and shoulders. So that is bullish, not bearish overall. So the upright head and shoulders took us down. How come the inverted head and shoulders won't take us back up? Shouldn't it? Isn't that the way this works? Yes, right? This is the one that took us down. So we put a little box around this guy. This big head and shoulders took us down. Well, if we do an inverted head and shoulders, shouldn't that bring us up? Wouldn't this be the one to do the opposite? Yes, it would be, using technical analysis. One more reason why I say the market is more bullish than bearish. Let's go look at another chart. And let's see, some pretty charts for us to look at still. All right, now let's go into something else. You do realize that one of the reasons why we had this market come down the way it did was because the Fed had to raise interest rates to slow inflation down. Inflation gets created by raw materials getting expensive. Once they get expensive, it gets into the supply lines. Plus, we had supply line problems as well. But the biggest thing is always raw materials. If raw materials are expensive, you get inflation. Well then, if that's the case, let's go look at where the markets were at the height of inflation, where we are today, whether or not the Fed needs to raise rates any further. Here's where crude oil was at the height of inflation, not very long ago, at the top of these charts, just like all the other ones I've shown you. Crude was $130 a barrel. Crude is now $73 a barrel, got as low as $68. That is deflation as well as a stimulus to all of our pockets, because when the price of crude drops, the price of gas and energy drops immediately, and it's a stimulus. So we've got deflation. The Fed's trying to get prices down. Looks to be like it's working in crude, which is a stimulus to economies, right? So that one worked. Let's see what else we have. The next one that we have to look at is copper. Copper, a huge component to our economy, right? And to building. And if it's expensive, so is everything else. Well, copper used to be $5, $5.01 to be exact, at the height of inflation. Well, it's been dropping. It's got as low as $3.40, and it's trading $3.80 right now. Deflation, not inflation. The stock market, bottom is in, kids. Watch this. Well, inflation is why they had to raise rates to knock us down. If we're getting deflation, they could stop raising rates and allow us to go back up, right? So let's see what else there is. We just looked at copper. How about this one? Lumber. What's lumber not in? Maybe not in a Tesla. Maybe a little bit of wood in a Tesla. You never know. But lumber's in everything. You live in a house, there's lumber, right? Anything around you, if it's being built, there's lumber in it somewhere. At the height of inflation, lumber was $1,477 per board length. You know what it is now? $345. In fact, it's $344. It's $1 cheaper. That is deflation, not inflation. What the Fed has done has worked. They don't have to raise rates anymore. And I'm telling you they won't, because of what I showed you, that 5 to 10%, that 7 to 10% with 100% risk, or 5 to 6% with no risk at all. No brainer. They got to stop raising rates. All right, but there's really no need to raise them anymore, because what they were trying to do is stop or stave off inflation. Lumber, that worked. What else did it work in? It worked in wheat. Look at the price of wheat. It used to be $1,161 for wheat. You know where it is now? It's in the 630s. The height of inflation, $11.61. Where is it now? $6.30. Kids, I am telling you, you are looking at deflation. Well, let me put it in caps lock. Not inflation. You are looking at deflation. Now, it doesn't get right to the product. It takes a little time. Raw materials get cheaper first. Eventually, the product gets cheaper. They'll get cheaper on your shelf. And if they don't get cheaper, what happens is competition will make them get cheaper, because someone else making the same product will get the raw materials cheaper and lower their price, hence causing other prices to lower as well in the same category. That's why the Fed's doing what they're doing, because all of that fits in. It all falls into play. When the raw materials get cheaper, everything else gets cheaper, and your inflation starts to go away. So that's wheat. And if you remember wheat, now that the Ukraine's in war, there'll be no wheat left. And oh my God, what are we going to do? No, the inflation's going to get out of control. It's such nonsense. It's just what they sell on television, I promise you. All right, next. Let's see. We just looked at wheat, right? Corn. Another. This is in feed. They use corn to feed pigs, hogs, you name it. They feed cattle with it. They feed everything with it. If the price of feed is getting more expensive, the price of your food is going to get more expensive. But if the price of feed's getting cheaper, the price of your food will get cheaper. That's called deflation. You are looking at it on the screen before your eyes. It's not 760 anymore, right? It's in the 560s. It's going to end up in the 460s. Deflation has been taking place since the Fed started raising rates. I think they've done their job. I think they now can pause. And if they don't, it's going to be a disaster. Next, we just did corn, right? Let's go look at cotton. So cotton's industrial. It's in all of our clothes. And every store is using cotton for something one way or another. Every country's using cotton. It was 116. It has dropped to 80, maybe less now. It is dropping. Deflation, not inflation. Deflation makes a market go up. That's what we're looking at here. What else is there? The big one. Now, the reason why the Fed started to raise rates, of course, was to get the prices of things to slow down the stock market, slow down the price of raw materials, slow down the purchases of products so that more products can make it to distribution points, and getting rid of the bottlenecks, right? Raising rates helps to do all of that. When they started raising rates, the CRB index, the Bloomberg Commodity Index gauge of inflation, if you will, was at 140.55. It has dropped since the Fed started raising rates. This is all the commodities together that we call industrial, inflationary foodstuffs. They're mixed in here. We've dropped all the way to 103.60 in the measurement of commodity inflation. It is measuring deflation, not inflation anymore. Do you get me, kids? You see where this is going? The bottom is in. All of this shows us this was all opposite what we spoke about. The markets were all opposite of what we're looking at now, at the beginning of this year in February. Everything now is opposite of what it was. This was going up last year, not down, right? Now it's going down. This is deflation, but there's more. Let's see, the NASDAQ. You know what? Let's get back to the NASDAQ. Let's go pull another chart. We'll get back to this puppy. Here. Dow Jones. Now we're going to go out to weekly charts. Traders, again, I'm trying to prove, because I get so much pullback, that the bottom's in already this year, and we're not in the middle of a crash. All right, so let's take a look at this chart right here. I don't know what this line's doing. Let's just get out of our way. This is your Dow Jones Industrial Average weekly bar chart. It has held the 50-bar moving average like magic, except for during COVID. All right, I get that. During COVID, of course you'd expect it to crack. But it cracked very quickly. A few weeks later, got back above the 50, and then every time it tried, it was able to hold the 50, even if it got through momentarily. Now, so it's been holding the 50-bar moving average with a little bit of a blow through there only, but that created a flagpole of a bull flag. So the weekly Dow Jones Industrial Average, that, first of all, does that look bearish to you? If there's anybody who can answer any questions right now, even though we probably won't chat until I'm done showing you the chart segment, answer this. Does that chart look bearish to you? Does that look like a market that's breaking down? In other words, does that look like the market that we just looked at? So if you've got a market that starts up here and works its way down, and it looks sort of like this, then you're in a bear market, right? If you are trading in between these lines, you're in a bear market. If you are trading in between lines that look more like this, you're in a bull market, kids, not a bear market. You know what I'm saying? This is not a bear market. So I've been trying to show this to people for a while, but just look at my channel right there. Does that look like a bearish channel to you? Should that be red or green? You know what I'm saying? You wouldn't make this channel red. It wouldn't make sense. It should be a green channel. It's going up. So I don't know what the street's looking at, kids. I just don't get it. But let's look at more evidence. So that looks bullish to me. I don't know. Maybe I'm crazy that when a market's going this way, I call it bullish, and when it's that way, I call it bearish. Maybe I'm crazy, but that's the way I view things. We'll see what I can show you by the end of this segment. Let's see what else we have in there. Yep, we looked at the Dow Jones Weekly. We're going to look at the transportation average now. So the Dow Jones Transportation Average, a little different. The only difference is it's giving you two places to play. So once again, it failed to hold the average during COVID. I get that, right? During COVID, you expect markets to break averages. That makes sense. COVID's never happened before. It was a panic. But it comes right back above. The market gets back above these averages and starts to hold. What's interesting about the transportation averages lately, it's been giving us signals. When it gets to the 200, it's a buy. When it gets to the 90, it's basically a sell. I mean, it went up for a few days, but basically it's giving us signals. So we're sort of stuck right here between these signals. The transportation average, wait for it to hit the 200, then do something. Wait for it to get to the 90, then do something. And that's basically what I'm seeing in the transportation average. But I'm not seeing it as bearish by any means. So be patient. Wait for it to touch the 90 or the 200, and you can trade at either of the two. What else can I show you out there that I found in my bag of tricks? Transportation average. E-mini S&P. Let's talk about this chart for a moment. There's a big one. So your E-mini S&P has been coming down, or was coming down for a while, right? And what we spoke about in the last webinar and this webinar is basically that the lows have been put in. And what you've seen happen here is proof that I am right, because yes, you broke the 200-bar moving average during COVID as expected. But look what happened when it tried to break it, even when Fed raised rates here. You held. Bingo. Held, created now what's the channels moving higher. Right now we're in a blue channel moving higher. No more in channels moving lower. So now you've got us moving higher above the 200-bar moving average. That's different because look, here it's been the same every time. You hit this and it's a sell. Same thing here, right? Same thing here. Same thing here. But look what happens. when it gets here. This one's different right here. This one gets above, so we made it green. And then this one held, and it rallied out. So that's different, kids. That's a different complexion. It's starting to look bullish, not bearish. Now, anything can change, and if these charts change, I will be the first person to turn bearish, but they're not bearish charts right now. And here's the real kicker. Watch this one. This is the real kicker, this one. If there has been any doubt in your mind whether or not we're going up or down, let me show you one chart that'll sum up this entire webinar. And this is the chart. It is your NASDAQ on the weekly. So here's why I want you to look at this. And here's why I'm going to tell you this is our indicator of indicators. If you just follow this, I promise you, it will tell you what's going to happen next. And I'll show you how. It's a weekly chart. So on weekly charts, it takes a long time for things to happen, but they're also more accountable. Let's take a look. So what I like about the NASDAQ chart more than anything else is the fact that even during COVID, you could not break the 200 bar moving average. This average was not pierceable even during COVID. Not at all. We pierced it slightly right here and then held it, did another test, and started to run. After that, it held again, and I'm going to show you why I like this so much. Now, check this out. Yes, even during COVID, it held, which is an almost impossible thing to see a chart do, but it did. S&P did not. Dow did not. Transportation average did not. The Russell did not. Nothing held during COVID, the 200 bar moving average, except for NASDAQ. Well, that's got its own meaning right there. Now, let's go and look. Check this out. During COVID, it held. Anytime it ever got down there or near it, it held. But that's not all it does. Watch this. Let's go all the way back to 2008. You held 2005, you held every test, till 2008. Finally, that was enough of a reason for us to break. We broke the 200 bar moving average on the NASDAQ during 2008 one time. It got through it. It got back above it before 2009 or right into 2009, and it never went under it again. And here's what I want you to recognize now. What happens every time we hit this 200 bar moving average on the NASDAQ? You get a massive rally. Look at the channel. Massive rally after hitting the 200 bar moving average. So what does it do? It tries to hit it. After that massive rally, comes back and almost hits it. That was enough to send it skyrocketing. Tries it again, sends it skyrocketing. Tries it again during COVID, sends it skyrocketing by getting near that 200 bar moving average. Look at this skyrocket that we get out of it. And what's it do? It gets back to it again. It holds, and it's heading back up. What's going to happen is the same thing that happens here. You get massive rallies every time you hit this. Right? Massive rally takes place. Well, you hit it again. What takes place? A massive rally. Okay, well, that makes sense to me. What happens when you hit it again? You are going to get a massive rally. That's what happens when the 200 bar moving average and the NASDAQ on the weekly come together. So that's what you should expect. That is our indicator. That's what's going on right now. And I don't care what the street says. That's the Bible. That's where we're going. And unless the markets get hammered for some other reasons and we change complexion, for now, top day, this day, that's what's going on in the markets, kids. I wanted to make sure everyone was aware of that. I am tired of listening to people calling for the top. The top's in. We're going to have the biggest crash. The next shoe's going to drop. Not technically, not yet. If it gets that way, I'll be more than happy to prove out a downside scenario. I don't really have one right now. Traders, if you like what you are seeing here, please join me because as I mentioned, I put out YouTube videos every single night to tell you what should happen the next day. Then I'm live in my trading room taking you through those signals. So the trading room is this. You can easily join it. There are cameras on live over my head right now. There's usually a secondary camera on pointed right at me, but that's the one I'm using for the MetaStock presentation. 0 credit cards are required, kids. It costs you nothing to come hang out with me. Let's pull MetaStock back up. So it'll cost you nothing to come hang out with me. And then if you like what you see in my live trading room, and if you like what you're seeing here in this analysis session, I want to show you just something else very quickly that maybe can help you. If you just come to my site, livewithoscar.com, and register, it takes nothing to register, no credit cards, no nonsense. You're choosing a first name, last name, phone number, password. It may go to spam. Check your spam. When you get out of that, you will literally just join me at livewithoscar.com. Once again, it costs you nothing. And here's what happens here. Let's take it for instance. I send out trading recommendations every single day, but I'm sitting live on camera, microphone, going through them. Quick jaunt at what we did today. Today, we traded gold, and the flash updates basically state this. Traders, second flash update comes out, tells you the time, and it says, the Omni says to buy long gold at 2033 on down. Close is okay, so 2033.10, somewhere around there, get in. The last price is 2035.5. Place your protective sell stops below 2022. So it gives you everything that you need. When you're getting in, the stop goes in first. So after that, I send you another flash update, and it rings, and this time it says last price in gold is 2053. Take your profits at market, cancel your stops once you're flat. Nice trade, Omniacs. So we made $20 in gold today. Right? We bought 33s, and we sold them out at 53. So not bad, right? So let's get in at 33. And when we got out at 53. We also traded S&P today. Signals came out. I told traders, let's get short S&P up to 45. Place your stops in above 62. When I say above, by the way, I use a lot of breathing room. If I say put a stop at above 62, rest assured I'm using 15 points above that. A lot of breathing room in your trades lately. But it says where to get short. And what I did was I actually got back out at the same price because gold gave us $20 in gold. I mean, it's $2,000 per contract. So we got out of the S&P at the same price we got in. Last price is 41.44. We did well today in gold. I'm exiting my positions. Now, when I send these trades to you, you get them in a fashion like this. You will receive a pop-up window. It'll tell you what to do. If you panic and close that window, you will find the very same traders already listed right here. And of course, I shoot it out on a Discord channel, so you'll receive it on Discord. I basically try to encompass you with everything that you will need to be able to work with me, receive my signals. So you can get those signals at livewithoscar.com. But the coolest thing about all of this is if you go here, check this out. If you go to omnibootcamp.com, you can fill out an application and tell me about yourself. And if you tell me about yourself, you can set up a telephone appointment time, and you and I can chat about you coming out and learning from me personally how to gauge the charts, how to come up with trades each day, and how to be a professional analyst and trader. I'm actually starting to do one-on-ones, by the way. So I usually hold a class of 5 people at a time. I think I'm going to do a one-on-one for a gentleman from the Netherlands when he comes out at the beginning of the month. So I am having an Omni camp in January, March, April. Where are we doing this? In June? Yes, in June. So I'm having one next month, the beginning of June. It's right here. If you'd like to contact me, just come to omnibootcamp.com, fill out an application, and I'll be more than happy to chat with you about that. Now, Jeff, if there are any questions that I can help to answer, I'd be more than happy, but I know I've probably run out of time here.
You're all good. We started you late. So Dana wanted me to send you this link around that talks about the Platinum free trial. I put the link in the chat. Do you want to talk a little bit about what that is?
Sure. So for you traders that are watching this webinar right now, I will be offering a free trial of my trading recommendations. For the next 20 days, you will receive them for absolutely free. Those same recommendations that I was showing you when I mentioned that you can see them on the site. So if you'd like these for free for the next 20 days, click that link or ask Jeff about it, and we'll be more than happy to set you up. Thank you for that, Jeff.
Of course. Let's see. A couple of comments here. And then I think Trader SLFA says, beautiful, crisp charts. Oscar is the oracle of trading charts. Tarek says, I'm a new trader and I gained a ton of knowledge. I'm just reading some of the YouTubes. You're just doing such a great job. I want to make sure to kind of give you some shredded. Great YouTube videos, par excellence, great analysis of the market using MetaStock. Flash update service looks awesome. Just some really, really good comments. Had a couple questions. BB.
Sure.
BB wants to know, is your room primarily for futures trading only?
So we use the Omni on everything from stocks to ETFs and everything in between. But I have found that trading single stocks is more dangerous than trading indexes. In other words, if I buy a single stock, I am basically putting my money in and saying, I expect that this company will not have a report come out today that will ruin the company. They won't cook the books. The CEO won't stop his car on the Verrazano Bridge and jump off for no reason at 10 on his way to work. These things won't happen. The stock will be stable. Now, that's one stock. If you buy the S&P 500, you've got 500 CEOs. A few of them could lose their minds that morning, and it'll still go where it's going to go. So, yes, it works on stocks and anything else, but I like to use it on indices over individual stocks for the risk factor reason.
Jacob asked a question, I think that it has to do with this chart. And he says, what about your knock-knock rule? So if I'm looking at the 200-day moving average, it looks like it's knocked a few times. Do you think there's any chance about a failure?
It's when it's knocking often. So in other words, if let's say you started to hit it here, if I could just grab this, if it'll move. If we hit it at this green spot, and we hit it at this one, and then we hit it again at this one, well, that's knocking too many times now, right? That's playing knock-knock. What's happening here is you've got years in between the hits, literally. Last year, a whole year passes before you hit it again. So not the same as the technique that we were looking at, and I don't use it on averages. I use knock-knock on support and resistance.
Cool. All right. Let's see. What do you make of the news today that Warren Buffett dumped $13 billion worth of stocks?
Okay. I think he's smart for doing that, but you do realize he just put $40 billion into oil stocks, right? $40 billion. He's now the biggest holder of two oil companies, Chevron being one of them. So I think he just made some room for oil stocks, to be honest. He was just cleaning up his deck.
Cool. Let's see. Another comment that just came in on YouTube. I got a little great YouTube. Oh, we read that one. Okay, I think we're good. Since we have just a few more minutes. Excellent. Sure. Kishore says, excellent Oscar it was. You talked a little bit like Yoda there. Thank you. I'm glad you enjoyed it. Do you have any feelings on natural gas, real quick?
So, I've had some traders asking about natural gas lately, and I will pull it up, but I have to tell you, when you pull it up, there's nothing to talk about. We'll use May. Excuse me, we'll use July. And GN. So it's, that should work. It's not going to get us there, is it? You know what? We'll use the P. It'll be faster. So let me show you the natural gas most current contract. Why are we not getting natural gas, Jeff?
Try NGC1 as a symbol. That should pull it up.
That'll work for me. All right, let's close this. We'll do NGC1.
Uppercase NG, lowercase C1 would give you the continuous, which is the best I can do. I don't have the contracts memorized.
That'll do it. Okay. So what I had mentioned when a few people had asked me about natural gas is that if you look at it, I mean, it's just nowhere. It's nothing that I want to trade because it's sitting in this really horrible channel going nowhere lately. So because it's just sitting here doing nothing, I basically have been staying away from it. I think natural gas is worth $2 and should be at $2 because it's a free byproduct of shelling for oil or drilling for oil. We get our natural gas for free. So what I would tell you is just sell rallies in natural gas. It hasn't been a market that I've liked trading since it was worth $4. Anything under the fours, I don't like it at all. It's just, I think it's worth $2 personally, and it's where it belongs at some point. So I really have nothing to say about natural gas, sorry to say. It's just a boring market.
BB has a little bit of a funny question. He wants to know if you have an opinion on when deflation will affect egg prices.
Yes. So I've noticed that the time lag is generally 6 to 9 months. So being that we've already started pulling down and creating deflation, I think if you're about 3 months away from starting to see it on the shelves, maybe 5 months, somewhere right next, we've already started doing this. So, and again, why it happens on the shelves is if I'm selling cereal and I can now afford to sell it for $1 cheaper a box, I'm going to, so that the cereal box next to me from a different company doesn't sell as quickly as mine. And that's how the competition comes back down when the raw materials get cheaper.
All right, very good. I think that's good. We did have a lot of requests, so I just don't think we have time to go through them all. But I would encourage you, if you haven't, to sign up for the alerts. Go to the room. Oscar talks about this stuff. He lives, eats, and breathes this stuff. So go to the room and touch base with Oscar. So,
yeah, just join me when you get to Live with Oscar. You will click Chat Live with Oscar, and that's it. Once you click this, you're in the room with me. You just put in your password, username, and away you go. So you can come join me every day, and I do this every day of my life, and it won't cost you anything to hang out with me. So you might as well join me, kids. I promise you'll learn something good here every day.
All right, very cool. Oscar, thank you again so much. I really appreciate your time.
Very much.
Guys, if you yeah.
I hope to see you in my live trading room. Dano is always here to help. Dano in O-Town, by the way, is a fantastic. He basically is the back end, even though we've got a bunch of people that work for us. He is the back end when it comes to the trading room. If you show up at the site and you need anything, Dano will make sure that you get it.
He does a good job. We all like Dano.
Dano at livewithoscar.com will get you there. If you have any trouble signing up for my site, just contact Dano. Or let me give you a phone number, actually. I make life really easy for you. You could just call us at 702-629, if it'll let me type it. If you just call the office at this number, we can always help you out here.
Oscar calls it Live with Oscar, but I tell him you should call it Live with Oscar.
I say it should be called Live with Oscar because that's what it is. You just basically live with me. You live with me and we watch this craziness happen 24 hours a day like this. We watch this 24 hours a day. That's it. The charts we use to analyze, and then after that, we watch the ticker boards. We don't watch charts all day.
This question came up again, and I know I promised it was the last question, but this is the last question.
No problem.
Rita and a few other people wanted to know how you go about finding the best matching moving average.
So, okay, let's take a look. How would we find the best moving average? Let's go to a chart that will actually have a moving average on it. So we'll call anything. I mean, I'm sure ES will. We'll just go with ES. So what I like is to find an average that stays out of the market's way. So like this would be too far out of the way, right? But let's see let's say the 70, just to throw something out there, just to get us started. What's the 70 bar average doing? All right, well, that's something that's not really too involved with the market, right? So it's something that I'd prefer to use over, and I'm not saying use the 70, I'm showing you how to fish for an average. I'd rather use an average that barely hits the market, but when it does, it's meaningful over this, which is always in the market's way. It's always all over the market. In fact, let's go to something like what trades often crude. That's not crude, but we'll take it because it's a chart, and that's all we really need anyway. It's not enough data. Little C1. So lots of data on crude. What I like to do is just keep testing an average until I find one like the 200 that stays really smooth. I think the 50 is probably another, but I'll show you what I'll do until we get one that looks smooth. So let's go with the street loves 200. We know they love 52 and whatever reason, so we'll try that. So here's one that I would say you would like this because you see how it hits here? It's meaningful. It's meaningful here. It's meaningful wherever it gets ran into, but at the same time, it's not in the market's way. It's almost never part of the market unless something is about to happen. So that looks like a smart average compared to something, of course, that would be just running over it too many times. You know, something like this just runs over it too many times. I don't know what signal I should take, shouldn't take. So stick with the further away averages that sort of hover on the outside of the markets that don't cut through too often. And I think you'll find much more reliable averages.
All right. Thank you very much, Oscar. Livewithoscar.com, everybody.
That is it. Livewithoscar.com. I'll try to throw it up there before we walk out. That should be this, livewithoscar.com. And it's really easy to get to, and it's really easy to join me once you do.
Or even better, sign up for the the free platinum trial at the link below. Thank you again, Oscar.
Yes, absolutely. And see Jeff to sign up for that trial or call me at the office. Jeff, thank you once again. I love doing these presentations. I will do this anytime you need me.
All right. Thank you, Oscar. We love having you. So thank you for coming.
My pleasure.
And thanks for the great info, as Ernie said. All right. Very cool. All right. Let's go ahead and do this. And let's do this. And I'll show my screen. All right. Very cool. We're running a little bit late today, but that's okay. Not too bad. One of the things I do want to talk about, if you did enjoy that, we did sit down and we recorded a class called Trend Lines and Technical Formations. And if you notice, Oscar really likes to look at trend lines and technical formations, and he does a really good job of organizing and locating and looking for moving averages. And so we sat down and actually recorded a master class with him, and it's available to you. So we called it the Trend Lines and Technical Formations, and he covers how to identify where trend lines should go, support and resistance, different technical formations. It was a 3-hour class we recorded on a Saturday, and it was a really good 3 hours with Oscar. So normally what we're going to do is we do a price of $4.99 for that. That's our normal price. You can get it as a conference special here at the conference for $349, $150 off. If you want to have instant access to that class, give us a call at 800-882-3040. You can visit us at metastock.com/saleschat, and you can also sign up for it at metastock.com/conf-promo. So you should, that was a really, really good class. You should definitely sign up for it. I want to throw out a real quick thanks to the sponsors, AAII, TASK, CMT. AAII has been a brand new sponsor of MetaStock, but they've been a nonprofit since 1978. They focus on newsletters, conferences. They do a really good conference every other year. Courses, all kinds of things. You can find out more about AAII at aai.com. And I was able to say that without stumbling. For some reason, my mouth has a hard time saying AAII real quick. So I'm getting better though. Anyway, and a thank you to CMT as well. Before we turn it over to our last speaker, who you're also going to love, we are going to give one more away. We're going to give away another prize. So if you would, in the chat, whether you're watching in YouTube right now or go to webinar, give me a number. Give me a number between 1 and 10,689, and we're going to give away a valuable prize. So hurry up, go ahead and do that. While you're picking out a number, I do want to remind you we're MetaStock. You're probably, in case you forgot, but we've been rated #1 in our price category for 30 years in a row. We're offering an extended trial on MetaStock where you can buy 1 month and get the second and third month for free. You can do that at metastock.com/promo, metastock.com/saleschat. You can give us a call, 800-882-3040. So Sammy was the first one. Oh, actually, no, Marissa was the first one. Ernie says, thanks for the great info. Have a great day. Let's see. Marissa gave us the first number, and she's going to reward somebody for signing up just recently because her number is 10,603. So let's go ahead and find who that is. And then I will associate a prize with that and tell you all about that. 10,603, Paul E. With a Gmail address in Israel. So if your name's Paul, your last name starts with an E, you're in Israel, you won a prize. What did you win? Let me find out. All right, let's go over here to my prize list. And the one I'm going to give out for this one, this is a really good prize. Every week, Jake Bernstein came in and he talked yesterday, great technician, as we've had so many great speakers. But he basically does a weekly market video report that you can subscribe to. It's a $495 value. He gives specific technical market commentary using his setup, timing, and triggers methodologies. And he covers all futures markets, stock markets, cryptos, and it's a $495 value. So you just won. Congratulations on that. It's a great prize. And then finally, last and certainly not least, one of my favorite presenters is coming in. If you have that pad and paper that we talked about between the second and the Oscar, keep it handy. One of the things I love about Oscar, I love Oscar immensely. One of the things I love about Anne-Marie, though, is we do a lot of like market recaps with her. We have her in the webinar for a lot. She's given me some great picks. She likes to talk about stocks. But one of the things I find really impressive is somebody will bring up a stock symbol in the chat that I've never heard of. Literally never heard of it, know nothing about the company. She's like, oh yeah, that company, they just posted earnings. Here's kind of like what's going on. And she really, really eats, breathes, and knows the market inside and out. She's very, very smart. Great technician. So with Anne-Marie, let's go ahead and get you started, okay?
Hi, everyone.
Hey, there you are.
Jeff, and it's gonna be okay if you called me Oscar. I think it's a bit compliment.
No, I just think there's a lot of things I like about Oscar too. So, but you, no, I'm serious.
And then you've been working all day.
Oh, wait, this is like hour 30.
Oh my God.
But not in a row over 3 days. But you know,
Still,
we're having a good time. It's been so good. Like the audience is great. All of the we're learning a lot.
I've been here for the last couple of guests, just listening and definitely learning. And so thanks so much for having me.
I know we're starting late, about 20 minutes late actually, but go ahead. You're bringing us home. You're the last speaker, so take your time. Enjoy yourself.
I'll be quick and run through it. You can't see my screen, correct?
No, we can see it. Those are some beautiful charts.
Great. Thank you so much. I love looking at my charts because they are so pretty and they actually do a great thing. But today, what I wanted to really talk to folks about is what we're seeing in the intraday market and how you can look for these new patterns that are developing. Now, before I came in and I listened to Oscar, I have to say I'm not nearly as bullish as he is about what's going on in the market. And after listening to him, I have to say I'm doing a little reevaluation. But what I do see is a lot of increased volatility. And many of us come in here and we see these really great technicians that we've had over and over again over all the days that MetaStock has for us. But when it comes down to understanding flow and motion and execution, one of the things that becomes really important as a trader when we look at things, we go, well, is it really holding that moving average, or is it really recaptured that moving average? When we're looking at charts in a static environment, it's much easier to say, oh, obviously that's where it turned over. But in the real time, our brain is not filling in. It's not filling in the future like we can see it here, right? But here's a pattern that I'm noticing, and I'm going to show you across a lot of different charts. And I have this on a 20-minute, and of course, this is target rich trades. And we're looking at these formations, and what we are seeing into big numbers. The CPI was today, and of course, it's just a number that people are trading off of. But what happens is, let's say you're looking at a chart and you go, oh, okay, so-and-so said that this was the breakout level. So if it gets above here, it's a long. And so many times we see this sort of thing and we go, oh, wait, this is my buy zone. And we think the breakout level takes us, I mean, it's above the moving average. And we're thinking, yes, that's what it's going to do. But very importantly, I'm going to show you, I have a stack of charts for you to look at. And all of them with the exception of a few, are showing these kinds of patterns. They come in and they trap the longs, people going long, and then they stop them out, and they have the support ledges down here, and they trap the shorts because the shorts go, all right, this is breaking down. We're going back to X, Y, and Z. And so it comes in and it shreds everybody intraday. Now, maybe some of us aren't really primarily intraday traders, and so this might not apply to you. But at the end of the day, when you look at a chart and you say, hey, that's a breakout, there's always a specific step, always a very specific motion when a chart is changing direction and it breaks through an area of resistance. And so it always looks like this. And let me try and find, here's one, okay? So it breaks down again, and notice they did the same thing to the intraday traders. Intraday traders are getting shredded right now because they're seeing these breakdowns and breakouts, and they're buying them or selling them, and then the market's completely reversing on them. And this happens a lot because there's not a ton of institutional buying going on right now. And the reason for that is, you know, maybe threefold. We won't go into why, but there simply is not. And so what happened a couple of days ago is that it broke through this channel. And when it breaks through the channel, it collapses into a range, and people go, oh, here's my short. And notice even the trigger says, here's the sell zone. But what the sell zone tells you is something super specific. Anytime you break out of a channel, and listen, markets move from areas of compression to expansion and compression to expansion. That's all they do over and over and over again. Whether you're looking at it on a monthly chart, a weekly chart, a daily chart, a 5-minute chart, they're all going to do that. But here's what happens when something's making a turn. First thing that happens is it heads lower, but then closes off the low. So you're going to have a wick. And then it bounces past the last area of resistance. And that's going to be the difference between one candle and the candle beside it. So it's going to break through resistance. It's going to pull back, and it's going to hold the low. And so when something does this, it's simple. Hits a low, stops heading lower, doesn't close on the low. The next candlestick closes above the first line of resistance, breaks above it, and then you pull back and you hold the floor. So this area becomes the buy zone, okay? So you'll notice that this turns around because it's a very tight time frame. It's got a short setup way up here that gives us the breakdown formation. And so when we go down into this area and it gives us that sell zone, we know that once we breach it, it's time to cover, right? We can take part of the profit or all of it, depending on what it is we're looking at. But anytime we have the low that breaks the resistance, comes up, pulls up, gives us a higher low, it's going to open up a range to the top. And what it's going to do when it reaches these areas, right? And somebody goes, it's a breakout. They're saying that because traders here that were sitting over here a few days ago, they are saying to themselves, oh, I'm still in a range. I'm going to short that. And traders coming up, moving very quickly, are still in a buy formation, and it starts hitting all these guys who decide they're going to go short, but it keeps moving up. And everybody that's short has to turn around and run for cover. And while they're running for cover, the longs, the traders who want to go long, that want to step on the necks of the sellers, because intraday traders are savage. I'm just telling you, they're savage creatures. And so once it gets up into this space, they're going to try and push that short, but it falls apart right here and it immediately begins to move down. Notice this. Look at what happens. Same thing. Reaches high, but closes below that area. The next candle breaks the support, which is sitting right here, comes all the way down. Look at what happens. But do you see this wick? It comes all the way back up here and gives us the lower high that gives us the real entry zone. This is the real power of this trading software that we built here at MetaStock. William is a genius. He's just a genius being able to take my ideas and turn them into signals, but it actually tells us, hey, listen, 1, 2, 3, and then you're going to get in the trade short and it comes all the way down. But this formation here, you can see it in a lot of different places. Traders are getting shoved out of the way. People think that they're buys and they're really sells. So in my estimation, if we take a look at, say, what we're looking at on the monthly, and this is not the continuous chart, this is just the June contract. So it's only going to show us a few candlesticks. What I really want to share with you is the following. This market is definitively making higher lows. We've been sitting in a buy setup since November. But what's happening to us, if we stayed long, we really are not any more than just flat, essentially. We might be a little bit up if we got it right here on this pullback, right? Again, notice, heads lower, but doesn't close lower, bounces above resistance, pulls back into a higher low. There's our buy zone. There's the arrow. So it shows us as long, but every time we've been here, folks, and that's one, I'll start over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're looking at 11 months out of the last 12, 13, 14, 15 months where we've come up and tested this level and we're not able to go. So if we break out of here, it is going to turn a lot of people into buyers, but I believe there needs to be a catalyst for that. And I really am not sure what that catalyst could be for us to move upside, because from a macro perspective, what I'm seeing is a lot of cross currents, particularly about what big money thinks about from a recession perspective. Now, we know a lot of times we go, hey, listen, the bond guys are the smartest guys in the room. And really what we've seen is the bond guys have been wrong, calling for, look at these bounces. They've been calling for reversal for a long time. And just as Oscar said, we've got a different regime, as it were, and we really are holding in this space. But as we sit, to me, this still looks like a pennant, right? And of course, it's what makes a market, right? What makes a market? A bunch of people thinking different things about what's happening. You've got to have somebody on the other side of that trade. And so here I'm seeing definitely a compression, no doubt about it. But if this is my flagpole and this is the pennant, then the pennant normally breaks in the direction of the pole. And so although the bond market is definitely saying, hey, listen, you can hold these up here, I'm not really quite sure we're going to do anything more than sit in a wide range. And so I'd be super careful about taking a long-term position without holding things and having a stop in play. So let me show you something that somebody said something about eggs. California, Maine is one of the largest egg growers in the country, and they have started pulling back. They were all the way up here in, I don't know what month that is. It's December, and they really have started pulling back, but they're a very well-run company. So if I was looking at California, Maine right now, and I was thinking about putting on a position, which in full disclosure I am, what I would like to see is the same formation that we just talked about. Have we stopped heading lower? Yes. Have we bounced above resistance? Well, this is a weekly chart. So far, this is the top. So this chart needs to turn all the way around by Friday and close above here for me to say, hey, I think this chart's got some upside pressure. If you wanted to look at it from a daily formation, you could, if you were saying, hey, I want to get in earlier, right? We can look at the daily, but we still need to see that 1, 2, 3 pattern. And what's happening is that this area here that opened up the brand new sell zone, notice the short setup is way up here. So this had a nasty breakdown. And so it's got to get above this zone for me to say, hey, I think eggs are going to be just fine. Certainly, I've seen them come down a little bit, but not much. I think eggs are still tremendously expensive in the store. But California, Maine, remember, the market is a forward pricing mechanism. And so it's going to show things 6 to 9 months ahead of what you might be looking at. And so I do suspect that Cal Maine comes down into maybe 44, 45, and that might end up looking like a really nice place to reinitiate in that environment. What else did I want to show you? Oh, regional banks. So again, I want to show you, this is an intraday formation, right? This is all kinds of terrible stuff happening right here. Great big volume coming in, trying to catch the bottom. So there are a lot of bottom pickers that are thinking to themselves, hey, we're in good shape. We think that the regional banks are going to settle out, things are going to be fine, and we're going to head back to normal because there are a lot of good banks that have been babies that have been thrown out with the bathwater. That's true, but notice how these buy setups are breaking down. We've got still negative intraday motion, and let's go to a weekly here from this position. We've got negative intraday motion, negative weekly motion, and you can see what the chart is doing every single time is bouncing and then selling off. And the reason for this is that there are trapped buyers, people who were maybe here and said, all right, we're out of the woods, held it for all the way here, and then all of a sudden started watching it come back down. And now they're thinking to themselves, hey, if this doesn't hold here, I'm getting out. So this is superbly and supremely important right now for them to hold this area. But again, what do we want to see? We want to see a failure to close lower, a bounce into resistance, which it hasn't done yet. It keeps bouncing and it can't get to resistance and it sells off some more. And then coming back and holding the higher low. So you want to watch for this area to ultimately hold the low and to see a little rotation there. But there are a lot of really good stocks that are sitting inside of the regional bank space that are eventually going to catch their stride and move upward in the motion. So let's take a look at Celsius. Celsius had a monster move today. It had a monster move. And so here are, look at how this thing played out today. lot of fading volume into the high, right? This is another thing that traders, if you're a little bit newer, what you'll notice is that as price continues upward, if volume does not follow, price will collapse. But you also know that price is going to collapse because it does the following. One, it stops heading higher. Two, it breaks frontline support, which it would be this candlestick right down here. And then it bounces and sells off. And so that rotation there is great. Notice this. Here, it fails to head higher. It pulls back, comes all the way to support, but then it recaptures the high. So you could think to yourself, all right, if I've got an upward moving average and I have a long and it pulls back into my support zone, as long as it holds my floor here, I'm going to be able to take it higher. The biggest thing to follow, folks, is how price behaves. That's going to be your best bet. It's going to be better to me than any moving average that you look at because it never changes. The patterns are always the same. It's the mathematical premise of inflection. So I'm going to, some of you know that I'm a math major, and that's funny. I've been out of college for 30-something years. I just called myself a math major. What is that? So what I want to share with you is when anything changes direction, everything has slope, either positive slope or negative slope. It's just got slope. But for it to move from one slope to the next, it has to go through the number 0. And when it goes through the number 0, it means there's a change in behavior. And price does that. It shows us every single way that changes occur. So let's assume that rates are solid. We had a CPI number that's great today. Tomorrow morning, we have the PPI. We're likely to see this same kind of behavior, right? If they're contrary to each other, we probably won't break out. But if they say the same, we're going to have a lot of short covering. That's folks who have been sitting short the market and decide that they're sitting on the wrong side of the trade. And that is going to make a lot of things change. So one of the big movers has been gold. And so this is the GLD. And gold has been on an absolute tear. I mean, an absolute tear. But look at what it's coming into. So here's a resistance zone. All right, so this resistance zone, the price action event here is okay, I'm blind. What is that? 192, okay? So 192 is where this is running into. So look at what's happening as it comes into that number. See how it pushes up and then sellers push it back down. That's the only reason price moves down, folks, because the selling pressure is more than the buying pressure. That's the only reason. And so we had this, this is called an abandoned baby. And because it's just way out there without anything and a gap in between everything. And so that's usually a fairly bearish sign once something does that. But notice, it's always the same. Fails to close higher, comes down, breaks support, that's this area around here, bounces, and fails to close higher. So as soon as you see it bounce and begin to fade, that's where you can open your short. And you know your stop is sitting right above this second lower high. So you've got your risk right there, and then the chart will take you to where it's going. But every single time the price action is doing this to us, and we're seeing wick after wick after wick, people are nervous about holding on to gold just a little bit more than this. So if indeed we don't move any higher, and the debt ceiling gets raised, the dollar, if we don't have interest rates move, if they hold steady, but the debt ceiling raises, that's still going to affect the strength of the dollar. And that's going to push gold out of here. Now, who knows what's going to happen here? I imagine that all of this is kabuki theater, and they are absolutely going to raise the debt ceiling. It's just going to be political shenanigans. And whenever it does get moved, this chart is going to have an opportunity to break. But I want to warn you, because every single chart I'm looking at is doing this very same thing. It expands, makes people think, hey, everything's looking fabulous. They hop in, and then it immediately collapses. It really is something to watch. So you've got to look for that 1, 2, 3 pattern that holds the price action. Now, here is a place where it's trying to do a 1, 2, 3 pattern, right? Fails to close lower, bounces above resistance, pulls back, but then it holds, it breaks the low and then holds it. That's the same as a complete reversal formation here. As soon as the first trigger shows up, you look for that ledge to complete again, and you use these lower wicks as your risk. Finding your risk is really the most important thing. Finding your area to get into a chart is like real estate. And what I mean by that is the following. Location is key. Location is going to be the reason you end up making money on the trade. That's exactly the same in real estate. You could have an awesome house in a crummy neighborhood, and if you buy it on the cheap, there's a reason, okay? So find the regions that people are buying, watch the breaches, allow that risk to be defined in this area, and then you can run with the trade. Does anybody have any specific charts they want to look at, or any questions they want to talk about in terms of technique? Or I can go through, you know, the whole bunch of them here, right? This is the RTY. Interrupt me if you want to, Jeff, of course. This is the RTY. A lot of folks are thinking, hey, maybe the RTY is building a floor. And the RTY has all the small caps in it. So if the small caps start stabilizing, the market is going to be in good shape. And we just got a buy trigger out of this region. So notice what's happened. From a big perspective, we had closes above the low, breaches, it still hasn't gotten through this resistance zone. So this gives me a little pause, but I think something is building, and it could be giving us a balance area. So what a balance area means is a region where buyers and sellers are continually arguing about price. So let's assume that this is a balance area, and this is the RTY, it's the futures. So the floor is 1708, thereabouts. The ceiling is 1828. So that's 120 points. If this is a balance zone and this chart breaks out above 1820, it's going to go 120 points to the north. So that would be 1940. So let's see where 1940 is on this chart right here. Let's see, is 1940 right around here? Feels like it might be. What is that? 1908. Let's put it up here. 1934, 1940. So that's where they're saying this should go if it gets out of this balance. So it would go up in half spots. So first one would be 60 points high, and then it will chop around, come back and test, and then head higher. But that is really what we're looking at from that perspective. I think the RTY is very important to look at simply because the small caps are sitting in there. And if the small caps can stabilize we've got a better shot of market breadth because a lot of traders that know the markets are sitting around saying, hey, yes, the stocks look great, but we don't have a lot of stocks doing great. We only have about 30 of them doing great, and then everybody else is so-so. So this is the oil services complex. And so today I was on a Spaces where there was a hedge fund manager talking about how these hedge funds and institutional buyers are really starting to look at the oil complex to buy. One, because the ESG stigma is sort of disappearing a little bit. And two, you know, there are just so many millions of shares of Apple that somebody can actually hold. And so what we're seeing here is a real lift off the OIH. Again, is this a bear flag? Or is this a change in behavior? For me, you know, this is a 2-week chart. And so to me, it still looks really rangy. And so my suspicion is what we have to do is see a breach out of this area, and that region is 335, and a pullback into the zone that makes it come into the halfway spot of the range, right? And so halfway spot of the range looks like somewhere around here, maybe 209, right? So 209 to 335, you know, we're looking at about 126 points, something like that. So that halfway point right here, if it holds this area right here, it's going to be a big deal. Somebody just said something about Warren Buffett dumping a lot of stocks. He thinks we're going to have a market that's essentially sideways to down for the next 5 years, right? So the question is, where is value? And it's been very bad form to do anything like buying the oil sector. And now that the ESG stigma is sort of lifting a little, people are starting to come back into oil services. So you can start digging around there. Occidental Petroleum reported yesterday, or was it today? I cannot remember. Check one of my other charts here. And yeah, they had a pretty tough time, but we know that Buffett owns a lot of Occidental Petroleum, so I'd look for a bottoming formation there. All right, so I'm going to stop because one, it's late, and two, you know, maybe Jeff or Kelly have other questions. They might want to talk about the broad market. I think the last time we were together, we were talking about what's going on with the banks. You know, we're probably going to see another shoe to drop here and there, but I love what Oscar said about the flight to funds. That's already happening. I mean, I just did that. I just took a bunch of cash and locked it in for 5% for some 1 year. So, you know, there's, I mean, there's already flight because that's why volume is going down in the market. We've got some of the lowest volume readings we've had in years.
We do have some symbols that are coming in chat, if you don't mind.
Awesome.
Kobe says, let's take a look at TSN, Tyson Foods.
All right. Luckily, they haven't had any more factories burn up lately.
That's always a good thing.
Okay, so it's just plain TSN?
Yes, that's what he said.
All right, okay, let's do it. I haven't looked at the Tyson Food chart in quite some time. Where are you, friend? Oh, there we go.
Yep, it is just confirmed. TSN is a symbol.
Correct. Lovely. Lovely. Oh, my. Okay, so obviously, did they report today? that looks pretty awful. So let's, where is my Refinitiv? Obviously these are news-based candles, right? This is 4 days of news. And when we look at something like this, what we realize is the following. Traders are saying it out no matter what. They're like, I'm just selling later. So let's go to a monthly chart and see what the main thing is. And then I'm going to look up TSN on my Refinitiv News platform here and see if we can get that. Oh, look at that. Okay, so look at what's happening right here. This is very interesting. So take a peek. In 2014, this chart began a channel pattern that lasted, holy smokes, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 23 months. Holy cow. 23 months in a sideways patch. 2 years. And look at how the breakout happens. See, this is my thought about watching gold, because if something stays in a very compressed pattern for a long time, it will explode in one direction or another. Absolutely explode. So this is what we see. Oh, obviously I've done this before because I've got some markups here for some Tyro levels. All right, so here's what's happened. It's going all the way back down to 2014 levels. So remember, the market's a forward pricing mechanism. Whatever news they got was obviously horrific.
It looks like they missed earnings.
Yeah.
By a lot.
Do they have guidance that, wow, that's
guidance was also reduced for the year, adding to the pain as the management acknowledges industry struggles.
Okay. All right.
We're helping handle the market members of Crude Value Insights. Oh, okay. That's just an article, an advertisement. But yeah, it looks like they missed earnings by quite a bit, and reduced by guidance as well. So,
all right. So what we have to think about is, you know, a lot of times when we look at this, we've been holding Tyson for a long time, and then we go, holy cow, what just happened? So the thing that I would say here is the following. This is not a good pattern. They've lost confidence in the stock, but the very last time it was here, it came down into the 2014 level, and it immediately began to reverse. So what do we look for? We will go to the daily chart, and we're going to look for the pattern that shows the following. It's going to show first a failure to close lower. See, that's not happening yet. Everything here says sell as soon as the gates open. Okay, so there's a lot of broken confidence here. And the only people who are flat, they haven't even made any money, they're flat to have just a little bit, are the ones who bought the breakout in 2014. So that's, holy cow, that's 9 years ago, 9 years down the tubes. And so they are nervous. So let it flush. If you believe in Tyson, at some juncture, the buyers are going to come in. Now, here's the thing. Is Tyson going to go out of business? I can't imagine. I mean, that's like in every chicken thing and ever, right? And they do all kinds of natural stuff. I don't know what's going on. But if you want to stay in here, I'd sell some calls against whatever you've got. If it were me and I was holding this, I would be nervous because it's got a big giant drop. But here's what we also know. The last time we were here, it only fell $4 more and it didn't stay there. Only. That's almost 10%. That's almost 10%. So that's a lot, but you want to watch for the price action to hold. And it might hold in something like a double bottom, looking like this. But here's what's going to happen. There are people that came in on the 8th and they said, okay, that's fallen far enough. I'm going to buy here. And they're wrong. And then the next day they came in, they said, you know, it's okay. I'm going to add here. And it sold off again. And then today they did the same thing, because the hopefuls are always going to say, oh, all right, well, we gapped up a little bit. That's it. I'm going to buy here. And they are not being rewarded. So what do we know? Don't buy the open and don't buy the close of this particular chart at this particular time. It's got to bounce off the bottom, pull back, and then hold the bottom. That's what's got to happen before the price has any action to the top. Notice again, sideways, and then expansion to the downside, sideways, and then expansion to the upside. All price does in every single chart is move from compression to expansion, to another areas of compression to expansion. And so when you see a chart break through an area that it's been compressing against, unless it immediately recovers, it's going to follow in that trend. So I'd stay away from that until it starts showing a bottom. What else you got?
I like one of the things you said last time that I thought was really, really insightful, was you said stock chart, or cheap stocks get cheaper. In other words, don't catch the knives. Most wants to either look at Tesla or Netflix. I'll let you choose.
Ooh, I haven't looked at Tesla in a while, so let's look at Tesla. Okay, I love it. I'm really starting to get, it's taken me so long because I have such a slow learning curve. I just have finally gotten my feet where I absolutely love playing in my charts inside of the MetaStock platform so much. I just enjoy it a ton. It's really great. Okay, so Tesla is Tesla's a cult stock. I'm not saying that in a bad way. People just love Tesla, or they don't love Tesla. And so did you see the news on Ford, how much money they're losing for every EV that they put out?
The Ford just, yeah.
$66,000 they lose on every EV they put out. Tesla is miles ahead in terms of profit. And so now we have to look at this and say, has this chart found itself a floor? And so here we have a flag pattern, and this is the pole, right? So here's the pole, and here's the flag. So what do we want to see? This is so beautiful. This is working out perfectly. Take a look. What just happened? We had a low. It stopped going lower. It broke through resistance, pulled back, gave us a higher low, and yesterday we had a buy zone on it. So the question is the following. Sitting in this spot, is this chart a good buy into the top of the channel and potentially out? And I would say yes, because the risk is fairly low. And so for those of us that like options, which I love options, I would say, hey, I would sell a put spread, right? And I would sell a put spread with a floor at about 150. So it would give me lots of room, and I would give it the entire summer to do it. If you want to buy the stock itself, it still needs to give itself a little bit of rotation, because remember this, somebody came up here, see the compression? 4 days in a row, and then expansion to the downside, and then compression, and now it's moving back up. Who's up here? I'll tell you who's up here. There are a bunch of buyers that said, this is holding, look at that. Low, higher high, broke through all my resistance, pull back, give me a higher low, holds it for 3 days, I'm buying it. That's what somebody's going to do. They're going to look at that and go, oh, I'm buying it. And then the floor falls out of it. I can guarantee you, we've got sellers at 179. So if you pull back and you get this stock right around here, let's say it comes into 160 for you, and you have a stop that's only $2 or $3 wide, when it gets to 179, expect sellers to come in because they are trapped buyers who are now nervous that said, holy cow, I bought this at 180 and it went to 150. I'm scared. And so that's really what I would look at. And then if it holds the zone, take half your profit. If it pulls back and it holds the same buy area at around that 160 zone and bounces again, you can add right back to your position and watch it go up, because it is not going to go up in a straight line in this formation. Notice how different this formation is. Here, we've got slope, we've got motion. Every single one is a higher high. All the candles behind it are here. Chart is moving straight up every day. Higher low, higher high, higher low, higher high. Here, not so. Close low, close high, close low, close low. Even after it gaps, it closes low. Close high, close low. So this is not the same kind of formation as here. It is not going to run away from you. So that's what I would do if I were trading this.
All right. Do you have time for another one?
Sure.
SRCL. I bet that's going to be
yes, yeah. You know, my husband and I were just talking about cruising just a minute ago.
hey, we just paid for one. No, SRCL though. Stericycle.
SRCL?
S is in Sam.
S.
R is radio.
L.
Dotto.
Touchstone large cap. Is that a SPAC?
Let's see. Let's make sure you have the same symbol as I do. S, Sam, R, CL. So like Royal Caribbean, but with an S to start.
Okay. Sorry.
You're okay.
Let's try that again. S as in Sierra. R as in radio.
C is in Charlie.
Charlie.
L is in Lima.
Lima.
Dotto.
.o. Okay.
Should bring up Stericycle.
Stericycle.
But the cruise idea sounds awesome.
I know. I think people are buying cruises hand over fist.
Oh.
Is what I heard, apparently. All right, so let's have a peek at this. This obviously is in a very wide channel, a very, very wide channel. Let's take a look at a monthly chart. I like to see what it's been doing over the long haul. Oh, okay, this looks good. So this is at a do or die spot, which is great because you immediately know if you're wrong or if you're right. And so here's what I mean by that. Several months ago, it had the setup on a big, broad formation. It stopped heading lower, bounced up into resistance, pulled back, made a higher low. And so this is the area that the chart starts getting very exciting. Notice wide channel event. So people rush into this stock, buy it up for a few months and sell it off. And they rush in and then they sell it off. And so this is a very interesting chart. There's something going on here. Something going on. I'm gonna have to look this up. Okay, so here's what's happening. It's holding this area and now it's in a big fight zone, right? Buyers coming in, trying to push it up, breaking resistance, right? 2 candlesticks to the left, cup candlesticks to the left, holds the low Here's where the buy zone comes up. It's reading the same thing. Fails to close lower, bounces into resistance, takes it up, pulls back, gives us the higher low. Here's the buy. It moves higher again, but then sells off, and then it's coming back and it's holding this zone. So my supposition is the following. As long as it does not lose 40, this chart is a fair buy, but you're going to have to get in and get out in tranches. And by that, I mean, you want to pick cycles where you ride it up for a couple of months, take some profit, and then wait for a pullback, right? This is bothersome to me because it looks very organized. Look, buy, 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 2 months of selling, 1 big month of buying, 3 months of selling, 3 months of buying, 6 months of selling, sideways action, compression, expansion to the downside, and now it's really in a battle zone between the buyers and the sellers. So ultimately, it would be very nice if it moves above 55 and stays there. But if you're trying to buy this double bottom, which it looks pretty good, really, it's only got about an 8% stop loss in that space. So you can always size up as things break, but you want to take profit here and then let it come back. And so you can buy it again so that you're always keeping the same amount of risk. Now, a lot of times traders go, but what if it breaks out? Listen, if it breaks out, particularly because of what kind of pattern this is, it's going to come back and test. It's going to give you a wick that'll come back and test. And if you don't break higher, if you get up over this 55 and then the chart stops moving and you end up getting into 60 and you don't see it pressing higher, take profit. Take profit. This is a chart you're going to have to manage really well here because it looks fairly unhealthy to me. Great big selling amounts. It almost looks like it's manipulated. A lot of buying right here, but then it's kind of flattened out. Nobody really participating, and it looks like there's a lot of price action manipulation here. I've not seen a chart look like this in a while. So yeah, I'd be careful, but definitely it's in a great buy spot.
All right. Here's one more. I think we have time for one.
Absolutely.
This one looks interesting. I've actually already pulled it up over here, and I'm interested to hear your thoughts on it. Steve Bishop would like to look at ON.K.
ON?
.K.
Okay. So this is the very famous shoe, correct? I think this is the shoe brand. Is it a shoe company? I think it is.
I can find out for you.
Yeah, I think it's a shoe company. So this is Roger Federer's favorite shoe, I think. Am I right? I think. So this one looks good. It's in a region that I.
You are correct.
Yeah, this chart has been on the news quite a bit, and it looks really good. If I were waiting for data, if I were going to engage here, I would suspect that it's got a little bit of topping action. So what does that mean? Whenever we test a new high, look what's happening with this chart. We test a new high, it backs off. We test another new high, backs off. So there are people up here that have supply. So the question is why? Why should supply be sitting here? And so let's look at this. All right, so we look to the left. We can see December 2021. This is a group of buyers that were like, woohoo, here we go. And then look at what happens, fails to hold higher, breaks the support, bounces, gives us a lower high. That's a complete short formation. And so what they're doing here is they've either held on through this big thing and said, oh gosh, I can't take it anymore, I'm getting out, I'm flat. Or they're testing the waters for moving up above. So the longer it holds the floor, and by that I mean this, right? It's for our system, it triggered a buy zone in the beginning of April, right? So after this candlestick comes up, the very next candle we get in, we take the buy. And so this has been in a buy zone since here. And so it's still not told us that there's a target to take it, right? That would be like that would be the red diamond that would show up. It would say resistance. But what I've noticed is it gets to a new high, collapses, gets to a new high, collapses. But it keeps collapsing to a higher low. So the nice thing to do would be, all right, let's say I'm going to get into this trade, or I have some and I want to add. What am I going to do? So my suspicion is that based on this rotation, it's now sitting in a brand new range. And so that range is approximately 31 to 35. That's $4. If it breaks through this balance area, it should go up another $4. And so that'll take us to maybe 40, 39. That's the top of this candlestick right over here. And that is 39, almost 39 bucks. So that would be your first target range that you kind of look at. But because there's a bunch of sellers, they're possible sellers because they've been buyers holding the bag for 2 years. They get up here and they go, ooh, I'm going to get out. They're only going to get back in if it bounces, pulls back, and then holds a higher low. So if it breaks out, expect that it could run up the flagpole, but not by much, because more people are going to be selling. And when it comes back and holds this area, you're going to have yourself a really nice trade that runs into 38, 39. Does this chart have, supreme upside? I don't know. It's a shoe. And yes, we could talk about Air Jordans carrying the flagship forever and ever, but those times are different. It's not the same as the make of the time of Air Jordan, where literally there was nothing else. Now there's build your own shoe on the internet, right? That's how Nike's making it right now. And so I would say maybe limited upside, but a company, here's the thing. The question you might ask yourself is, when do I get out of this? And if this breaks 30 again, I would say watch carefully for it to recapture this floor, right? This floor is like 28. If it loses 28, I don't think the chart's going to do much of anything but move sideways, which is really what I think the whole market is going to do for the next few years.
Okay, another question. Good job. This one's the most important question.
All right.
How can people find out about Anne-Marie?
Well, thank you very much. What I would love to say is that you can find me on Twitter. You can find me on YouTube. You can find me on the Place Your Trades network. That's placeyourtrades.com. I do a video every Tuesday at 11 o'clock called The Daily Edge. And I talk about how folks are managing things in the market, what to look for in terms of price patterns, what kinds of technicals are floating around. And yeah, you could find me at thetradingbook.com. I'm easy to find. I love working with traders. I love charts. I love the stock market. I know that you can tell, but I do. I love it. And I am such a big fan of Jeff and Kelly and this entire crew at MetaStock, who are so hardworking and so good at what they do. And I don't know if you guys know this, but this is a place where people start working and they never leave there. I don't know. It's the Kool-Aid at the water fountain or whatever. It's the drink the MetaStock Kool-Aid, but they've got a wonderful staff and support. And I love the software. I love the team, and I'm honored to be part of any of these that I get to be involved in. Thank you so much for having me, guys.
You bet. Thank you. And one last comment. Thanks for the superb analysis. Anne-Marie is awesome. Really enjoyed this segment. That wasn't for me, but I would say the same thing. Stephen said that. So thank you for coming in today.
Thank you very much. Thank you very much.
Thank you, Steve. I'm glad you enjoyed it. All right. All right. Thank you, Anne-Marie. Thanks again for joining us. I'm going to talk a little bit about your add-on.
Sure.
But thanks again. I always love having you in here.
It's a rock star add-on, even if I do say so myself.
You're not biased, are you? Very cool. Thanks again, Anne-Marie.
My pleasure.
Cool. All right. So let's do that. And you should be able to see a box. You might have noticed all the annotations and kind of the stuff that was put together. And it is. I just want to kind of, I'll go ahead and spend some, actually I have a chart open. This is actually the Onan chart. And let's just zoom in a little bit with the MetaStock engine. And I just kind of want to point out, kind of like, because you kind of need a bit of a closer view. But you'll notice right here, we had a little bit of a buy zone. There's a buy setup here. A notification to start taking profit. You can see where support and resistance starts to form on the chart. You can see the awesome commentary over as well. So right here, you can see that this is the Onan brand we're looking at. It's right now bullish and bullish. The most recent trade was a buy zone trade, a trend trade, level of interest, proper support zone. This is a very, very detailed add-on. In fact, we just went in and retweaked it and reworked it. And it does a really, really good job. Over down here, you'll have a bit of a checklist. What is the slope of the chart you're looking at? You can do scanning. It's a really, really cool add-on. Gives you real-time signals, setup, triggers, alerts, detailed commentary breakdowns, scanning. And there's a tester in there. You can actually go in and test it against different stocks to see how well it performs. It also does include like a comprehensive user manual. So with this one, it is a one-time cost. We normally charge $4.99 for it. Here at the event is $3.49. We give you, if you don't have a copy of MetaStock, we'll give you a free trial copy of it with it. We'll help you install everything. We'll give you unlimited MetaStock support, and we'll give you a 30-day money-back guarantee on it as well. So if you're interested in doing that, get in. You can call us at 800-882-3040. You can visit us at metastock.com/saleschat, or you can go to metastock.com/conf-promo. So she does such a good job. It's such a great add-on. Give it a go. It has a 30-day money-back guarantee. And we have talked about quite a few really good products here. One of the things I've really, really enjoyed over the years is being able to work with a lot of the technicians that we're featuring and really talk to them about the trading methods and really understand them. And in order to kind of help code something, you really, really got to understand it. It's been great. So I feel lucky in that respect. A last thank you to Stocks and Commodities for sponsoring today's events. The AAII, so good to work with those guys. The CMT organization, the CMT Association. I do want to remind you, you can take advantage of all of the deals that we've offered at the show at metastock.com/conf-promo, metastock.com, or metastock.com/saleschat. Let's talk a little bit about tomorrow. We have another great lineup tomorrow. Let's go ahead and kind of go up to the top of this page. We're going to start with Buff Tormeyer. Buff is a really smart technician, talks about volume analysis and using volumes in the market. This is Saturday. All right, let's go to Thursday. We're going to start with Tushar Shandy tomorrow. Tushar Shandy is a prolific system designer. And we'll talk a little bit more about that tomorrow. We're going to have the trader check Marina Villatero, and I'm sure I said that right. We got Peter Dalal. He's going to come in and talk about Magic Trader. Daniel Sinig is going to be in here. John Thomas. Always get an interesting take from John. Don't miss that one. Melissa Armos coming in, Fausto Puglisi, Dan Sugar. So we've got another great lineup tomorrow. Again, just to kind of recap kind of the offers that we had for today, but quite a few of them. I actually, if you want to take advantage of any of them, you can get in touch with us at metastock.com/comp promo. They're all available there. You can also give us a call at 800-882-3040. In terms of kind of the offers, John Osborn talked about value charts, the patented award-winning software that helped that hedge fund turn around. Silas Peters talked about his 3S code. Kelly talked about finding MetaStock strategy, so that was really good too. Ed Downs talked about Fulgent AI, the artificial intelligence product. Rick Sadler talked about hit and run candles. So we talked about quite a few different methodologies. Oscar had his training course, and of course Anne Marie and the target risk trade. So if there's anything that you think that's going to be helpful for you, go up to metastock.com/comp promo. Visit us online at metastock.com/sales chat, or give us a call at 800-882-3040. Want to say thanks for coming. Hope to see you again tomorrow. I hope you learned something. And again, we'll see you tomorrow.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe.
Greg Lewis, MetaStock
and
Software.
keep on watching.
As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes.